spend. We know there's this divergence, and it's going to be focused on the high-income consumer. Will they continue to support the economy with their spending? So we'll be paying a lot of attention to that. And really what the expectations are for profit margins, whether you're looking at EPS growth, revenue growth, or profit margins, those numbers are getting really high for 2026 and going into 2027. I think people are going to want to see, can they actually see those numbers come to fruition, or are those going to be pulled back some? So those will all be elements to watch in earnings.
And I'm so glad you highlighted CapEx, because when the AI build out first began, CapEx was something that was seen as almost a positive because it showed a company's commitment to the future. However, increasingly it's become something of a burden, something that stretches their balance sheet. What's the sentiment towards CapEx? Because if you don't have any ROI to show for immediately, is it going to be seen as a negative?
That's exactly right. You've got to be able to see that there's some kind of return that you're getting on the money that you're investing, especially if it's disrupting your balance sheet. And I think that's the issue people are going to watch. It's very much company specific, because you can look at something like Oracle, where they're having to go to the debt market. Their free cash flow is going to be drawn down significantly. That's a very different story than looking at someone like an Alphabet, where they're still going to have very strong free cash flow. Yes, they can go to the debt market, but that free cash flow number continues to be strong, so there's not as much concern when it comes to a company like that. It'll really be driving down into the balance sheet to see how is the CapEx going to affect cash flow going forward. What does that mean in terms of earnings? What does that mean in terms of dividends? If it's a dividend paying stock, those are all elements that will play into what CapEx looks like for each specific company. But as a whole, we know it's typically supportive of GDP and productivity. So people they'll be biased towards positivity as long as the balance sheets can handle it.
Victoria, you mentioned that midterm election years tend to be high growth years. What are you expecting from the administration to make sure they keep that growth continuing?
Yeah, I think we're going to see not just some stimulus coming for the consumer, but we'll see it for corporations as well. So we talked about CapEx, what that looks like. R&D, there's going to be benefits associated with R&D and building infrastructure here in the U.S., so that onshoring benefit. But consumers as well, there's a lot of tax advantages for consumers, not just no tax on tips, but you're looking at interest on car payments. You're looking at changes in regards to SALT taxes, in regards to the child deductions that you get. There's a lot of elements there that I think will be beneficial to the consumer as well, that will lift them up for at least probably the first half of the year. Those are some of the things that I think you'll see coming specifically from the administration. And there's always talk about something new, right? We're hearing talks about checks being given because of the tariffs that have come in and the elements that that are positive there. So all sorts of things that I think could boost consumers in the first quarter coming from the administration, and then add on just some of the things you have, like the World Cup coming, 250th birthday party for the nation, all of these things that will generate more activities here in the U.S. and generate more GDP.
I'm certainly looking forward to the World Cup, but when it comes to things like tax refunds, do you think consumers, because they know it's coming, do you think consumers are already out there spending that money right now in the holiday season?
They might be in anticipation of that, so it could be less of a fact. It kind of goes to that point that we're saying, where you come into the year with a lot of those growth elements already built in for your optimism for what you think is going to happen in the market. And when it comes to fruition, there's not much of an effect. That could be part of it. They could be spending that now. But it seems like lower income consumers really are holding on right now. You're not seeing savings rates go down tremendously, which is telling us that it's the high income consumer that's really spending. Low-income consumers are not dipping in to those savings just yet. And year over year, holiday spending for that cohort is actually negative. So I think they're holding back a little bit, waiting to see what happens. And a little bit of extra cash coming in next quarter could be a benefit for them.
Well, high-income consumers are spending in part because of the wealth effect. Anne-Marie has told us several times about how the S&P 500 closed at a record high for a 39th time on Wednesday. If there's a sudden market pullback, if we see those gains unravel, how quickly could we see the wealth effect work in reverse?
Yeah, I think that's actually, something we really need to watch, Scarlett. So you're right. Lower income consumers spend based on what they're making, right? What their salaries are and what the job market looks like. High income consumers do spend based on wealth effect. So as long as the market is doing well, they're going to spend. If we see that pullback, if we see the volatility that we think we'll see in 2026, you should see the high income consumer pull back a little bit. They won't stop spending completely because they still have the job component there. But as they see housing prices maybe start to come back a little bit, as they see the market pull back a little bit, their spending will start to shift slightly. I think that means you have to be a little bit more cautious on those more expensive retail companies that are out there. Those high income retail companies will probably suffer a little bit if that happens. So there'll be a much lower level of spending that will occur.
Victoria, let's just end on the big debate going into next year in financial markets in terms of the Fed's next move. What are you pricing in for 2026?
Yeah, we're really only pricing in one cut for 2026. We think they'll hold in January just because there's still a lot of unknowns going on. We did have a strong GDP number, but they do have a whole month of January to wait. They'll get more inflation numbers. They'll get more job numbers. We'll see what happens. But the debate here, I really think, is where is neutral and how accommodative are we right now? I think that's the underlying battle that's going on at the Fed, and how accommodative do they want to be in order to not stoke kind of the flames of inflation. That'll be the battle we continue to see. We think we're probably closer to neutral than what many people think, which means there'll be fewer rate cuts going forward.
Victoria, thank you so much for your time this morning. Hope you had a lovely Christmas with your family. Victoria Fernandez of Crossmark Global Investments. Let's get you an update on stories we're watching elsewhere this morning. Yahira is back with your Bloomberg Brief. Hey, Yahira.
Hi, Anne-Marie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, the U.S. launched a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth.
Jordan Bell third. Jordan Bell third. Yo, 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 yo. I've been getting dirty money, Jordan Bell third. Stacking penny stocks while I'm flipping these birds. Sipping on Ciroc, trip 'em up with the words. I done popped the Molly and I think it's be my third. Jordan Bell third. Jordan Bell third. I've been getting dirty money, Jordan Bell third. Stacking penny stocks while I'm flipping these birds. I just flipped a 30, money so dirty. Got my bitch a mink, furry like Furby. I came and made a million, spin it on a roller. Stacking good, feta cheese or ravioli. Baby fettuccine, 30 martini. I'ma fuck your bitch, call me Houdini. I'm driving Lamborghini, yo, in a bikini. 8 bottles to the neck, 3 wishes from a genie. Benjamin ain't dirty, but these Franklins, they filthy. Always go to court, but I'm never pleading guilty. Ballin' so hard, I only be slam dunking. Be steady rockin', the trunk straight thumping. I be riding foreign, Merlot while I swerve. Pedal to the metal, and I'm whipping around the curve. And I'm rolling out this marijuana, you can smell the herb. I'm getting all this lace, I ain't talking iceberg.
Yo, Walker, why you been ducking me?
Dude, I haven't been ducking you. I've been ducking the cops. Where you at?
Oh, shit. I'm on the yacht. Come through. We're about to take off.
All right, bet. Love you. Bye.
I've been getting dirty money, Jordan Belfort. Stacking penny stocks while I'm flipping these birds. Sipping on Ciroc, trip 'em up with the words. I done popped the Molly and I think it's be my third. Jordan Belfort. Jordan Belfort. I've been getting dirty money, Jordan Belfort. Stacking penny stocks while I'm flipping these birds. Jordan Belfort, Burberry shirt, LV loafers on my sofa in Bel Air, turning up daily, cause we can't turn down at work. I've been lighting loud lately, like my volume keeps on work, and my cologne is Versace. Medusa got me stoned, I'm always saying something, but I usually like to smoke. We've been long time friends, me and Ben Frank. Every fucking day he needs a ride home from the bank. Motherfucker, you don't know me, you ain't in my tax section. My wallet ain't fat, it's in GM straight flexion. I don't call your bitch back and she checking her reception. Bitch with double D's, she's all up on my erection. And I'm in the ovaries, but I ain't about affection. So easily to sober me, just smokes and then forgets them. Sometimes this life seems a little stressful, especially when they tell me that I ain't something special. I've been getting dirty money, Jordan Belfort. Stacking penny stocks while I'm flipping these birds. Sipping on Ciroc, trip 'em up with the words. I done popped the Molly and I think it's be my third. Jordan Belfort. Jordan Belfort. I've been getting dirty money, Jordan Belfort. Stacking penny stocks while I'm flipping these birds. Jordan Belfort. Jordan Belfort. Yo, 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 yo.
15 or so of these large cap pharma stocks. I really like, there's two
All
stocks
right,
that
good
I
morning,
like. I like
forecasters. How you
J&J
doing
because I
today?
think that the underlying performance is really strong, and that's going to become more evident as the company continues to execute.
We're
And then I
here for
also
the
like
last
some of
full
these
report
Trump
Friday of the year,
PE multiple kind of stocks.
December
There's
26,
about 3 of them in our coverage universe that would be
2025.
Merck, Teva, and also
And
Bristol
I
Myers. And of
genuinely
those
hope
two, I
everybody
like
had a
Merck
really
and
good Christmas yesterday.
Pfizer
Had
the
some
best
nice
of
time
those
with their family.
companies. And the reason that I like them is because I
And,
feel that their pipelines are
took a break
underappreciated.
from
They've
life
got a
for a
good
little
plan, and I think they're going to beat expectations in 2026.
When you look at this space, though, two names you have not mentioned.
I think what I've noticed over the years is that
and
during
they are
Christmas,
potentially
generally,
going
you
to
can
be on the heels of
get
what
the
we
feeling
just saw
where
from Novo
everybody's
Nordisk
just
with
kind of letting off a little
Wegovy
bit.
and creating this injections for weight
everything
loss,
doesn't have to
diabetes
be,
now be taken as a
know,
pill. Is that going
all
to
in
be
your
really
face,
changing the
hardcore.
landscape for next year?
Oh, I think it's going to really change the landscape. I do
dial it
like Lilly.
back
We have a sector outperform on
maybe
Lilly,
smile a
but I
little
don't
bit
need to
for a
tell you
day.
what everybody already knows, that Lilly's a great
But,
stock, and they're going to continue to outperform expectations.
As
the
we're getting
oral
set
pill is
up
gonna
for
be huge,
today,
and the reason it's going to be huge
I'm not really
is it's
expecting
really
a whole
gonna
lot to
increase
go on
access and affordability for
through
patients.
now and to
Right
the
now,
end
the
of the year,
injectable is more
or,
expensive. It's
until
harder
after
to
the
take.
1st.
It's got a greater side effect profile.
Really
So
until
people
the
that are not
5th. I
looking
don't
to
think
maximize
it's
their
going to
weight
get
loss,
too exciting
and that's a
until the
large
5th
percentage of
anyway.
the population. This will be really big. There are about 1 billion people globally that are obese, overweight, and the penetration rate of these obesity drugs is in the single digits.
No
So
news
with
today
the
at
oral
all.
pill,
Let's
I
take a look
expect
at the
that to
news.
change
There
into
is no
double digits.
news on the docket for
I know
today.
you said that you don't need to
So
tell
we
us
got
about
what
Eli
we
Lilly,
got
but people like proven
after the
winners,
open.
and Lilly
It's-
has been a proven winner. It's up 41%.
So if you're gonna
so
hang
far
out
this
today,
quarter.
I would,
And,
you know,
pharmaceuticals as a group are the best performing group in the S&P 500.
today the
this
26th,
quarter,
nothing.
18.5%
Chinese
compared to
industrial
the S&P
profit
up
year to date
3.6%.
at 8:30
Do you
tonight.
see all the good news already
That's all we
priced
got.
into Lilly? Like when it does get its actual pill form of its obesity drug approved and ready for sale, that we're not going to see much of a reaction at the end of the day.
Oh, I think you'll see a reaction, and the reason that you will is
You're really
because
trying to
the
end
obesity
the
market
deal
is
in
so big.
Ukraine,
I think
which
the,
I'm
end
all
market
for.
projection has gone to about
I'm
100
hoping
billion
everybody
to 200 billion.
is okay
and a big
with
unknown is what it will look like in the markets
with
outside
where
of the
they're
U.S. And so far, it looks like people are getting
with
that
the
pricing
cards they
outside the
have,
U.S.
because
and it's direct to consumer. It's not really
something like
reimbursed by a lot of the
27,000
government agencies
Ukrainians
outside
died
the U.S.
last month or last
I think it's
week,
going to be
and-
really big. I think the numbers will continue to go higher for Lilly. And don't forget, Lilly has a whole pipeline
not
behind
helping,
their first two initial drugs to come to market. The
hoping for
oral should
that.
come to market
Other
early
than
in
that, guys,
or
we're
mid
just
to,
waiting for the open here.
2026. And those will be even better drugs than what the first generation of drugs looks like. So I expect this to continue to run.
Of course, when we look at the sector as a whole, there are a lot of risks that are
Not
tied
a whole lot
as
going
well
on
to
till then.
policy. We know that the Obamacare premiums are high, and they're going to stay high unless the Republican Party can come to some kind of health insurance solution, which increasingly looks more and more unlikely. How are you thinking?
I do have some work I'm doing.
The political problems start to show up in investors' enthusiasm for this sector?
Yeah, I think that's already more than priced into these stocks.
Well, if
right?
anybody
so when
wants
you saw
to,
that
well,
the Trump administration
I'll see
was
if
coming
Henrik
in
shows up.
to the U.S.
I did set a
government,
channel
a lot of the pharmaceutical stocks in that whole sector
in
already
Discord
took a dive.
where if you didn't want to
now
listen to
you're seeing
Bloomberg
things being traded on fundamentals
and just
versus
wanted to
fear,
listen
and
to
I
anything I
expect
said
that to
over the mic, you
continue.
can do that
So,
in a
with some
room
of
and
these MFN deals,
set up a room.
with CMS IRA and what have you, a lot of these drugs are becoming direct to consumer at a huge
It's called
discount.
TTF
that's
live
gonna be
stream
one
audio.
segment of the
No
market that people
Bloomberg.
haven't factored into yet.
It's in the voice channels.
I think things could be pretty equal for these large cap pharma companies.
Well, just 7 days ago, the president, though, announced, he says, largest
So, I know
developments to
some
date
people
in
have asked
bringing
for
the
that.
most
Not
favored
everybody's
nation pricing
fan
to
of
American
listening.
patients. When you look at some of these names that are tied to this, Bristol
there's more people
Myers,
who like
you
it
have
than
things
don't,
like
so
Merck, Novartis,
I let it-
Sanofi.
I like it.
What do you see the timeline for this to
I
actually
like
take
having
place?
it on all day.
Yeah, so each individual timeline is going to be a little bit different, right? So you saw 14
All right,
of the
guys, I'm
17
gonna get some work
companies
done.
that the
If you need
letter was
anything,
sent
let
to
me know.
actually
We're just
already
gonna
come
we're
up
gonna
with
let
these
it play out
MFN
and see what
deals.
we can get into.
I think it's, and also the drugs are also individual as well. So I think you'll start to see an impact next year, and then that will roll through, and it is going to come through Medicare. It's not for all their broader markets. So the impact is actually limited to certain drugs in certain segments of the market.
Do you think companies are going to use the excuse or try to counter this that now this means that they cannot continue to do high-end research for new medicines?
No, I don't think so at all. I think what we've seen is that innovation has actually continued. There's a lot of headlines and things in the news, but what I think the street and investors have found surprising is that it's actually been business as usual, especially for the large cap pharma companies. So I expect that positive momentum to continue. And then when you look at some of our companies, they have worked through 24 plus administrations. So I think their ability to navigate through all these sort of big macro changes is already there, and they know how to do it.
Louise, one thing that you point out when you look at the overall biopharmaceutical sector is that you see a good entry point ahead of the next wave of innovation where companies will be treating to cure. What does that mean, treating to cure?
Okay, so treating to cure is either an actual cure or a functional cure. And I think right now we're looking at more at functional cures depending on the actual disease. And that's a huge deal because people always talk about this longevity trait. And for people to live well beyond 100, you actually have to cure the disease. It's like a car. Over 100,000 miles, it's going to start to break down, right? And that's what we're starting to see is the next wave of innovation that's coming. And I think that's super exciting because that means people are going to actually live a lot longer.
And you mentioned J&J as one of the main beneficiaries. Who else fits into that category?
Okay, yeah, I think a lot of our companies are looking at that, right? So I think out of our coverage universe, most of these companies, their target really is to treat to cure, to stop the disease, right? There's a company, Vertex, I think it's super interesting. They're coming up with a product, povetacicept, right? It's for IgA nephropathy, and that product will actually keep people from getting kidney dialysis, and that's really interesting. So that's just one example, but there's a lot of examples of that in our coverage.
When it comes to treating to cure, and you think about this, how has AI been potentially helpful to these pharmaceutical companies?
Yeah, I think AI is part of the equation, right? So I think in the actual operations of the company, it's actually been very important. As it comes to drug development, still think we're in the early stages, and we're yet to see what that can actually happen. But for a long time, these companies have been using AI to help with the drug development process to make it more efficient, to basically take out some of the inefficiencies in the systems in terms of testing too many molecules, spending too much money behind it. But I think that will actually continue to ramp up through the years, and we'll see the result of that over time.
Maybe we can get to treat to cure pharmaceuticals quicker with AI. Louise, thank you so much for joining us this morning. Louise Chen of Scotia Capital. Coming up in the program, Citi Chairwoman and CEO Jane Fraser caught up with Bloomberg to discuss the bank's growing exposure in China. That's coming up next. Plus, you hire with your morning movers, NVIDIA rising after closing another deal. You're watching Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Good morning. Welcome to Bloomberg Surveillance. Hopefully you had a lovely Christmas. I'm Anne-Marie Hordern alongside Scarlett Fu this morning. She's joining me as Jonathan is still on paternity leave and Lisa is off, but the gang will be back together in 2026. Right now, equity markets are unchanged. In the middle of the Santa Claus rally, we are really having low volumes and very thin trading today on this day after Christmas. It is a federal holiday. President
how you
came
doing,
out, he
Hogwarts?
made, I believe, the 24th
you doing?
as well.
Did you have
and
a
the
good Christmas,
26th,
man?
as they do in the United Kingdom and other places I've lived. We have these bank holidays.
Yeah, full-time
federal
trading. We'll
holidays,
see
but
what we can
the,
do. We don't have any news, though, so we just got what we got at the open, and then that's it, you know?
Kind of
got to make do with what they give us.
Space this entire week and this morning. Scarlett, you've been going through some of these numbers.
Yeah, it's
and
good
they've been
Christmas,
almost
man.
extraordinary, and what people are also expecting to go into
It's a good time of year.
Absolutely. Gold is up 70% this year, the best annual performance since 1979. Silver up about 150% this year, the best annual performance since 1979. Platinum year-to-date gaining 162%. I mean, the numbers just speak for themselves.
You're going to go long at the
all
open?
Of this is against a backdrop in which the U.S.
I have
dollar
no idea,
is
man.
weak and will probably continue to weaken. So
I'm going to set up
there is
my
that
my
knee-jerk
accounts
reaction of
now.
weak dollar,
I'm on
stronger
PAs from here on out.
Absolutely. All right, we're 1 hour away from the cash open.
I'm tired of
Morning
working
Movers with
evals.
Yahira.
I got
Hi,
enough
Anne-Marie. We start with NVIDIA outperforming the Mag 7 this morning with shares up
full day though, so maybe it goes down.
18
Yeah, I have no idea.
and
I mean,
on
there's
this
no
Friday,
news
NVIDIA
at all
did
today. Zero,
manage
absolutely
to make
100%
some
zero news.
Just before Christmas, it
So,
said that it struck a licensing deal with the AI
I wouldn't
chip
expect it
startup
to,
Grok,
you know, to be
taking with
good
it some
price
of its
action,
top
but you never
engineers,
know.
And even its CEO. Analysts are generally upbeat about the deal since it means NVIDIA can incorporate these new advanced chip designs into its products and stay ahead at a time when you're seeing Amazon, Microsoft, and Alphabet developing their own in-house chips, though as we know, NVIDIA is way out ahead. Meanwhile, sticking on chips, we go to Micron. Those shares are up 2%, and if we maintain these levels, Micron will open at a record high, and it's worth noting the run this stock has had this year, up 230% as demand for its memory chips continues to be strong due to its place in the AI market. And we end on Biohaven. That stock is absolutely plunging this morning, down 12% in the pre-market after one of its experimental drugs to treat depression failed to meet goals in a mid-stage study. Analysts are disappointed, but not surprised given the complexity of these clinical trials when it comes to depression, though on a day of thin trading, we are seeing this outsized reaction. Anne-Marie?
Thanks so much, Yahira. And I was just going through some of the pop culture things to know about 1979 when gold and silver were rising in the same way this year. Do you know what one of the top songs was? It's almost one of the top songs now, at least if you follow President Trump. The YMCA by the Village People.
Of course, yes. So everything comes full circle.
Absolutely. Everything comes full circle. It's almost like it's 1979. All right, we're going to turn to banking now. Citi CEO
Do you
Jim
know a
spoke
lot about
exclusively with
Discord?
Bloomberg's Stephen Engel
Do you know much
the
about
bank's
Discord?
growing exposure in China and Citi's U.S. outlook heading into next year.
The recent truce has brought some much
Well, I'm trying to
needed and
figure out
welcome,
if there's a way
stability here. I think
when
we're in a
somebody
position now
when
for
somebody
both
enters
sides
the
that
Discord, not
wanted
for
to
the
have
first
a
time, but
period
if they
now
just
where
go
we can
in
just
there,
we can
they get a
move
quick
ahead,
pop-up.
and
I
have
want just a
have
put a
more stable
pop-up
relationship
warning that
between both of
there's
them.
people
It's
pretending to be
transactional,
me, direct
but
messaging
it's in both
members of
sides'
the
interests.
Discord.
And we see
And I
our
just wanted to
client
warn
base
people of that.
navigating this well.
Yeah. What's
And
your
I'm
vision
trying to
for
figure out
China
if there's even a way to do that.
Into your overall restructuring?
Yeah, I know,
as well?
but people
You're now
don't, you know,
chair
some people
and
just
CEO.
don't know. They'll
First
think
time
it's me,
that those two roles have been joined
you know,
in a
and
couple
then,
of
you know, that's when the
decades.
scamming
Clear
starts.
to carry out your vision going forward. What does that look like?
Because I
When you
don't,
did
I don't
exit your
DM anyone.
consumer banking business
And
here
if
like you
people
did in
send me
many
a
markets
DM, I
around the
only
world,
talk to
you
them if
also
they're in the
sold
chat
your
all the
retail
time. You
wealth
know,
management
they're
portfolio
here all
to
day. You know what I'm
HSBC.
saying?
You got out of an
I'm really
investment
selective.
bank JV with Orient Securities, I believe, and you have an outstanding license.
Yeah, I don't sell
application
anything.
for your wholly owned JV.
Well, I mean, I'm a Ninja Trader affiliate, but those
So
links,
City has
anything
been
I
in
talk
China
about
for
is in the
almost- for
stream, not in
124 years.
DMs.
We have a landmark building here in Shanghai.
How do you
What
put
we've
it as a
done is
pinned
focused our
message in all
strategy
channels?
and grown.
How do you do that?
We
Okay,
are
let me
following
write that
our
down.
international
That would be
clients
fine
around
too,
the
as
world.
long
We're
as
seeing
as
them
soon
with
as they clicked
renewed
on something, they
interest,
would get
and
it. You know,
focus
they
in
would read
China,
it.
as we talked about. And then we're seeing the Chinese companies
me write
innovating
that down.
at pace and also looking at expanding internationally. So we've been growing rapidly.
So it's
here
possible to do
with
that?
a more focused strategy.
This also very bullish on India. Magnificent opportunity there.
He's biased.
Might be a little
End
bit
message.
biased, maybe. But again, what do
Trying
you
to find
hope
somebody on Fiverr that
get
can
from
program
those
a bot
markets as it
to
fits into your restructuring
warn
plan
people
and the vision that you just
when
talked
they
about?
enter
And
the
no,
Discord, but
the
I haven't been
growth
able to
plans
find
that we
anyone
have
that.
going forward, because we are on the front foot. I cannot stress that enough. You can see it in
I'll
our
ask one more
results.
guy.
So all of our businesses, we're taking share, we're growing very quickly, and our returns are improving. So as we're looking forward, it's growth. Let's take India. Citi is larger in India today. We are the largest foreign firm by revenues in India. When I look at Korea, where I was just at, that's another market where we were the first foreign bank to open the doors in
That's a
Korea.
good idea.
And we have
Trying to find someone on
very
Fiverr.
strong position there, supporting multinationals.
Fiverr's good and
clients.
Fiverr's
So as
bad, you know
look
what I
around
mean?
the world, it's becoming more focused on diversification.
Oh,
There is also
yeah, I'll
a
give you,
focus
if
on
you can figure it
reinvention.
out, I'll give you a
What
sub.
we are doing
You
is
want a sub
helping
now?
provide the strategic advice. We're helping provide the financing and structuring and arranging that. And we're also helping
Yeah, if you don't
manage
figure it
the
out,
supply
that's I
chain
understand, but I'll give you a sub.
reconfiguration.
Hold
We're
on.
helping with the hedging and foreign exchange, interest rates, because volatility is a feature. It's not a bug of this system.
Through your restructuring, you had to get rid of the retail side, and are there other areas that you would like to divest? I know.
We're very
Front
clear.
foot forward.
We are very
yes.
clear on our
Yeah,
strategy.
there you go.
moving
Did you get your sub?
I only ask because again, the Russia situation is a little bit different probably than your overall
Yeah,
strategy.
no problem.
We
Yeah, if
just
you get
got,
time, it's not
word
like,
that Vladimir
you know,
Putin
it's
approved the
okay if you
sale
don't get
of
to
Renaissance
it this
capital
week.
of your bank in
You know
Russia.
what I'm saying,
Probably
brother?
something that you've been wanting to
Yeah,
do
if
for
you
a
can,
while, but
you know,
was held back.
you can help me out, figure out a way to do that. I just want people to get warned.
Companies have been the franchise in Russia. We were waiting for the final approval to be
DM you
able
on
to sell.
Discord?
We've got a couple
Alright,
more
let me
to
find
go.
you.
To
Who are
release.
you on
It's-
Discord?
It's a tiny business, so it's in the grand scheme of where Citi
Kip
is,
trick,
where we're
okay.
investing and what we're doing. It would be good to get that done, but it's not critical to the firm's
How do I
strategy going
DM you?
forward.
Let's talk about the outlook in the United States right now as we head into 2026. We saw the market reaction overnight. Simply, we're seeing that the Fed's equation, the bets for possible easing coming up, and now 50-50 or is still below that because of the specter of inflation. What is your outlook for Fed action going into the new year and the specter of inflation rising?
Look, I don't think we're out of the woods yet, and there's a sense that there may be another shoe to drop. It could be in tariffs or in the labor market. It could be in the asset prices that are quite high in the States.
I think I sent you a friend
But all of
request.
that
Did you
said,
get it?
We're quite optimistic
Okay.
about 26. The challenge for the Fed right now is with the government shutdown. We all have a dearth of up-to-date data, which we could do with. It's hard to make these calls of exactly what's going on whilst we're waiting for the information. But as we look further out into next year, I think the resiliency of the corporate balance sheets, the strength, companies leaning in to innovation, investing in AI, there is, I think the doomsdayers will be proven wrong.
We're a couple months out now from when we had concerns rise about, I think there was one at Tricolor, the subprime auto lender. There were failures. There was concerns about non-performing loans. What does your balance sheet look like as far as that, and where is your worries?
We're talking now.
Our balance sheet is pristine, but I think part of that is because it's very heavily investment grade on the corporate side. We're over 80% investment grade globally, and when we look at the consumer side, it's about 86%.
All right, we're good.
So
all right, cool, man.
To,
thanks.
We tend to see the most resilient, healthiest parts of the economy on the balance sheet. All of that said, we haven't seen a thing that is concerning us. The consumer in the States is being fiscally responsible. Companies have
I got about a week. I got about a week and a half off.
Either for
so
a rainy day if it proves necessary, but most of them
I'm trying to get as much of this. Like I've got
they're
2 pages of stuff that I got to clean up with the stream and other stuff. So I'm trying to get it all done.
We'll keep an eye on some of the areas of mid-tier players in private credit.
Looks like we're grinding up here, doesn't it? I'm not even watching the market.
Second, third order effects. The bank's not saying anything that we're worried about.
Are you concerned by what some say maybe bubble forming in AI? We talked about the advantages of AI, but how much of a bubble? Overheating.
I'm not sure if we're just in with a lot of our tech clients on the West Coast. I don't think anyone was ready to say that it's a full-on AI bubble, but no one is saying that there aren't some real pockets of let's call it the British understatement, frothiness in the market. It's more around the edges. What I found interesting is we can see a lot of the demand for the infrastructure build that's going in AI and the energy for the next couple of years. Where you saw some opinions diverge was in the 3 to 5 year period, could we be in danger of overbuilding? But no one's feeling that for the big investments that are going on at the moment for the next couple of years. So I think on that one, certainly some pockets of frothiness there on the valuations, but the core infrastructure investments are important, and as we're seeing in our own bank, and I think many companies will start getting some of the productivity benefits coming through. But the scale and the pace of investment is unprecedented, that is for sure.
Great conversation with Stephen Engel and Citi CEO Jane Fraser. Let's get you an update on stories we're watching elsewhere this morning. Yahira with our Bloomberg Brief. Hey, Yahira.
Hi, Anne-Marie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, former Malaysian Prime Minister Najib Razak has been found guilty of abuse of power and money laundering in connection to a multi-billion-dollar fraud case. Najib, already in jail due to other convictions, now faces another 15 years in prison and a fine of over $2.8 billion. The ruling judge dismissed numerous aspects of Najib's defense and questioned his credibility. And coastal communities in Southern California are bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. Meanwhile, here in New York City, heavy snow is on the way. The winter storm has already caused hundreds of flight cancellations in the midst of holiday travel. That's your Bloomberg Brief, Anne-Marie.
Thanks so much, Yahira. Up next, setting up for the day ahead, plus Deborah Weinswig of Coresight Research, recapping the holiday shopping season. And we'll get another check what Yahira was just talking about, the storms taking shape across the nation this holiday weekend from AccuWeather. That's coming up next. You're watching Bloomberg Surveillance.
Raving Trader, how you doing? Oh, it's Hyde? The Raving Trader is Hyde? Will you change your name? Oh, you're yeah. Cool. I'm inspiring all kinds of people to do stuff. I don't know if you know Lurker. Lurker's trying to stream too. There's going to be 1 million of us out there. And if I hit stop loss and I rave, I'm just going to rave no matter what. That's cool, man. That sounds like a good idea. I was gonna, after I get organized here, I got a lot of stuff I'm trying to do to get everything cleaned up. I was gonna maybe see if Lurker wanted to do like a raid or collaboration or whatever you call it, because I got to do so many of those to get to affiliate or no partner. So maybe we can do that too if you're gonna stream.
Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1, 2, 6.
Oh, I did a face ripper candle. Or a face ripper emote.
Some people travel to see the world. I travel to question the forces that shape entire nations.
Show you guys.
No, was it possible?
So much to do.
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell. And dig up the peculiar and wonderful treasures that reveal what a country is made of.
What do you think of that for a face ripper candle?
Good morning.
Or emote. Emote for the face ripper candle. What's a rave? So I'm just gonna rave no matter what.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
When I don't have regular work, man, I get so much stuff done. You know what I mean? I get so much done when I don't have regular work. Such is life.
Good morning and welcome to Bloomberg Surveillance. I'm Amber Hooder and alongside Scarlett Fu this morning. We're counting you down to the opening bell. Here's your trading diary for the week ahead. Zelensky is expected to meet with President Trump as soon as Sunday in Florida. Tuesday, we have ADP employment data plus FOMC meeting minutes. And on the last day of 2025, we'll get jobless claims. Thursday, the markets will be closed for New Year's Day, and then it's off to the races for 2026. Turning to the consumer, Deborah Weinswig of Coresight Research saying, quote, holiday demand is holding up, but it's a value-first consumer. Deborah joins us now for more. Deborah, thank you so much for joining us. Hopefully this gives some insight into what the holiday shopping season looked like. When you say value first, what does that mean? Where are people going to shop?
That's a great question, and thank you for having me on. So we definitely saw continued strength in off-price. So that's TJ Maxx, Ross Stores, Burlington. We also started to see pockets of strength in the dollar stores, and Walmart, of course, continues to really hit on all cylinders and is continuing to take market share really across the board.
Deborah, Walmart, Amazon, and off-price retailers like the TJXs of the world are winning this holiday season because consumers are seeking value. So these retailers are getting the volume, but are they giving up any margin along the way?
That's a great question. What we're seeing is that the specialty retailers actually have done an amazing job of more dynamic pricing and utilizing a lot of AI to do a better job of matching price to consumers. So we think that in the specialty retailers, they're doing a great job on maintaining margin. When it comes to, let's say, some of the other pockets of retail, I think that's been a bit more challenging. And so a bit more of this kind of bifurcation where you've got kind of some of these stronger players and I would say some of these weaker players where either they don't have the technology, they don't have the product, or they don't have the price set at the right level for the consumer.
So how does Target fit into that? Because it should be a retailer that benefits from consumers seeking value. Yet the company really is struggling. It has a new CEO, but has a lot of familiar problems, falling same-store sales, reduced forecasts. What does it take for the company to work through its problems and be in a position to capitalize on this shift to value?
I mean, I think that's it's not even $1 million question. That's a $10 million question. They have, first of all, you replaced the outgoing CEO, Brian Cornell, with someone internally. You didn't set up kind of a co-CEO kind of structure. So you don't have kind of like the old and the new. So I think there is nothing that's kind of like in place right now to help them with their ills. They've got issues with regards, I mean, inventory, kind of their out-of-stock levels are as high as they've ever been. Their ability to execute, I mean, there's just something on the execution level that's more fundamental. And I think supply chain, which they've supposedly been investing in for the last decade, but they're just not putting their money into the right place. They've significantly slowed down new store growth. They were using their stores as warehouses, and I think they keep going back and forth between all of these strategies. Whereas you look at Walmart, right? They've stayed, and it's not that their execution has been perfect, but they've continued on one path, and I think that's what's gotten them to where they are today.
Deborah, how concerned have you seen consumers with tariffs coming out of the Trump administration?
So I think that's a really important point. So I think that what we saw is that holiday sales were pulled really early, right? Because the consumer was worried about higher prices. Then you had this, like, almost like everything just went quiet with the shutdown. And then we saw this huge burst at the end with things really strong. And, we were mapping store traffic. I mean, we saw some of the highest traffic we've ever seen on record in specialty retail. It was up about 6.2%, and we estimate sales in specialty up about 4.8%. I mean, numbers we haven't seen in quite some time. So while it was definitely dynamic and probably stressful along the way, I think that the sales ended up much more positive than most people expected, even at the beginning of the season, certainly stronger than what we thought.
Well, what do you expect for 2026? Because there's a lot of tariff question marks hanging over the consumer and the market's head, whether or not the Supreme Court is going to strike down IEEPA, whether or not we might see more tariffs in certain places like copper, which might impact supply chains, or even the U.S. renegotiating USMCA from Trump's first term.
So it's a great question, and if you go back to what's driving a lot of apparel demand right now, it is actually GLP-1. So about 1 in 5 Americans have been on GLP-1.
A busy day today.
Of those, about 72%.
No news. I'm just getting a lot of busy work
done. And of those 1 in 5, about 52%
Wait, hold on. Are you saying people are shopping more right now because so many people have lost weight because of Wegovy and Ozempic?
Yeah. So, and it's not just apparel, right? They're changing shoe size, they're changing jewelry size. So it's really apparel, footwear, and accessories across the board is driving a significant amount of growth. And what we're seeing, right, you just saw this whole kind of DXL transaction, right? Because of the change in sizes, right, even those retailers who are winning is changing.
Interesting. That's okay. I love that. One thing we know from the holiday shopping season is that gift cards are a very popular gift. And I bring this up only because the revenue is often recognized or usually recognized when people actually redeem the gift cards. Have you seen more of a shift or less of a shift from physical gifts to gift cards when you have an environment where prices are elevated and consumers are frankly worried?
The gift card question is an interesting one because what we're seeing is that more and more retailers are trying to create community.
Deborah, I'm so sorry. I believe we're losing you here now. Thank you so much for that insight in the holiday shopping season. Deborah Weinswing of Coresight Research. Scarlett, what struck me is that I didn't even think about that. More and more people are on these injections. Matt Miller are on them. He told me about them. Maybe he's one of these people that are going out buying new clothes. And I wonder how much more that's going to be a story next year, given the fact that it's now going to come in pill
Absolutely,
form.
right, because it just broadens out the potential customer base for these treatments. Plus, once you buy a new size, if you continue taking the drug, then you're going to need to get another size down the road, too. So this is kind of a recurring expense.
I've never heard of of your shoe size changing, though, if you lose weight?
Well, when you have a kid, your shoe size often changes. My feet got bigger after I had my 2 kids.
All right. You learn something new every day. All right, turning to weather now. You want to listen to this if you're traveling today. Heavy snow expected to begin in the New York City area later today. The winter storm already canceling hundreds of flights in the middle of holiday travel. AccuWeather's Bill Weidel back with us now. Bill, what do we need to know?
Trade copier set up right now in case we get something.
Are we still expecting maybe up to 12 inches of snow?
Yeah, that's right. In parts of the Northeast, that is possible. If you're trying to do any of that holiday shopping, use those gift cards, do the exchanges, or if you have flexible holiday travel, do it this morning or early this afternoon, because those big impacts are going to be reaching the New York City area by about 4 or 5 o'clock this afternoon. This is the start of the winter storm. You could already see that we have some snow, wintry mix on the radar in part of the Great Lakes Northeast. Looking at the big picture, all of the ice is going to be in the wintry mix on the southern side of this storm, mostly snow on the northern side. Let's get right to New York City with the AccuWeather Wintercast. Our expert meteorologist predicting 3 to 6 inches of snow in New York City. But if that cold air hangs on, there is the potential we could see more than 6 inches of snow in parts of New York City. And it's not just the snow. There could be some other big problems with this storm. Check out the wintry mix, the ice component of this, where you see that dark pink on the map. Parts of Michigan, western and central Pennsylvania, even parts of Maryland and West Virginia. We could see sleet, freezing rain, ice pellets. The big concern here, especially where we see that darker pink, is potential ice accumulation on the tree limbs and the power lines. If those start to weigh down, we hear the tree branches snapping, that could lead to some power outages and some big problems. So looking at the big picture when it comes to holiday travel, this part for the eastern half of the country, that's mostly for the afternoon, evening hours, but you could see major holiday travel weather impacts expected from the Great Lakes to the Northeast, and still our friends on the West Coast dealing with all the impacts of the rain, flooding, and mountain snow as well today.
Bill, thank you so much for that update. Bill Weidel of AccuWeather. Everyone's really focused on this, of course, because it's the middle of holiday travel. Potentially you're going away for New Year's. And also, if it's 12 inches of snow in some places, it's going to be kind of hard to get around.
Absolutely. And I wonder as well, if temperatures stay really low after the snowstorm, that means that you've got a lot of ice on the ground. You've got a lot of difficulty with actually moving the stuff out. You know, everyone's got a shovel, but you can't do it if it's weighed down by ice and water.
And it's ice. Yeah, that's what worries me. It's icing. But you go ice skating. You play ice hockey, so maybe you can do a game outside.
You know, that takes a lot of work to clear the outdoor rinks.
That would be fun, though. All right, Scarlett, thank you so much for spending the week with me.
It's been a pleasure.
It's been a fun Christmas with you around the table. Coming up on Monday, Lisa will be back with you. Lori Calvasina of RBC will be joining her. Krishna Gua of Evercore ISI, and Lisa Shallett of Morgan Stanley Wealth Management. This was my last show on surveillance, hopefully, for the year. I don't get pulled into something next week. John is still on paternity leave. Lisa will take you through next week, and then we'll all be back together for 2026. I hope you and your family have a very Merry Christmas and Happy Holiday season. This was
Bloomberg Surveillance. We're coming up on to 9 o'clock. Looks like we're revisiting. Oh, we got some volume. Where'd this come from? Oh, no, that was because I was resetting.
In case you missed it, on Bloomberg Open Interest.
Politics will drive the economy. Now the conversation is AI is driving the economy.
AI story and really the economy and inflation story will probably be front and center.
We saw the promise of like ChatGPT. 35 million people are paying for it.
We have the ChatGPT versus the Google platform. Maybe there's pressure on the rest of the secondary and tertiary players in the market.
Don't miss Open Interest live every weekday.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world.
All right, I got to make a phone call, guys. We're coming on to 9 o'clock. We're working on the NQ. We're working the 50 EMA, the orange dot dash. We got 2 resistance fair value gaps above VWAP right below. And on the ES, we're challenging the VWAP right now. So we're just kind of chopping around the VWAP. in and out.
I mean, the reality is, I do think there'll be some.
So let's see what happens if we can pick up a little more volume at the open and see if we can get organized and push away from it in one direction or the other. But all right, I got a call to make, so I'll be back after a bit.
What is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
You up to the minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
All right, welcome to Bloomberg Markets. I'm Paul Sweeney here on this Friday morning. We're here in our Bloomberg studios in New York City. We're also streaming live on YouTube, so we're pretty much everywhere, Caroline. Hi.
We are cross-platform.
Yes,
I'm Caroline. Hi.
That's the term.
We've got so much coming up. We've got stocks. Paul looking to extend a year-end rally. Is a Santa rally going on? He's continuing to give the gift that keeps on giving with growing optimism, it seems, over economic growth and corporate earnings.
Yep, absolutely. We also got some geopolitical issues going on out there again here, Caroline. The U.S. launched a military strike in Nigeria against Islamic targets in a security intelligence collaboration with the African nation's government, which has been struggling to contain increasing levels of the terrorist attacks in parts of that country. So we'll have reporting there.
We'll also be looking at the state of the consumer, the U.S. consumer confidence. Look, that was down for a 5th consecutive month. That's as pessimism really grows around the labor market. But we're going to be getting the inside track with Michelle Allon, CEO of ad tech company June Group. But let's get a check on these markets because we're a little bit flat, but we're near highs.
I mean, is anybody out there? Hello, anybody out there? The S&P pretty much unchanged on the day. The Dow's down 40. The Nasdaq's up 20 points. We keep an eye on the commodities as well. Crude oil steady at $57. Gold higher yet again.
Boy, and silver. Check a look at what's happening in terms. I mean, you know things are going well when you're sat on the train and all the conductors are talking about the price of silver and gold. And you're like, oh, here we are. It's like the new Bitcoin in many ways. We're going to old school, not digital gold, but real gold and real silver. What's interesting, Paul, is how low volatility is.
Yes.
And the VIX has just been at a near low for the entire year. Bitcoin not having a nice year, it has to be said. It's down on the year. Whereas we're looking at general global stocks. We're pretty flat, as you said, across the board. But year to date, all country world index, new record.
Yeah, exactly. And folks, if you use the WEI function, it gives you where the equity results are for the markets year to date. And you look at outside of the U.S., and that's where some substantial returns have been made. And Tom from Paris Cafe writes in and says, give me a VIX quote, 14. There you go. quiescent, as they say.
Quiescent, I love that. What hasn't been quiescent is just trying to digest some of this economic data that we've got, thick and fast and late most of the time, thanks to the government shutdown. We want to get the push forward for what 2026 is going to look like. Oscar Munoz does that with us of TD Securities. Oscar, look, the market moves are not doing anything today, but what we are feeling is a little bit of optimism around economic growth. Are we right to have it?
Yes, I think we're right to have it, even though we're looking for Q4 to be soft because of the shutdown, right? You're going to have that impact, but you're going to see a payback in Q1. Also, we're tracking the high-frequency data for the U.S. consumer is telling us that the consumer is stepping back a little bit in Q4. So you're going to see that soft Q4, but then some of those impacts will fade into Q1. We're very, very positive economic activity for next year. We're forecasting 2.2% GDP growth for 2026. We see a number of tailwinds for the U.S. economy. You have a central bank that will continue to move closer to neutral. That means additional rate cuts. You have fiscal policy turning into a tailwind for activity, particularly during the first half of the year. That's when you have all those tax refunds, talks that, I think the market is having already.
Yeah.
And also you have real wages likely improving because we are forecasting inflation moderation during the second half next year.
Why, then, should the Fed be cutting into this scenario? Are we right to be factoring in 2-3 cuts for 2026 if all these tailwinds exist?
Yes, I think we are right. We are forecasting we're forecasting 3 cuts for 2026. You can talk to me and convince me it could be just 2. Again, if you have inflation going back to 2%, although, albeit a little bit longer than expected, if you have the labor market stabilizing, remember the unemployment rate is at 4.6%, so it's a little bit higher than what the Fed would like to see. But if you start seeing the unemployment rate moving back toward 4.4, 4.3%, that means the labor market is getting back in line. Inflation is in the right direction. Monetary policy should be back to neutral. Now, that's a different discussion within the Fed, and we're seeing it in the recent meetings and the minutes that there is dispersion of views around where our start is, either 3.5 or 3%. That's something that will be a moving target next year. But again, having a strong growth is not inconsistent with easing if that strong growth is being accompanied by higher productivity growth.
Oscar, I'm just looking at the WEI function here. I got 18% return in the S&P 500. I got 22% return in NASDAQ. I look at my friends in the bond market. They had high single-digit total returns in 2025. Boy, that's a tough bar to clear in 26. What's your outlook for 2026 in terms of where do you think there might be some opportunity?
So we are very constructive as well for the Treasury market, particularly the 10-year yield. Our folks my partner Gennady Goldberg on the rates team is looking for the 10-year yield to drop to 3.5%. I think that's very optimistic scenario that we have versus the market, and particularly for us, it is a supply story, right? It's very clear that the Treasury Department does not want to issue in the long end. We have the Fed implementing reserve management purchases. That's going to introduce a new buyer in the short end that will allow the Treasury to issue more there. Also, deficits haven't been as bad as we thought, right? Earlier in the year, we were talking about deficits at 6.5, even 7% of GDP. We're now seeing something closer to 6%. So on the supply side, I think it's a very supportive environment for being long in the long end in particular.
How much credit risk do you want to take there? I'm looking again, the I-N-GO function, which gives you the total returns across the fixed income space. The levered part of the market, whether it's leveraged loans, whether it's high yield, mortgage-backed securities, that's where the real returns were in 2025. How much credit risk do you want to take in 26?
Well, I'm not sure, actually, because spreads are so tight. I'm not sure there is much to go there. I would go back to the Treasury. I think it's safer. I think you see a clear story there. I think spreads are too tight, and anything that blows up next year, and there's a lot of risks out there, right? You have the AIPA decision from the Supreme Court, the Lisa Cook case at the Fed. That decision is going to be key for Fed independence. You also have uncertainty about what's going to happen continues to increase north of 4.6%, that will be bad for markets, I think, because the longer you stay on the path of moving higher in terms of the unemployment rate and employment deterioration, I don't think that's going to be good for credit spreads.
Oscar, talk me through the labor market and what TD is seeing right now, because on the one side, yes, there's a feeling that corporate earnings are going to do better, but a lot of that is due to cutting costs and using AI. And I'm just trying to understand where we think labor will be affected by this in 2026.
So our view is that it gets a little bit worse before it gets better. We're looking for the unemployment rate to increase on average to 4.6% in Q1. That's what we have as allowing the Fed to ease again in March next year, and then gradually in Q2 and Q3. But that's because we're also assuming the unemployment rate and the employment conditions improving in Q2 and going forward. We do have a forecast for the unemployment rate to end the year at 40.3%. But to your point, there is a lot of uncertainty of what happens there. I think that is the big wild card for the economy. And I think we're going to get a fairly clear view of what's going to happen to the labor market at the start of the year in Q1. You have a lot of noise given the shutdown, given the Doge layoffs. I think Q1 we'll see a clearer picture, but we think that given we're assuming strong growth next year, we're assuming the fiscal policy tailwind, additional monetary policy easing. I think that will be good for the economy. We're also going to get less uncertainty, right, than we got in 2025, particularly on the trade front. I think that should allow businesses to invest and to hire again. So that's the view we have for the labor market next year.
Oscar, thanks so much for joining us. Really appreciate you taking the time here on this day after Christmas. Oscar Munoz, he's a chief U.S. macro strategist at TD Securities. Futures, not a lot going on out there as one would expect the day after Christmas. I don't know who would be in the office other than you and I, Caroline, and some others.
Maybe people doing deals for NVIDIA and Grok.
Yeah, we had the M&A guy from Citigroup in a week or two ago, and he said, I've told my team, because they're working on the Warner Brothers Discovery thing, cancel everything. You're in here through the year end. So, but those folks don't mind it because they get paid to do that. All right, let's see what's happening in the futures markets. Any stocks to watch here? Isabel Lee joins us here from Bloomberg News. She covers all of the equity markets. Isabel, what do you got for us?
We have to mention NVIDIA. The stock is higher by 0.8% in pre-market. Ticker is NVDA, to those who are still not familiar. So the chipmaker agreed to a licensing deal with AI startup Grok. So the chipmaker has paid for the right to use Grok's technology and will integrate its chip design into future products. So some of the startup's executives are leaving to join NVIDIA to help with that effort, while Grok will continue as an independent company with a new CEO. So NVIDIA's technology already dominates data centers. We all know this. That's why it's the most valuable company in the world. So Grok is among the startups and companies like Google that are developing their own AI chips to rival NVIDIA. So Grok was founded in 2016, and in September, it had a post-funding valuation of around $6.9 billion. So this is kind of good. It shows NVIDIA's flexibility and really is just trying to maintain its lead.
What's interesting, you mentioned Google. This type of deal is something that we've seen rife in 2025. Google bought technically quote unquote character AI. What they do is they just pinch the executives and lead sort of a bit of a shell company behind them. This is getting more and more anxiety for those that work at these companies, right? Like, what does it mean if your star CEO leaves to go to another company, but you're still left carrying, like the Scale AI deal, which we saw with Meta, for example.
I can just imagine what that would feel like for sentiment-wise. I mean, I don't know if you're an employee in the startup.
But we've seen circular deals before, and the market does not like them. And that's why they don't happen in most industries. Here, it seems a little bit different. Here, I think there's some unease with some of these transactions, but there's a sense of the dollars are just so big and it's growing so quickly, so it has to happen, I guess.
And I suppose in many ways, the anxiety of late has been around NVIDIA's ability to keep its market share when it comes to inference. Look, we're starting to see the worries that Google's TPU is doing extraordinarily well, particularly at the use of LLMs. Look, these chips are used when you're actually deploying the large language models rather than training them. NVIDIA's always owned the market when it comes to training, but as we move ever more to inference, what does it mean for competition when you see TPU? What does it mean? And therefore, no wonder they're going out to Grok to try and find the latest innovation to ensure that they're there with the market and indeed with efficiency, with cost efficiency, because that's where Google and others have been starting to compete.
You'll definitely be busy next year, Caroline. It's super interesting because to Paul's point, it's a circular economy. Investors, I feel like, are starting to get jittery on when they will see a payout for these massive capex that these companies are spending. But for now, stock is doing well, up 0.8% pre-market.
Biohaven? We got some others that you're looking at, right?
Yes, miners. Biohaven, yes. Let's go. I got excited with gold and silver. Biohaven, ticker is BHVN, so shares are down by around 11% in pre-market. That's after a mid-stage study of the company's experimental drug for the treatment of major depressive disorder missed the primary endpoint. So Citi said, yes, the data is disappointing, but investors had very low expectations. Raymond James also said that maybe they should focus on something else, but for now, shares are down by 11%.
Isabel Lee, so thankful that she's in and helping us walk through some of these big movers, or indeed big deals on the end of the year.
Yep.
We appreciate you hugely, Isabel Lee. Thank you very much indeed. We got a few other pits that we need to get to, and we want to remind listeners, viewers alike, that the US is indeed launching a military airstrike against ISIS targets in Nigeria. Now, President Trump saying that he ordered the precision hits at the request of the Nigerian government. Defense Secretary Pete Hegseth warning more strikes could be coming.
Also, in coastal communities in Southern California, bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. The historic storm has pummeled the region over the holiday, leading to road closures, flooded freeways, and evacuations. According to the Los Angeles Times, 3 people have now died as a result of the storm here.
Coming up, we're recapping the holiday shopping season with Michelle Alon of June Group.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
In case you missed it on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
All right, retail sales. I think this Christmas season, the holiday season, from what we had heard from experts, Caroline, been pretty solid. People are spending money, so it's...
Anecdotally, I spent some money.
You did? Okay, now we've got some hard data, folks. Joining us now is Michelle Alon, CEO of June Group and Chief Business Officer at Verve. Talk about just kind of the consumer out there in retail and how's the consumer doing? We've all heard about the K-shaped economy, but what does that really mean for retailers out there and dollars being spent? So, Michelle, thanks so much for joining us here. What can you tell us about what we've learned over the last several weeks, maybe about the U.S. consumer?
Yeah, thanks for having me, first of all. We analyzed
billions of search queries on a monthly basis using our Captify product. And what we're seeing in this holiday season is this very interesting behavior from consumers where, instead of being focused on deal-driven shopping, they are shifting to an intent-driven one. Obviously, before Black Friday, you see a lot of consumers looking for deals. But what we saw in the time leading to Christmas, after Black Friday, is that consumers were looking for trusted brands. They were looking for creative toys, and they were looking for subscriptions that remove friction and deliver instant value. Overall, this tells us that consumers weren't overwhelmed by what was available there. They were more intentional and selective around the brands that they chose.
That's the term I've heard, like more intentional buying. That's the first time I've heard that term here, but I've heard it a few times here this holiday season. How promotional were retailers out there? How promotional did they have to be, Michelle, to drive traffic?
Yeah, some of them, there are two sides of the spectrum. If you look at the market, you still have the Marshalls and Timu's of the world who are looking to cast a wide net and to attract those consumers that are looking for the deals. At the same time, when you look at the DTC brands, the Warby Parkers of the world, they were more focused on creating this, premium experience around the shopping, and you saw that translate into searches that were, very specific to those brands. I think that consumers were looking for brands that are trustable, that will allow them to cast a wide net when they're going and buying gifts for their friends and relatives, but also tried and true brands that will never be objectionable or questionable for their loved ones.
How are people coming to those brands at the moment? There's companies that really manage to interweave the really bricks and mortar element as well as the online and advertising. How are you seeing people building a relationship with a brand at the moment?
Yeah, I think that some of it is traditional buying, traditional e-commerce buying. You see that a lot with the DTC brands who have their own, e-commerce environments. But you also see a big shift into social. There was around 180% increase in searches related to the TikTok shop. So if you consider that, in the past, TikTok was a great venue for brand discovery. It was kind of like a PR tactic in a way. But now it's much more than that. It allows consumers to really close the loop and make a purchase very quickly. So it went beyond just a discovery tool as it used to be. And I think that brands that are smart about reaching their target audiences are going to put more focus on those types of shoppings environments, because shopping windows are becoming shorter and shorter, and consumers want to feel good about the decisions that they make, and the social environment is allowing them to do that.
I mean, how do we break down generationally, or just bring us with people who are on TikTok? Who is the person that's spending right now? What do they seem like? What are their views on gifting? Is it mainly parents that are coming into TikTok and doing it? What are you seeing in terms of the Gen Z cohort as well?
We see the full gamut. I think that if you look at some of the brands that were mentioned in our research, some of them cater to younger audiences, others cater to older audiences. So we see really the full range. I think that sometimes people assume that TikTok and those types of environments are a better fit for the younger generations, but based on what we're seeing, it's actually the full range. And that's just the beginning, right? With the introduction of LLMs and creating shoppable experiences with LLMs, I think that we're going to see more and more, shopping experiences becoming more focused and shorter. And again, consumers will want to feel good about what the decisions that they made. Reducing that level of anxiety or FOMO is going to be key to those brands that are interested in being successful in these environments.
Michelle, I think we're just starting to see consumers, broadly defined, starting to get a little bit comfortable with AI and how AI might be helpful to them. Probably can say the same thing about retailers. How are they using AI? Just give us an overview of kind of what we learned maybe during this shopping shopping season. Was AI prominent with the consumer, with the retailer?
I think we're in early stages of that. I do think that there are certain verticals in the market that are already taking advantage of, consumers' ability to find the right solution for them. I think travel is a great example for that. I mean, think about how much time you normally spend in finding the best flight or the best hotel, and using AI in order to do that work for you, using agents, is going to reduce a lot of that FOMO or anxiety that people normally have when they search for travel. And travel is one of our biggest verticals, and we always look at what can travel clients or brands can do better. And I think that they are ahead of the game, and I'm expecting others in retail, in other areas, to follow suit and optimize, in the same way that they used to optimize for web searches, to optimize for how their brands appear in those LLM AI environments.
So this year, though, Michelle, talk to us. Is it still e-commerce taking share from bricks and mortar, or do we have maybe kind of a new status quo there between e-commerce and bricks and mortar?
I think that one interesting thing that we saw was actually digital subscriptions. I think that those generate this, instant value. You don't need to wait for a product to be delivered. And in the past, those types of products had a stigma to them that they were not thoughtful enough or not specific enough to the person that you were trying to gift. And we've seen that shift over time. I think that, based on the data that we're seeing this year, we saw some strong signals that digital products now carry as much weight as physical products, especially when time is scarce. And I think that what makes it even more interesting is if you look at the types of products that were being promoted, Kindle Unlimited or Peloton, those also give a nod to everyone's New Year's resolutions, right? And making sure that there is some alignment between the gift and what people are trying to do in Q1 or Q5, as we sometimes call it internally.
All about the wellness. Michelle Alon, Chief Business Officer over at Verve. Verve connecting advertisers to publishers across emerging channels. Great to get your expertise today. Thank you very much indeed. Meanwhile, still ahead, we're counting you down to the opening bell on Wall Street and taking a look at the best and the worst, Paul, IPOs of 2025, because 2026 is going to be a big year for them.
Yeah, it was a good IPO year. I think that's kind of what we saw. And the bankers are talking about a big backlog for 2026. And as long as I think we got volatility low, markets at all-time highs. I mean, I used to do this for a business. If you can't get deals done today, you just need to step aside, because I think this is a great market to bring stuff out.
Are we going to see a $1.5 trillion SpaceX IPO? That is the question.
Yes, yeah, exactly right. All right, looking at the markets here, as you would expect the day after Christmas, quiescent, as TK would say. We got pretty much unchanged on the S&P. The Dow's down 30 points and the Nasdaq's up 22. So not a whole lot happening there. No big deal. The European markets are closed. That's that whole Boxing Day thing over in the UK, which
they got the right idea over there.
They've got the right idea. I love that whole thing. The bond market, 10-year treasuries, we're in this range, folks, 4.11%. We're going to be sticking there. You talk to some of the rate strategists out there, and they're saying 3.75, 4.25 for the 10-year. That's kind of where it is. And I'll tell you, for the folks out there who are sitting on mortgages, 6.3% on the 30-year fixed. I need that thing to come down. I need a 5 handle on that thing, but we're just not seeing it. We're going to have more coming up. This is Bloomberg Markets. Good morning.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities. It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at midnight Eastern Time, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome to Bloomberg Markets. Seconds away from the opening bell. Who is out there trading it? Not many people, it feels like, but we are near record highs.
Driving up today from the shore on the Parkway and the Jersey Turnpike, nothing. I didn't see anybody. More deer than I saw cars. So I'm not sure who's going to be trading here today, but we're going to be here, Caroline, bringing it all to you.
And we're going to be giving some big superlatives because we are basically at record highs, there or thereabouts. If you're looking at the S&P 500, NASDAQ's been trying to march its way towards it, but global stocks, the MXWD as it's known, basically the global indices have all been at record highs, and we were up for like 7 straight days. There we have it. The cheering on probably relatively quiet. Oh, look, she's got her hands over her ears over the NASDAQ today. But we're seeing the NASDAQ 100 futures still pointing higher, and we're expecting the NASDAQ to open a little bit into the green along with the S&P.
Yeah, it's just been an extraordinary year, 2025, across risk markets in general, with the equity markets up, the S&P up 17, 18, the NASDAQ up 21, 22. And then, of course, if you're in the bond market, high single-digit total returns. You got paid for risk with leveraged loans and high yield and mortgage-backed securities. And then, of course, if you're in precious metals.
Boy, have you had a nice time. Well done, anyone who's had silver. We're up 150% this year.
Exactly right. And copper, Dr. Copper, that's hitting highs as well. So pretty much across the board. And, of course, outside of the U.S., equity markets even better, particularly on a local currency basis.
Yeah, having a lovely time, particularly when you're factoring in that US dollar, indeed. Look, let's get the take on how you play this into 2026 as we digest what is 1.7, shall we say, points higher on the S&P 500. We're not going to look at the day, we're going to look at the year, and we're going to look at what 2026 brings too with Carol Pepper, Paul. We've got the perfect guest.
Absolutely. Carol Pepper, Pepper International CEO. Carol, again, Carolina and I were just kind of going over the total returns here in 2025. What's the conversation you're having with your family office clients about 2026?
Yeah, well, family offices are excited about this strong rally. And although some of them still sat a bit on the sidelines during 25, because in the beginning of the year, it did look a bit dicey, they're all ready to
All right, guys, I'm back. What do we got here at the
investing.
open? Are we
So
going
I
to
think
work
it's gonna
down
be a very
today?
strong year. The fundamentals are there.
Or are we
We
just
got
playing
that
around the
we got a
VWAP
rate cut in December, which is phenomenal.
for a while?
The markets
Giving
are
fake
strong.
signals.
Strong
Hey,
underpinnings,
Matthew,
and
how
so
you
I
doing,
think
man?
people are going to be going
Merry
in
Christmas.
early on. And as you say, if you can't make a deal in this market, go home, because it's going to be a fantastic market in 26.
How much risk
Thank you.
do you think your clients are going to be looking to take here after 3 strong years of equity returns? Are they maybe looking outside of traditional public equity for maybe some other areas that might generate return?
Health, and again, money. That's
Family
right.
offices are always interested in alternative investments and non-correlated assets because
Health and money.
we create asset allocations that last for generations, and portfolios are each tailored to the particular purpose of that portfolio. So for
All right, so it looks like we're going to just dink around the VWAP here for a little bit till we decide what side we're going to end up on. We're in kind of VWAP chop mode again. You got the ES and NQ on the same side of the VWAP.
through private debt deals
For me,
and private hedge funds that are funding
for me,
these
that's
plays,
not.
but
I
those
don't.
things will begin to come
I
into
can't
the
dig
public
that.
markets as well.
I'm not into it. So
AI,
I'm going to give this probably at least, you know, same as always. There's just no news, so it'll probably settle in quicker when there's no news, and see what side of the VWAP we end up on for both the ES and NQ together. But all right, I'm kind of just working on some side stuff all day long. I don't go back to real work until the 5th, so
anticipating some mega IPOs,
give me a chance
in the AI world. We're expecting maybe SpaceX
to get the things for the stream and everything else done
could well tap the markets.
that my list has been piling up on.
To gain access through the private markets.
Yeah. Oh, hey, I made a.
Do you think though that actually there's more
I made a candle ripper or a red candle face ripper emote.
Because you'll have an even larger capital base, and they're just getting started.
That's the face ripper down candle emote.
If you think about how quickly the internet changed, double, triple, quadruple that rate of change. So even though we've got cutting edge chips today from NVIDIA, we don't know what they're going to look like even by the end of the year.
Welcome.
Data centers that are the
and then you got the Shrek for the up candle.
To the size of shipping.
I'm running out of spots for emotes. We've been doing a pretty good job at
huge office buildings,
coming up with stuff for the community.
to handle all
that's
the
the Shrek, and then here's the Bugatti.
Tremendous change happening in the AI space, and as that happens,
and then everybody's favorite.
Capital. So yes, when it comes public, obviously the first few days is going to drift down. That's when you grab it. Or on a fear day.
Port Friday.
It's not like we're not going to have fear days in 26. We always have fear days, but yes, there will be opportunities.
All right, I'll be back in a little bit, guys.
That trend, stick it in your child's college account or in your retirement account, and just let it run.
But how much is the AI bubble going to be the fear trend? Look, we've had this on again, off again. It feels as though people have bought back into AI optimism just in the last couple of weeks. But since October and onwards, we've had these fleeting moments of panic, really, that the debt that's getting loaded onto certain companies, or indeed just whether the productivity gains are going to be enough to vindicate the amount of infrastructure investment that we're seeing.
Well, they will. It's just a question of timing, honestly. And the good part for the AI companies, unlike during the dot-com, these companies have a boatload of cash. If you recall, during the dot-com era, people were, basically buying on vaporware with no cash, no earnings, no nothing. And in this case, there is a massive cash hoard behind a lot of these plays. They learn their lessons, and so they're ready to ride through those periods when there's doubt, because other things are happening in the world besides AI. So I don't think we're going to see that kind of a yes, other things are happening, whether they notice it or not.
Carol, 2026 is an election year, and that presumably will bring some level of uncertainty back into the marketplace. How much of a risk, if any, is that to you?
I think it's going to be a lot of noise. I mean, unless you have an impeachment of the president due to a regime change in the House or the Senate, it will be noise. There'll be a lot of noise. Epstein is a disgusting situation, but again, not economically changing the country's profile. So as long as there's more steadiness this year, hopefully, on the direction of the economics, and hopefully some further relief on tariffs, you'll see the market happy enough. And it's still an open question of who's going to win the midterms, but it will be something that will take up a lot of airtime, but not necessarily a lot of economic change per se for the markets.
Carol, it's been great getting your expertise as we wrap up this year, an extraordinary year of record high on the S&P 500 as we speak. Carol Pepper, great to have some time, Pepper International CEO. Meanwhile, global companies, we've just been talking a little bit about IPOs. They've raised almost $80 billion, Paul, on the US stock exchanges this year. It's the highest number since 2021. Let's think about what we saw, what we're likely to foresee for 2026, the winners and the losers. I'm pleased to say Bloomberg's Natalia Knežević is with us. Let's talk about the best performers in terms of IPO for 2025 first. Let's go optimistic.
Yes, so right. Let's first of all also take a look at overall performance of IPOs. If we look at IPO Go function on Bloomberg Terminal, exclude all SPACs, all companies that went public this year returned 19.6%, basically beating the S&P 500, which is already really good. Now, in terms of the biggest stories, successful stories, right? We should talk about AI first of all, as you just discussed with your guests. So first of all, of course, CoreWeave. That was one of the biggest also stories on the AI infrastructure. The stock is up by almost 100% this year. There was some volatility. Traders were a little bit concerned about companies' debt, profitability path, but the latest earnings report was really supportive. But then in terms of other big gainers, of course, on the cryptocurrency space, we had this big IPO Circle. The stock gained by almost 280% during the 5 trading sessions. Now returns are somewhere around 160%. Right. So these are the two standouts, but then we have lots of stories on the flip side which did not do really well.
Is it a story in 2025 of if you've got an AI theme, it works. If you don't, maybe not so much?
I think it depends, and I feel that investors are becoming much more selective. So, for example, on the AI infrastructure story, we had Fermi. This is also AI data centers. The company went public. It is an unprofitable business. It doesn't have any firm contracts with clients, and we see that the stock was really punished. Now it is trading by almost 60% below its IPO price. And the same story is in crypto. Yes, we had this macro volatility in the cryptocurrency space, but then look at company Gemini, for example. Yes, we did see some gains during the first day of trading, but then the stock fell below its IPO price within just the first couple days of trading. It's now down by almost 60%, I believe. Yes, 60% from the IPO price. So investors are becoming much more selective. They want to see profitability path. They want to see clear, growth, revenue picture, clients, etc. So even within AI and crypto, there are some disappointments.
We got the stock market at all-time highs. I got a VIX with 14. Back when I was doing that IPOs thing for a living, we'd do 2 or 3 deals a week. I don't know what these people are waiting for. We had Scott Sperling on earlier this morning on Bloomberg Surveillance. He's the CEO of T.H. Lee Partners, one of the biggest private equity firms out there. He sounded pretty optimistic about kind of what he's seeing out there and for 2026 for the IPO market. Is that shared by the street, do you think?
I think so, but also last year, this time, people were saying that 2025 will be the year of IPOs, right? But then we had this volatility, tariffs, the government shutdown, but nevertheless, companies went public. Now everyone is saying that 2026 will be the year of IPOs, and we do have some big companies that could potentially go public, and people are very optimistic.
All right. I think the interest rates coming down, stocks at all-time high. You pick up the phone, you start making some phone calls, and that's how you get deals done. Natalia Knežević from Bloomberg News. We appreciate getting your thoughts there. Here's some other stories that we're keeping our eyes on. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government. Defense Secretary Pete Hegseth warning more strikes could be coming.
Meanwhile, oil prices, they're headed for their biggest weekly gain since late October. The spike comes amid the partial U.S. blockade of crude shipments from Venezuela and that military strike by Washington in Nigeria, Paul, that you speak of. Look, sources telling us here at Bloomberg that the White House has ordered commanders to overall quarantine Venezuelan oil for the next 2 months, which could keep prices elevated.
All right. Holiday travel, people are right smack in the middle of it. Holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. We haven't had nothing's. It's clear out. Why are they? I don't get this whole thing. Forecasters are expecting up to 8 inches of snow from Friday afternoon through Saturday, and New York City is issuing a travel advisory for the duration of the storm. I guess I won't be taking the Vespa out this weekend.
Oh. Open top? No.
My little Vespa scooter, I did ride it yesterday, Christmas Day on the Jersey Shore, so that's never happened before. They were good. They were good. So we'll see. All right, coming up, we'll take a look at the AI race. We'll get to speak with Stephen Witt, the author of The Thinking Machine, Jensen Huang, NVIDIA, and the world's most coveted microchip. This is a Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
We welcome you to some pretty thin volume trading on this day after Christmas, 26th of December. We are at record highs on the S&P 500. Look, in large part, we reflect on how AI has outperformed for the year of 2025. NVIDIA shares, they're up nearly 40% this year, nearly doubling the performance than that of the NASDAQ 100. And the company's Blackwell chip in particular is becoming the engine of the AI industry this year. Now, in an exclusive interview, the company CEO, Jensen Huang, spoke to my usual co-anchor, Mr. Ed Ludlow, about Blackwell and says he sees no sign of it slowing down. Take a listen.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong. But we've planned our supply chain incredibly well. We have the largest supply chain in the world, but we've got a bunch of Blackwells to sell.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast, the guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally.
During the call, the US Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the US has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that will continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Jensen Huang speaking to our own Ed Ludlow after their previous earnings. A lot has happened since those earnings, though. And there has been this sudden awakening of competition in the market for NVIDIA, Paul. We've seen particularly the Alphabet story, the use of TPUs, the fact that maybe other companies such as Meta might start using TPUs other than just Google in its own vertically integrated business model. NVIDIA responding late on Christmas Eve, on the 24th of December, a statement was put out. NVIDIA has agreed to a licensing deal with the AI startup Grok with a Q, so not to be mixed up with Grok with a K, which of course is Elon Musk's X one, but this is Grok with a Q, which is all about inference. It's all about new types of chips to make it far swifter in data centers. Now we understand that NVIDIA is going to be taking on a licensing agreement and also going to be absorbing the CEO, Jonathan Ross, and other executives into NVIDIA. We've got the perfect person to be discussing where NVIDIA is in the competition landscape. Stephen Witt, the author of The Thinking Machine, which is the FT's 2025 Business Book of the Year, is here with us. You really detail the story of NVIDIA, its dominance of Jensen Huang, but we are starting to see this anxiety build that are they going to own the market share for inference in the same way that they have for training of models? What do you make of it, Stephen?
Yeah, well, for now, they do own it. I mean, their inference chips are very successful. The majority of what happens is the first they sell the first generation chips for training, as those get deprecated over time to rotate into an inference role. So for right now, they're kind of in charge. But there's a lot of competition, particularly, as you mentioned, from Alphabet, from Google. Google's latest AI, Gemini, was trained outside of the NVIDIA ecosystem on Google's own in-house chip, the Tensor Processing Unit. And Grok, this acquisition they just made at $20 billion, their largest acquisition ever, NVIDIA's largest acquisition ever, is former Google employees who worked on the TPU stack. So you can sort of see this maybe as a defensive acquisition in some ways. I know Jensen and other executives within NVIDIA are very concerned about the threat that Google in particular poses.
So, Stephen, here, I don't know, I think I'm on the bunny slopes of my use of AI at this point here, let's be honest. But Google's Gemini, that seems like a viable competitor out there in the marketplace to ChatGPT and some others. How is that shaking out?
Yeah, I mean, it is, at least in terms of like the evaluations. Independent benchmarks show that Gemini is in fact the most advanced model right now. Now, those things tend to leapfrog very quickly, so I'm sure ChatGPT will catch up. But Gemini is 100% right at the top, or right next to ChatGPT. And this creates a lot of potential risk for NVIDIA because, as I say, Google isn't using NVIDIA's platform. They built their own thing. ChatGPT, still has 800 million users. So it has that huge kind of like embedded user base. And it is still, when we talk about AI, we still say, the public that is, still says chat first before Gemini. So they kind of have first mover advantage. That gives them, some kind of play. Also, the kind of software stack that we've built to run on TPUs isn't quite as sophisticated or as advanced as the thing NVIDIA uses, the CUDA platform. So NVIDIA for now remains the industry default. It's going to be tough for Google to catch up. They really have to come out with a product that isn't just a little better than what NVIDIA does, but a lot better. And that would convince people to go through the difficult work of shifting their AI infrastructure over to Google's platform. It could happen, though. I mean, there's a world where NVIDIA loses this race. Yep. Having said that, I know Jensen is completely focused on this. This Grok acquisition, as I say, NVIDIA's largest acquisition, is entirely about Google.
Stephen, I'm probably like a lot of other folks in the marketplace, just blown away about the dollars that are being invested in AI. 10 billion here, 20 billion there, these circular deals. A lot of folks are saying this is a make or break year for AI. You need to really show me, you being the marketplace and these folks that are spending money, you need to show me a real return on investment here. How do you think that plays out this year?
Yeah, I think CFOs are going to start taking a more critical look at the spend, the CapEx spend on some of these chips. This stuff is not cheap to train. We are brute forcing our way to AI. It is heavy industry, it is heavy capital costs. And it has to show some kind of return on investment, like now, like this year. That's especially true for enterprise AI, which so far has been, I think, pretty disappointing. We haven't seen that big enterprise AI kind of software bundle that we need to make this viable economically. There's been a lot of, frankly, vaporware coming out of the enterprise AI space. A lot of expensive training runs for AI that were commissioned that produced really what were basically broken and unusable toys. I don't think that can happen again this year if these companies want to maintain these sky-high valuations.
Right.
They have to start delivering something. I mean, I know NVIDIA is aware of this problem. I know they're working on it. I know OpenAI and Anthropic and all the major AI players are aware of this problem too. Some enterprise AI like Cursor is delivering a very viable, kind of very attractive ROI. We need 10 more of those, though, to make this investment spend worth it.
Yep.
We have to see if we're going to get it in 2026. To me, it's the question facing AI.
All right. Stephen, thank you so much. Really appreciate it. Stephen Witt, he is the author of the book, The Thinking Machine, which was the FT's 2025 Business Book of the Year. We didn't even get to robotics. We had a guest come in a few days ago talking about bringing AI into robotics, making them more humanoid, and that is a huge use case for some people out there. So,
do you want one in your kitchen?
No, I'm not really happy with Alexa being there, but I mean, so we'll see how it goes. We got the Roomba, though. We got the Roomba, and that kind of...
Rest in peace, Roomba.
Yes, exactly right. We got it. I know. But I think that's a scam, but I've been told it actually does work, so we'll see how that plays out.
I love that.
Not much happening out there, folks. Let's be honest. The S&P's up 5, the Dow's up 1, and the NASDAQ is up 9. We're going to have more coming up. This is Bloomberg Markets on the Friday after Christmas. Good night.
In case you missed it on Balance of Power.
Let's play a game. Who's your favorite recording artist? Kiss. No, come on. Somebody from the past,
Why can't
present,
we go
or
with
future.
that? All right, Jimi Hendrix.
Jimi Hendrix has never, in his entire career or now, ever gotten paid a single penny when his music is played on AM and FM radio. The stunning fact is that the Russians and some other countries actually do pay performing artists on radio, and Americans do not. And this has got to change and should change. No matter who you hear on AM and FM radio, they're getting 0 pennies for the airplay. The new artists, every penny counts. And the fact that they can be played on radio and not even make 1 penny for their performance is criminal.
Don't miss Balance of Power live every weekday.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg Markets. I'm Caroline Hyde.
And I'm Paul Sweeney.
We've got a lot to digest. Even if the market moves are a little petite on this day after Christmas, it is a full day's trading, folks, here in New York City. And Paul, stocks look like they're going to extend the year-end rally. We're growing optimistic about the economy, about corporate earnings.
Yeah, I think that's fine. We can skate right into the new year. I think everybody would take the returns we've had so far. There's some geopolitical news out there. The U.S. Launching a military strike on Nigeria against Islamic State targets in collaboration with the African nations U.S. government. We'll have continuing news on that.
And we will also return to the weather. There's flooding in Southern California and snow in New York City. Apparently, they're causing major disruptions to post-holiday travel for millions of Americans and energy as well. We're going to get the inside track on that.
Yeah, I've seen some amazing video of the rain in Southern California, but I've also seen, since I'm a skier, I follow all the ski resorts out there in the West and the
all right, guys,
Lake Tahoe area.
Taking care of some stuff. I'm on hold, but it looks like this is a pretty aggressive move down. Any news come out or anything indicate why we might be doing
in terms
this?
of actually skiing in the snow there, I mean, this is generally middle-class woes conversation going on, but I think there's also some real warnings on Lake Tahoe at the moment.
Make sure it's
You've got
not
to stay
chop.
safe if you're out there at the moment.
Yeah, when they get snow.
Oh, hey, I did.
Big time snow here. Let's go back to these markets. Economics. We're finally starting to get economic data from the federal government. We got some data on the labor market.
Hey, Just Luck, how you doing?
For how this economy
Just Luck
these days. Lauren Seidel Baker. She's an economist at ITR. Economics joins us here. Lauren, again, we are starting to get a deluge of government-released economic data. What are some of the highlights that you've seen in the last week or two in terms of this U.S. economy?
Yeah, it's
last week was GDP. We got a very strong result, and that was driven by the consumer. Consumer spending is really holding up well.
Closing rate should have known. Weird started earlier in London.
We're missing certain data points.
Yeah, if you got profit, man, I don't know.
All in all, this is still
I'm not going to be too aggressive. I'm going to have a really good setup.
Even with inflation being a little
oh, I did make. I made our just.
It's
a trap. Hold on.
They're able to go out and spend not just in this holiday shopping season. The GDP data that's actually quite backward looking at this point.
It's a trap!
And the willingness to be out there spending their money.
Lauren, I am hearing, though, anecdotally, even...
It's a trap!
People have a lot of anxiety.
So careful, bears. It might be a trap.
Of holding on to their jobs that they currently have at the moment. Yes, they might be getting wage increases, but how are people dealing with the idea that AI is...
We have no real catalyst today that's on the schedule, so...
That's very true.
We'll just have to see what the smart money's thinking, I guess.
Every measure that we see of consumer sentiment, of consumer expectations, that has not been doing well data-wise. However, it's very interesting once you compare that soft data, as I call it, the consumer expectations numbers, to something hard like retail spending. We don't find a very strong correlation. It seems like people can feel one way, but still go out to the store and spend more, even if it doesn't quite mesh up emotionally, mentally with us. The only category of spending that we see a very strong correlation between consumer feelings and how they're actually spending their money is in those big ticket purchases. So things like cars, auto retail sales, we will see those probably suffer from a consumer just feeling a little bit more dour. But the typical categories that really do drive the bulk of our retail spending, those tend to be smaller things all accumulating together, and those are doing quite well right now.
YOLOing. Maybe not on a car, maybe on a Vespa if you're one Paul Sweeney. But therefore, the setup into 2026, we're feeling one thing, we're still spending, even if perhaps we've got a bit of anxiety. Where does the interest rate...
It's a trap!
Are we actually going to get the cuts that
I've been busy making
because
stuff.
The economy does seem to be relatively resilient.
How you doing, Just Luck? Are you a futures trader? What instrument do you trade? NQES?
We're getting into an interesting
There's a lot of people working gold lately too. I've noticed gold seems to have been pretty good lately.
The Federal Reserve Chair in May. We'll see. Again, we're very much expecting to see more dovish voices.
I'm off from regular work until the 5th of January, so I'm just working on all the odds and ends to make things better around here.
Policy, I personally don't think so.
Well, I got the time.
Start to see inflation
taking care of some life stuff.
Again, we don't want to see the inflation get out of control, so the Fed might be limited in how many.
Is anyone out there card traders, card traders, baseball card collectors, or any type of cards? Anyone collect cards?
What they're really feeling is how those interest rates impact them, whether that's through a mortgage, through your credit card rate.
Anyone heard of ETOPS? The very first time where they would let you buy cards on an IPO and save them in the vault.
Those are not being passed through to actual borrowing costs on a one-to-one ratio. Yes, they're directionally moving that way, but I think the bond market is a little bit more worried about inflation, so we might still get these headlines of potentially more rate cuts. But for actual borrowing costs for both individuals, for companies, even for our government, I'm not seeing that full amount of pass-through. So looking for interest rates really to not go so much lower. I think we're in for long-term upward movement in rates to combat this rising inflation.
Right now I'm in a short, but I want to wait. Confirmations up here around the VWAP in order for me to actually take a trade. And who knows if we're going to bounce off that VWAP? So we kind of got to be careful. We're only working on 10 o'clock now, so
some of the concerns from tariffs. What's your inflation call these days?
So my inflation call is for upward movement. Again, we will see the path of revisions. We'll never know that until we know. At this point, we are seeing, especially with the CPI, just the workforce reductions, right? The accuracy of that rate, how many data points are imputed, that is calling into question the real validity of the data. If anything, we're probably going to get inflation stated to the downside rather than the upside. That's how the mechanism tends to move. So I'm personally concerned that inflation might be a bit higher than these numbers we're getting on a headline basis. But even still, we are still above that 2% rate that the Federal Reserve is looking for. We're still seeing inflation be a little bit more persistent, a little bit stickier, and the fundamental drivers, just the amount of liquidity out there.
just looking at news, I've got nothing saying it's going to do one thing or another.
Not to mention energy costs with all of these data centers and AI. Just
ES is very similar. It's very organized right now. If we reject the VWAP on the ES, then you know, we're looking pretty good to maybe get in on that short, I think. But we'll just have to wait and see. I mean, we could blow right through.
As I understand it,
we don't, you
people
know,
were out. They were shopping. They were clicking.
we don't really have anything yet. I could take the short anytime according to the strategy.
Again, the consumer is
I'm just waiting for a good confirmation candle off a zone I trust.
Still out there spending.
You know, like on the NQ, I really like the 200 EMA as the 20 EMA crosses it. The 200 EMA is the white dot dash. The 20 EMA is the yellow. I really like that as they cross as maybe a possible confirmation to go short, a rejection. We even got the 50 EMA starting to flirt with the VWAP. This is all good. This is all really, this is a lot of, this is a high resistance area.
They're worried about their job, are more likely to be employed today, are enjoying
it's kind of making the case that we have a chance at working short for the day, but you never know. There's not very much volume.
Very comfortable position. So that is the bulk of our retail spending. It's those types of cohorts who really drive the majority of the activity out there. That's why I think we had a pretty healthy holiday shopping season. But even if we were to say seasonally adjust this, right? I think we're on a pretty good trajectory for our consumers' ability
Say
to
hi
be
to
out
everybody
there, to be
today.
spending money.
Who we got out there? We got
Baker.
Adam Ski. How you doing? AO. DF1. Dev Element. Fairy King. How you doing? Hogwarts. Ken Twall. Cooch. The Cooch is here. 335I.
If you are over in California,
is that a BMW?
Time
the Cooch 335. Ladioff, how you doing? From France. Let's get weird.
We've seen
Mr. Lido, Scotty, and Admar. How you guys doing? That's everybody that's listed in the chat room. If you're listening, and I didn't mention you, I didn't see your name in here.
Everyone wants to read about the disruptions in the holiday travel. I mean, many worrying about their
flights being cancelled from
New York's major airports. Josh
Keep it
was
weird.
with us to hit local storms further afield.
So
flooding.
just kind of taking it easy, not looking to get too
first.
aggressive today.
How once in a however many years situation is this? What is the confluence of events that have led
I'm
to
on
so many
hold with
deaths?
Topps, the baseball card company. Well, they make every card. The card,
meaning,
you know, sports cards.
Every 5 to 10 years.
I was in the ETOPS program when it first came out, like in the early 2000s. They ended that program, and I got thousands of cards that they need to ship to
a
me.
huge amount of water, right? A huge amount of moisture right across the ocean. And the problem with this one is it's striking the mountains on the California coast at a perfect perpendicular angle. So then when that moisture is driven up into colder air, it forms rain, and that's why we're getting this historic amount of rain falling onto these coastal areas.
My son, number 3 offspring, lives in works in Los Angeles, and he pinged me a couple days ago and said, I've never seen rain like this. These people are crazy out here. I mean, it just comes down, and you can't see it comes down so heavy, and it just keeps going.
Southern
and going
California
and going.
faces floods.
It's feast or famine, but in Northern California, huge snow is they're getting up there. Amazing amounts of snow. So what, in Southern California, they're not used to, I mean, they have hard ground, so they get a lot of flooding issues. How bad is that?
Flash flood warnings all over the place, evacuation orders as well. Everyone should be very careful and stay off the streets, not drive around until these orders are lifted. And one thing to really watch out for
I'm kind of liking the short
earlier
here.
this year, we had these terrible historic wildfires that burned up areas there, and the burn scars that
I don't know
wildfires
about that
leave
entry
are
right
actually
here. I'd like
worse
to see
for
something
flash
up
flooding.
here.
It kills all the vegetation, and it makes the ground surface
willing to wait.
impermeable closer to a concrete surface. That means that water is just coming straight off
I'm willing
of
to
that.
wait to see
So
if we
areas
challenge
all
this
to
again
do
with,
that,
Palisades.
it's still
and the
early.
Palisades, thank you. Those areas are going to have worse flooding and worse water runoff because of that burn damage.
All right, those folks are some hardy souls out there. They deal with a lot of stuff. All right,
I mean, the point here is to make money, right?
Metro,
Sky high stacks.
That's kind of the latest there.
I just biked in, and the cold cut right through my gloves.
I biked
it is really cold.
Where did you bike
ran
in from?
You ran in, right? Lower East Side. Lower East Side.
You know,
So
the subway's
kinda
perfectly
straight
good
up
subway
Second
system in
Avenue.
this
I know.
place.
I don't know. I can't explain it. So what we're going to see later is starting at around 4 o'clock. We could see a lot of snow. More snow than we've seen maybe since 2022. Could be between we're set to get here in New York City between 5 to 9 inches.
But why do they cancel the flights now? I mean, you and I were on a bike because still we're relatively snow-free on the roads. Why are the flights being cancelled now?
I think in order to prepare so that they don't get backed up as they get further to the point when the snow really starts. Although that's a good question. But yeah, we've seen close to 400 flight cancellations already in New York City's 3 major airports. So a lot of flights backed up. I don't want to blame the victim here, but why would you book flights to fly the day after Christmas? It sounds like a bad
I have a
idea
few
to me.
friends doing it.
Yeah, well, good luck to them.
You leave the boxes behind, friend. That's the thing.
Yes.
You escape the chaos.
Exactly. I don't know. It's interesting. I think they probably don't want a bunch of planes sitting here in the New York metro area that they can't get out for a few days, maybe. So I don't know. Maybe it's something like that.
Josh Saul, it's important to get your voice on. Thank you very much for weathering the cold, coming in, talking to us.
It's always easy to blame the airlines, I find.
Yeah.
I have no problem blaming airlines for anything, so, but they try. I try not to blame the individuals at the airport.
Yeah.
I try to be nice to those folks.
And we try
but
and
just
thank them when they're working
define
in a
the
government
airline
shutdown.
industry, kind of like the drug industry. Boy, the prices of drugs are high. You can.
Inanimate objects rather than individual people.
Yeah.
Play nice. Yeah, people are apparently not being nice to my train staff today.
Oh, really?
Getting lectured by people. Guys, it's the spirit of giving. Be kind to those who are working on your holidays.
It's absolutely right. I'll be on New Jersey Transit today.
Yeah.
They're working hard.
They are. Meanwhile, what's working hard? Maybe the odd trader. I don't know. They're probably sat there twiddling their thumbs right now because the volume is next to nothing. But we are near record highs. Why would you mess this up? We're just off by 3 points in the S&P 500. Your average volume is off by 50% compared to usual. But clearly, this has just been a nice little run higher in stocks as we've anticipated the end of the year and people shutting up their books.
All right, coming up, we are going to get a look at the housing market outlook for 2026 with Janet Kuro of Bank of America. We've got rates coming down, the mortgage market coming down. Is that enough to free up some of these sellers that are sitting in their houses with 3% margins? This is Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
No, it's impossible.
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Probably very fast.
Lower here.
So exciting!
This season, we're along for the ride.
So we're challenging this fair value gap down here. The short signal was good. It was okay to get in around this zone.
More than what you need to know, it's what you
We
need
get
to think about.
we get a stochastic pullback and then a rollover. I think that would still be okay to stay in the short if we confirm.
The region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back. This is Bloomberg Markets. Caroline Hyde, Paul Sweeney here live in New York City. A chilly one for you today. We're going to delve in. We're going across asset for you because stocks are not doing
The point here is to make money, right?
to a tiny bit lower.
Sky high stacks.
It has been a juicy year for your stock market returns. What, though, of the housing market? Is anyone going to be tempted to actually move? Those baby boomers sat in their homes with their nice little mortgage rates of 3%. Will next year spell a little bit of an opening in that market? We can talk about it with Gina Kuro, Managing Director, Head of Agency and MBS Research over at Bank of America. Welcome to this holiday programming, Gina. And
thank you.
Are we going to see mortgage rates drop enough next year to tempt a little bit of selling?
It's a great question, and we do think mortgage rates are really the key to what's going to free up affordability. I don't want to be to disappoint. Our view is that mortgage rates are kind of sticky here, around 6.25. It's largely driven by the Treasury rate outlook, demand for the assets, and if there's any room where lenders can give more margins, but they've already come in quite a bit. So we do see rates pretty flat at 6.25.
Gina, you guys had a great year in 2025. You guys being the mortgage
I mean, the point here is to make money, right?
People want to
Sky high stacks.
Parties these days. What's the outlook for 2026 here? Can you meet that bar again?
Sure. So you're right. Mortgages had a pretty record return. I think the indices are set to end the year up 8%, which is the highest in decades. It's been a very strong year. I think next year, looking forward, we are still constructive on the asset. We think that a lot of demand from traditional investors is set to return to the market. I think if you look back at 2025, what we've noticed was a pretty meaningful absence from the overseas community. Overseas investors hold about 15% of mortgages, and they were largely sidelined due to a lot of this tariff back and forth, a lot of geopolitical constraints, and that looks more promising for next year. We've also seen increased buying from the mortgage REIT community, from the GSEs. Fannie and Freddie are starting to build back their portfolios again, so that is all constructive. And I do think if demand really does surprise meaningfully, then you do get some downturn in mortgage rates, and that could help free up refinanceability or some of that outlook that we were talking about before.
Fannie and Freddie, you mentioned there. Are we going to get IPOs of these things in 2026?
It's a great question. It's very Our view at Bank of America is it is a very, very complicated issue. The government still holds a massive stake in the companies. It's north of $330 billion, and that stake really does need to be addressed. And I think a lot of the proposals out there that argue for the IPO argue for a forgiveness of that stake. I don't necessarily think that it's just a complicated issue to forgive north of $330 billion. So.
What's also complicated is just where we are in terms of supply and demand.
The point here is to make money, right?
Coming into 2020.
Sky high stacks.
For those that are first-time buyers, second-time buyers, wanting to build a home.
It's a trap!
When we are seeing the older generation just staying in their homes for longer and longer.
Yeah, I'm glad you brought that up because I really do think an absence of supply is what's contributed to these, very, very high home prices that we've seen over the past several years since the pandemic. You have very high home prices and you have also mortgage rates lifting up, and it's created an affordability crunch. And like you said, Caroline, a lot of borrowers are locked in to their homes. I would say we see home prices stabilizing. So they're set to end 2025 at around up 1%. And next year, we see them actually flat on a nationwide level. But what's more interesting is if you drill down to different pockets of the country, there's a lot of regional disparity going on. So in the South and in the West, for example,
it's a trap.
Whether it's new construction, either for sale or for rent, which is also a very affordable option, or whether it's people looking to sell their homes, just wanting to move to different areas, and we are seeing uptick in inventories. Now, has that translated to an uptick in sales? Not necessarily. So Miami, for example, inventories increased about 15% and sales on the year are down 10%. But our view is, if you look at somewhere like the Northeast, that's still very much in a supply crunch. So I do think if there was any relaxation in rates, again, our view on rates is unchanged, but if we're wrong and rates do fall lower, then that should free up some supply, and that should be very much well received by demand.
I mean, how flexible are individuals right now? We had an executive from Compass on the day before Christmas talking about how they are starting to see perhaps some more movement from New York, New Jersey, wherever, going into Florida, going into Arizona and the like. Is that happening? Because from what all I can sense is that more people want their workers back in the office, there's less working from home, and therefore there's less freedom to sort of move up sticks and leave? Or is that more about your confidence in the economy as to whether you're willing to take the jump and move state?
I think there's really two things driving migration. One, like you said, is this ability for remote work, which we see as basically over. I mean, there is a huge pull back into the office and a pull to need to be where your home is. And I think that is fueling a lot of demand still in the Northeast. But there's always going to be the standard migratory pattern of people, want to retire and move from the north to Florida, and that's going to continue. So we're also seeing some migration into places like North Carolina or in the Midwest, where things are just a little bit more affordable.
I'm told that we have a housing crisis or a housing shortage in the U.S. How did we ever get here?
We've generally been underbuilt.
I mean, the point here is to make money, right? Sky high stacks.
Down on the amount of new homes that we're building. And then you layer that on with just the massive home price appreciation that we've had since the pandemic, which also fueled an intense need to move from city to suburb, or to buy a bigger home so you could have a home office, things like that. And it just all really compounded. So, yes, we are short. I think it's like 10 million units. It's a substantial number. And that's where we are.
I don't know. It's a crazy market out there, but the housing affordability is really an issue, particularly for the young people here. Gina, thanks so much for joining us. Gina Curra, Managing Director, Head of Agency, MBS Research at Bank of America. My story was I was a young investment banker, early 90s, couldn't afford a house in the Summit, New Jersey, where I wanted to live. We moved, we bought a house in Richmond, Virginia, which the cost was like 40% less.
Wow.
Then got a job down there.
Wow, you took that? Cool.
Yeah, exactly.
That's great.
I mean, I don't know. We were just so frustrated. We couldn't find anything up here. So I said, I'm calling my good buddy Jim Dunn down in Richmond, Virginia, and he had 20 houses within 15 minutes in my $150,000 range, 4-bedroom colonials. This was in the early 90s, and boom, we moved. So I know some people do that.
What drew you back then, the job?
Yeah, Salomon Brothers. Yeah. So, and they were paying me so I could live like a in this region, which is a very high cost region to live. So, so that happens, I guess. I mean, it still happens. It's always happened. Yeah. I guess it still happens, but it's just, I think the affordability issue, which is Drew Redding from Bloomberg Intelligence, says housing prices are up 50%, 50, since 2019. Plus, mortgage rates are much higher. So put those two together, the affordability issue is really tough for a lot of people, particularly young people who are trying to kind of start out here. So
and it goes global. And I think what's amazing is today's big take, if you're lucky enough to be able to read it, is all sort of around the Gen Z feeling of anger and inequality, but around the world we're seeing governments fall. You're seeing, writ large, this feeling that things aren't as easy as they certainly used to be. Go out, try and read that story, because I think it's a really interesting sort of global take on where we are in terms of access to housing, access to economic opportunity, access to work. A dystopian future is what many are worrying that we're facing. But It's one where if you've got assets, you do well, as is always the case. The global all-country world index right now trading at a record high.
Yep, absolutely. I've got, three in their late 20s, and they're kind of thinking about, they've been saving, they've been doing a 401k, they've been doing the company match, which I've told them since they were like 12, they have to do. But now that comes the next step, which is trying to buy some real assets. Like
it's a trap!
Particularly if you're anywhere near the New York City area.
Yeah,
So-
and with 6% mortgage rate.
Yeah, that's not enough. And it's, for new houses, the new builders, they'll buy down your mortgage rates
Yes.
to 4%. And that's fine for the new market. But how about the existing market? That's the problem. There's nobody out there who's going to subsidize your mortgage, I don't think. So, all right, coming up, details on the U.S. strike on ISIS
order
targets in Nigeria and how it is impacting the energy markets. I'm looking at Brent crude down about 69 cents here. We'll have more coming up. This is Bloomberg Markets.
Short. Short.
Order filled.
In case you missed it, on Bloomberg Open Interest.
Target filled.
Got a target on the ES filled.
Stop filled.
Target on the NQ filled.
You were dealing with the aftermath of the financial crisis, and you also had this problem of finding jobs.
Weakness in the labor market is not just the young people, it's also my generation, the baby boomers. 67% of companies said, we're not thinking about hiring right now. That will change. This is a great time to be alive, I think.
Don't miss Open Interest live weekdays.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
In case you missed it, on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Bloomberg Markets. It's a quiet day if you're looking at the stock market today. We are near or at record highs for the S&P, and certainly the Nasdaq has been having a nice run up. But where the action has been is resolutely in commodities.
Yes.
Record high on gold, record high on silver, record high on palladium, record high on copper, and then oil added to the equation. But not all of this is because people are desperate to be seeing the allure of certain high-end jewelry. This is about geopolitical risk.
It is.
So anyway, speaking to some of these anxieties, particularly when we think about what's just occurred, US strikes in Nigeria. And I'm pleased to say we can delve into what is a very serious side of what is a movement into commodities right now with Laura Davison over in Washington for us today. Did this take the world by surprise? There's certainly been a build-up of narrative coming from the administration that there was atrocities involving Christians in Nigeria, and it was in the work of ISIS. Now the US government, at the behest of the Nigerian government, takes action.
Yes, this really came as a surprise, particularly this, in the eve of Christmas Day, there being this strike on this Islamic State site in Nigeria. As you noted, this was done in conjunction with the Nigerian intelligence services and military. But the Nigerian government is really pushing back hard on the narrative that there is religious persecution happening in the country. They said, yes, there are terrorist attacks happening. This is a problem, but that Christians and Muslims are both targeted in these. This is really a narrative we've seen from Washington. Trump has mentioned several times. He's worried about the persecution of Christians. We even have Ted Cruz in the Senate who's tried to get Nigeria labeled as a country that persecutes Christians. But this, kind of the narrative, at least here, that really appeals to the MAGA base doesn't actually match what we're seeing in terms of the actual conditions on the ground.
More broadly, are we expecting anything to escalate from here? We know that there's been this move made. Is it sort of meant to be a preemptive strike to iron out any further risks of escalation or acts of atrocity or terrorism that's occurring in the country?
We don't know exactly what more is to come, though we do know that there will be something. Defense Secretary Pete Hegseth, said yesterday that there would be more of these attacks to come. Exactly the timing, the tenor, the location are all still very unclear. But what we are seeing is a real ramp up of U.S. military strikes across the globe. There were strikes in Syria last week, of course, the buildup in Venezuela. So this is part of a sort of a broader, more aggressive, more proactive U.S. military than we've seen in quite some time.
Laura, you're Washington Deputy Bureau Chief. You and your team, you have your finger on the pulse of what's happening in D.C. What's the feeling at the Pentagon these days about the use of military force in this Trump administration here? I'm thinking Yemen just most recently, but we also have a lot of action down in South America with Venezuela. What's the feeling coming out of the Pentagon these days?
Yeah, the Pentagon, has undergone a lot of turmoil. Both you have sort of longtime career folks who, are not necessarily in lockstep and where Hegseth is on a lot of these issues. You also have a lot of President Trump's base, his top political aides, both in the Pentagon and at the White House, who are really split on the approach here of, kind of having this more, kind of posture of the U.S. military, proactively taking some of these steps. Trump, as you might remember, campaigned on American First, getting out of these foreign conflicts rather than starting new ones. So particularly as the Republicans are headed into the midterms in 2026, they're defending their majorities in both the House and the Senate. There's a lot of political worries that this could, put a lot of, pressure on Republicans to have to defend some of these conflicts, which, at least Republican voters have said they don't want to be involved in.
Should we expect more of this? Oftentimes, second-term presidents, and they often spend more time on foreign policy than they do domestic policy. Is that something we should expect here with this administration?
That's certainly been true for at least the first year of Trump's term. He's really, has in some cases, almost ignored the economy. He has not been out on the trail talking about, his economic messaging, and instead he's really been focused on, the peace deal in Gaza. He's very much this week focused on Russia and Ukraine, much to sort of the, his top aides have not been pleased with this. They want to see him out there more talking about domestic issues, pocketbook issues, the issues that we know resonate with voters. Foreign policy, always ranks, single-digit percentages for what people care about most, whereas, economy, jobs, inflation, those are the things that voters say they want the president to be doing something on.
All right, very good. Laura Davison, thank you so much. We appreciate that. Laura's a Deputy Bureau Chief for our Washington Bureau down there in D.C. We were talking about some of these geopolitical issues out there and how they're impacting financial markets, including the commodity markets, including the global oil markets. We want to check in with Ellen Wald. She is joining us here. Ellen, you know, a lot of going on in the geopolitical markets impacting the global crude market, but we still got crude at low levels. Brent crude $61, WTI $57 here. What's your view of the supply and demand out there for global crude?
Yeah, I think a lot of what we're seeing right now is, first of all, kind of end of year, not a lot of trading going on in general, not a lot of people, working and trading a whole lot. But also, I do think that we are actually seeing a pullback because earlier this month, there were incredible hopes that we might see a resolution to the Russia-Ukraine conflict, and that would have brought a lot of oil back on the market. I think we're kind of seeing kind of a pullback from that. People are realizing like that's not actually going to happen that soon. I also think that we're also seeing a little bit of a pullback from a slight fear of a supply disruption regarding Venezuela. It's pretty clear that the only supply disruption that's going on is Venezuela's supply is not going to reach the rest of the world. But the issue there is that once the U.S. has commandeered this crude, and President Trump has said outright that he plans to just take the crude, put it into U.S. supplies, put it into the SPR and whatnot, and that actually introduces more supply into the system because this was crude oil that was sanctioned, was kind of being bought on the black market, but now it's being introduced into the larger supply, and so that's going to push prices down, believe it or not. Though I do think that it's not quite settled there. We're really going off of exactly what he said. So I think that there's a fear that we've got rising supply and that demand is not all that firm, that we could definitely see declining demand. I do think when we're looking ahead to 2026, though, that people are looking very closely at the U.S. Supply and whether it's going to start to show signs of pulling back.
Interesting. So maybe an issue of oversupply going into 2026, where U.S. becomes sort of a marginal barrel there. What's really interesting in some of your notes, and I'm thinking about today in particular, the move, we've got thin trading, but oil is lower. As you mentioned, maybe people are taking 3 steps ahead to think what Venezuela ultimately has in terms of impact on supply. But also, there is tentative, even though you seem to say it's a little bit ahead of its time, but there is some tentative optimism around a long-stalled Ukraine peace talk, at least, and Zelensky looking to visit President Trump in Florida, we understand. You make the leap that maybe all of this is something that then ultimately affects China. Can you talk us through as to why we see Venezuela and Russia maybe impacting China in a way that we should keep an eye on?
Yeah, exactly. So right now, China is a huge purchaser of Russian oil. They're also a purchaser of Venezuelan oil, not to the extent that they purchase Russian and Iranian crude, but still. And so really, this impacts China's supply. And China has really been kind of getting away with an incredible amount of very low-cost supply that they're buying off of this so-called black market. And, if some of this supply that they've been buying off the black market gets transitioned into the regular oil market, into regular supply, yes, it's going to push prices down overall, but China is going to start to have to pay more because they're paying such incredible discounts for their sanctioned oil that they're buying right now. So China could be kind of looking at this they probably are looking at this with a lot of interest in what's going to be the prices that we're going to have to pay for oil in 2026, given all of these shifting geopolitical factors. And so they may actually be anticipating having to pay more, whereas the rest of the world is looking at paying less.
Caroline, you may not know this, but I'm a big fan of the television show Landman. Okay. So I now consider myself an expert on all things oil and gas. So, Ellen, our good friends down in the oil patch, they can't be very happy with WTI with a 57 handle. What are they doing these days?
What are they doing? So it's really interesting because if you want to know, or if you want to get an idea about what's going on in the oil patch, yes, you could watch Landmen, or you could hop on over to the Dallas Federal Reserve, where they do a quarterly survey of oil producers and also oil services companies, and they will give you a little glimpse into the mind of what they're thinking. And so the latest survey has showed everything from things are looking up. I'm, not planning to reduce any production to I have to pay people to take my natural gas so that I can continue to produce. So I think the answer is it's really mixed. And some producers are looking at a better outlook, and other producers are looking at a much more dismal outlook. And I do think that depends a lot on exactly where they're producing and how they're producing and what their wells look like, because it's really become a very complex and game out there in terms of what kind of wells you have, what stage they're in, where you are in drilling, in terms of how much you're going to get per barrel.
This is a term that nobody in the oil business likes to hear, but is there a glut in global oil supply?
That depends who you ask. I think if you ask the IEA, they'll tell you yes, we're in a huge oil supply glut. If you ask OPEC, they're going to say no, it's definitely not as bad as the IEA seems. Now, why can we have these two competing answers? Well, because it's actually really hard to count all those barrels of oil out there. It's not like you just get a number out, a computer spits you a number for what's global consumption today. These are things that have to be measured, and it can be quite difficult, particularly with all of these sanctioned oil going on out there. So I can see why they're coming up with different answers.
Fascinating, always catching up with Ellen Wald of the Atlantic Council. She's also got a book, Saudi Inc.
Yeah.
We love to read that, so thank you for all the expertise when we are seeing a lot of volatility in the oil trade. Not much volatility elsewhere if you're looking at stocks. The VIX, though, really at an annual low. It feels pretty sanguine out there. And meanwhile, though, amid this geopolitical turmoil, you are seeing this search for safety. Gold, silver, palladium, you name it, on the higher side.
It's funny, when you talk to some of the futures and options people out there, the derivatives people, Amy Wu Silverman, for example, RBC, she's one of the smarter people that I talk to. I'm like, my question is, are your clients, our investors, are they buying risk or are they buying protection?
Yes.
And I when I ask that question, I assume it's going to be, they're buying protection because they're worried about it. And she's like, yeah, I've got people buying protection for the downside, but I've also got a lot of people that are still buying risk here. That's what makes a market. I get it.
Are they and it's institutional searching for that side of risk,
but
not just retail.
If I were sitting on the top of a diversified portfolio here, and I made money on my stocks, I made money on my bonds, I made money on my commodities, or whatever, my gold, I think I'd be buying some protection here. Maybe that's why I'm not in that business.
That's why you're a journalist.
Yes,
Paula.
exactly right. So, but it's interesting to see how the market's behaving.
It is, and particularly on this very low volume day, we are managing to be near record highs. And it's not just a US story. Global stocks are at record highs as well. But we want to think about some of the risks that we point towards in 2026. We've had some really interesting take from a couple of economists already on the show this morning, talking about how the labor market is looking. Yes, we have got unemployment creeping a little bit higher. A key risk factor is AI and what that means for the use of it in the workplace, the use of humans in the workplace. Are we going to be augmented? And what are the ways that women are being impacted? We're going to be going there next with Claire Brezhnev English, all about the win challenge. And this is about thinking how workplace innovation now can help level the playing field as we see a real disruption.
here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of that.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burnham in
Cards are
Florence,
still being
Italy,
fulfilled.
and this is Bloomberg.
December the 26th. We are live from New York. Paul Sweeney, Caroline Hyde, Bloomberg Markets. We are digesting very small moves in the markets today. If you're looking, though, near record highs on the S&P, we've had a lovely year, if you've been long tech stocks in particular. And that has been AI as the winning trade. In particular, the names such as NVIDIA, Alphabet have dominated. But what are the ramifications of generative AI? What is the implication for the workforce in particular? And what sort of transformation are we likely to see in 2026? There's been a lot of so-called, Paul, AI washing, people letting go of workers, but how much is that actually to do with AI? How much of that is tech legacy and not really right-sizing your workforce post-pandemic? We can talk about all of that now in terms of how workplaces are facing this rapid transformation and how women are dealing with it in particular, with Claire Bresnahan English, a Senior Director, Workplace Innovation Now Challenge. Now, you are working with the Aspen Institute, thinking about how AI is implicating women in particular, and most broadly, you're looking at how we can fill in AI skills gap and really address barriers for women. How do you see there being barriers at the moment when it comes to artificial intelligence?
As you said, Caroline, reskilling, upskilling is incredibly important in this moment of the AI economy booming. And we say at the Aspen Institute for the Workplace Innovation Now Challenge that this is a moment where we can either repeat the barriers of the past or we can be bold and we can be innovative in thinking about how AI can help transform the workplace for everyone, but also really look at how we can address the gaps, the barriers, the biases that women have faced for so long in the workplace, whether it's the overdue burden of caregiving responsibilities, to salary discrepancies, to broken pipelines. This is a moment where we could really look at how AI could reshape and reimagine, but we have to make sure that this isn't designed intentionally, that we need to make sure that we understand that when we are creating better workplaces and practices for women, we're creating a better workplace for everyone. We are improving the lives of families, communities, and it's overall has a multiplier effect for the economy.
So let's talk through the WIN Challenge in particular. It's supported by Pivotal, which is a group of organizations founded by Melinda French Gates. And the challenge is about finding solutions. What is it? $60 million grant competition focused on 3 key pillars: culture and practices, AI, and narrative. So what sort of things are entrepreneurs or those that are dedicated to working in the communities, what are they looking to build to help solve and advance any issues that you've currently outlined?
Well, let's first look at how, when I talked about caregiving, right? And we're in the middle of the holidays, we can understand that so much of the holiday magic that happens is a lot of because of the work that women do, unpaid and unrecognized work of household management, caregiving, elder care. All of this goes into how Pivotal has looked at research that shows that women are twice as likely to give up their jobs to consider the cost of caregiving. Since 2015, women are also growing in their concerns of how caregiving impacts their career trajectory and their ability to be able to contribute to the economy. And so what we're looking at is how can AI solutions be able to help break down all the complex tasks that are needed in our households, how it can help make us more productive at work. As caregivers, we're looking at how we can squeeze every ounce of productivity in any kind of day, and how we can also look at it creates more flexible workplaces as well. So there's this sense of really also looking at how we can address traditional biases and looking at salary discrepancies. There's also an opportunity here where we can look at hiring practices. We know that technology is never neutral. It depends on who's putting in the data. So if we can look at how the fact that, most companies are using some type of automation in their hiring practices, we need to be able to look and make sure that those practices are mitigating bias as opposed to repeating.
Claire, I think one of the many things we all learned from the pandemic, Claire, is that working from home works. Hybrid work arrangements work in terms of little to no loss in productivity. To what extent has that been taken to heart by corporate America here so that, if folks do need that flexibility, they can get it these days? Has it really changed?
It's a great question, Paul. We saw recently, this month that McKinsey released their Women in the Workforce report, and it showed that there's a lot of discussion right now about an ambition gap, but what we're really seeing is a support gap. And this gets to the point around flexible workplaces, that if women are looking at the fact that we have more and more return to work mandates, less flexibility on how we can manage all of our different professional and personal workplaces, you're going to see that it's going to impact women disproportionately. And so what we're really encouraging is the fact that we can be bold, we can be innovative. We've got this point of where we have an incredible new technology at our hands. Let's not sleepwalk. Let's make sure that we can think through how we can combine the power of AI to also ensure that we have flexible workplaces is essential for if we're going to be able to make sure that women are continuing to be able to contribute to this economy. And this is good business sense, right? This is the being able to understand that you'll have better retention rates. They're going to be able to help close skills gaps. You're going to have a more skilled workforce. And also, this is important to be able to make sure that you have as many of the talented workers at hand and leaders at hand to be able to succeed in an age of innovation.
I'm just hoping the NQ follows ES. That's the way it's been working.
One of the issues that's becoming a bigger issue is elder care. We've all got our kids educated. They're out the door. They're on their own. And now, just when you feel like you got some freedom, then the elder care issue becomes an issue. So it seems like folks they have a lot on their plate here from the work-life relationship. How's corporate America thinking about elder care? Any different than they think about child care?
That's right. What's exciting to see is that there's more and more of a recognition, whether it's the sandwich generation or we more and more see that we have boomers growing in to more and more years of their golden years and golden retirement years, that you're going to need to be able to support leaders. So yes, we are seeing great advancements, more, I think, just even awareness, right? As Caroline mentioned, the Workplace Innovation Now Challenge at Aspen Institute and with Pivotal is looking at how we can change culture and practices to make, and also narrative, to be able to understand that there's going to be more and more of our leaders at our workforce that have to be able to balance elderly care. So even just recognizing that and promoting it as an important aspect of employee retention and support is huge. Second, fourth, we're seeing more through our grant competition to U.S. nonprofits, we're seeing more and more support systems being wrapped around that also could have private-public partnerships, or with more and more nonprofits that are providing more support. And so I think this is what's exciting, is to be able to see that there is an ecosystem being built. We just need to make sure that we're putting the investment and the support behind it.
There's a feeling, often just because there isn't enough light shone on them, that all the AI champions of this year, well, they're all men who are leading these businesses. And you have Lisa Su doing her good work over at AMD. How much does that trickle down to the feeling that the innovation isn't in the hands of absolutely everyone, but a few folks over in Silicon Valley or in Washington or indeed in New York?
You're right, Caroline. We need to make sure that this is a moment where women are building and shaping AI. This is unlike any other type of workforce development. We also have an opportunity where women who are leaders, who are to entry level, can help shape by being able to adopt and use it. And we need to know that there's an importance of being able to design skills and design the skill development training and the tools themselves for women. It's the sense of where we're really excited through the WIN challenge is that we're seeing more tools come in that is built for us by us. And so there are more and more thoughtful approaches to how AI can help ease all of the complex tasks that come with elder care or come with child care so that we can focus on the human element. I think that's what's really exciting is that when we have women leading an AI, again, from entry level to top C-suites, you're going to have more and more of the human element, which is also what I think can help have us more of a sense of optimism and opportunity is when you can focus on AI, creating more of the human edge.
And it's also up to my role and the role of media to remember to amplify Takidra Mawakana over at Waymo or Mira Marathi, who's busy building a phenomenally highly valued startup, having left OpenAI. Like, there are a lot of women leading the charge. More broadly, how's the state of not-for-profit at the moment, Claire, just briefly?
That's a great point. We're seeing with the WIN Challenge that nonprofits are ready and willing, they just need the resources. And so with the WIN Challenge, we're investing, like you said, $60 million in nonprofits who are innovating and have solutions ready to scale, not only within the nonprofit sector, but across the private sector as well.
Claire, thank you so much for joining us. We really appreciate you lending us a few moments of your time. Claire Bresnahan English, she's the Senior Director, Workplace Innovation.
Yeah, I'm bare today.
The WIN Challenge out there. So I'm trying to take a look at the changing workplace. It's always been a challenge for different groups of people. AI is just I think a game changer for how workflows for a lot of industries are going to change and how that impacts the workplace and the workforce. I just think back to my early days as an investment banker, making pitch books, doing financial models. It seems like
grunt work.
All that grunt work. I think that can almost all be done by AI now. As I look back,
But then, how do you get trained?
I don't know. I mean, we kind of thought we were kind of masters of the universe. It turns around a computer can do it. So
face ripper candle.
I mean, it's kind of a come down. The same thing for lawyers. I mean, that's even bigger. I think. Write me a 20-page brief on, intellectual property. Boom, there you go. All right, we're going to have more coming up. This is Bloomberg. Good morning.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
I don't even know what all work.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg.
Hey, Henrik, how you doing?
And Africa for the
Hey, I put a
stories,
room in the
shaping the decisions of
in the
traders
Discord. That's mic only. If you want to try it out.
There's still room to maneuver. We do see opportunities.
Yeah, I'm doing a lot of other work today, so I'm not heavy on the mic.
at midnight Eastern Time. Only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for
I
stories
got
of capitalism.
until the
business,
5th off, so I'm
markets,
just trying to
economics,
catch up on
tech,
all the
and
little
climate.
stuff.
We go
But if
on
you
the
want to
road
try that
to look
room
at
out,
what lies
see if you
behind
can
the
hear me
headlines
talk
of
without
today,
Bloomberg,
and
that'd be
what will
cool.
likely be the headlines
I did it just for
tomorrow.
you, Henrik.
Transparency. Oil and gas is still important.
They said
If it works, I'll put a chat bot up,
in the market.
letting people know it's there if they don't want to listen to Bloomberg.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Take the face ripper now, please.
Good Friday morning, the day after Thanksgiving. Welcome to Bloomberg Markets.
That was November.
No, the day after Christmas. That's right.
We did give thanks though yesterday, did you?
Yes, and I did work the day after Thanksgiving, so it could
Me
go either
too.
way. Yes, I don't know. How do we get the short end of the stick on all this?
I did 6 till 9 in the morning the day after Thanksgiving though, so everything was a little hazier than
All right,
currently yesterday.
here's how I play the game. I do the Christmas week, the day after, because I live at the beach, so I want Fridays in the summer, as many of them as I can get off. So I have to build up some credibility, some goodwill, and then I kind of try to collect in the summer.
We've got a lot of goodwill for you, for the team that's working with us today, the booking producers, the line producers. We're all doing a wonderful job to bring you what is stocks at a record high. Basically, this year-end rally, it continues, Paul. We've got that growing optimism over economic growth, over corporate earnings. It keeps coming thick and fast.
Yep, we also got some geopolitical news as well. The U.S. launching a military strike in Nigeria against Islamic State targets in collaboration with the African nation's government. So we'll stay on top of that news as well.
And you work Black Friday, you're working Boxing Day. What usually people are out and about doing on those days is spending even more money. And we're going to talk about retail, recapping how the holiday shopping is wrapping up, whether people are gearing up for sales, and what consumer sentiment is like, because it's been on the downside more broadly.
Yep, we're looking at the market here. Just not a whole lot happened. Not that you would expect anything, but we got a little red and green on the screen. The S&P's up about 5.5 points. The Dow's down 25 points, and the Nasdaq's up 23 points. That's about 0.1%. The VIX, Tom Keene from Parish Cafe asking for a VIX quote below 14. We'll leave it there, Tom. The yield space, the yield's coming in a couple ticks, 4.11%, right in the trading range. And we will note that gold is, wait for it, up again, $65.
Wow. Silver.
Yep.
Wow.
Silver is
What's that, Henrik?
I mean, does that signal
Yeah, TTF
much
Live.
optimism?
Yep.
And is this
Is it working?
interlacing of wheat
Check
dollar,
1 2
of
TTF
where
Live.
the rate cut
Check
cycle
1
is
2
going?
check
Do you
1
start
2.
to go into these real assets? Let's talk about that a bit more with Jose Torres, senior economist at Interactive Brokers, on the U.S. economic outlook. Look, this desire to get into non-interest bearing assets. What does that say
You can't hear
in
any
terms
voices?
of where next
All right, let me see
2026
it.
goes in terms of the U.S. economy?
Good morning,
Let me see.
Paul. Great to be here. Well, I think that the gold and silver metals are catching
I got it
bids,
working yesterday.
not only
All right,
for
hold
their
on.
safe haven
Let me pull it
characteristics,
up.
but also due to their store of wealth characteristics. Central banks around the world are essentially tolerating above target inflation, especially here in the U.S. So investors are
Can you hear me now?
They have quite
Can you hear me now?
heavy stock portfolios. Valuations are
Check
quite
1
strong,
2 check
and
1
that's also
2.
been helped by growing profits.
Can you hear me
and
in the
a
stream room?
buoyant outlook. But also, there's concerns that treasuries and fixed income assets aren't that attractive
Stream 1
against
2.
the backdrop of inflation here in the U.S. in the high 2s, as well as in other countries that you have them in the 3s as well.
There.
As far as
Check
what
1
the
2
Fed's
check
gonna
1
do
2.
next, we're waiting to see who the
I'm getting the green-
president is going to nominate here.
the
at
green
Interactive
thing on
Brokers.
there.
Our participants have around a 53% chance that Kevin Hassett
Oh, you
will be
can?
the next Fed
Okay.
chair. So,
All right, it's
there's
working
an
now. I got to
expectation that
click
the Fed's gonna
online.
cut 2 more times
I got to
next
click
year,
that I'm
even though
online in there.
growth is robust, as we saw last week, and the expectations going forward are also quite rosy.
Jose, we've noted the markets have come roaring
No, I
back
can't
from
because
that,
I'm not listening. I'm
uncertainty,
just
that dislocation
broadcasting
back
through there.
in April with the
I'm not
tariff
listening in there right
stocks
now. I
all-time
just
highs,
broadcasting
bonds,
so
great
people
returns,
can listen to
a
the
lot of the commodity
broadcast
space has done
without
well.
having to
I'll
listen
tell
to
you what hasn't
Bloomberg.
come back is the U.S. dollar, still kind of down, I don't know, 8-9% from that early year high here. What's that tell you?
So if a bunch of people get in there and you don't want to listen to them, I might just have to mute everybody but me or something.
Next move is going to be to the upside.
The stream is
Bank of
mute.
Canada, similar
You can't hear
stance,
me?
steady, but next move is probably a hike. But here in the U.S., the Fed is looking to cut further, and of course, there's political pressure for further cuts.
Are you talking about in the Discord, Hogwarts, or in the regular stream?
Elevated as well, because President Trump and the Republicans here are probably going to lose the House in the midterm elections. Our participants place those odds for the Democrats winning at around 72%. So
Oh, everything's good? Okay.
A desire to
All right. Yeah, I just, this was one of the things on my list because there are people who don't want to listen to Bloomberg, but there's more that like it than don't. So they can just go in the Discord here and you can watch the stream and then just hear what I say.
Next year, my outlook is at 3.4% next year.
If you want to.
And then you have a Fed that's cutting against that backdrop. That, of course, is detrimental to the currency from a rate differential perspective because the Fed is still cutting, but most other developed central banks are looking steady and appearing like they want to go the other way.
Okay, there's a lot of ifs and predictions, of course, and we're thinking about political risk, detailing where your probability lies on a change in control of the House. What else are some of the risks that come in for 2026? In particular, I've been reading your notes and you're thinking that there is some worry around AI just not living up to expectations.
Absolutely, Caroline. When we look back in history, semiconductors tend to have boom and bust cycles. Of course, this time could be different, but there is a chance that maybe there's way too much spending into the AI space. Maybe the power needs, that also adds another constraint. And perhaps the returns won't be as robust. They can still be strong, but not as robust as what the market thinks. And that, of course, we have this K-shaped economy where the wealthier consumers are doing an increasing share of the spending. So if their investment portfolio starts to get hit, of course, we have a concentrated S&P 500, the Magnificent Seven, then consumer spending could start to weaken, albeit there are other things that, of course, the fiscal authority could do, as well as the Fed, to try to ease some of those pressures. And then another risk, Caroline, is the labor market. Payrolls are looking like they're going to be a soft spot. We're going to have continued months of job losses in 2026. Some will be positive, some will be negative.
I think it's going to rip back down.
And that's really driven by the automation efforts from AI, as well as the immigration restriction that really just caps the payroll growth. That's going to be offset, though, with the productivity enhancements. Those numbers have been quite buoyant. And overall, it looks like the cycle has legs. We will continue expanding. But those are the two major risks here, Caroline and Paul, that AI fails to live up to expectations and that payrolls and unemployment starts to tick up higher. The middle and lower income cohorts can't sustain their expenditures. Those are the two major risks.
All right, Jose, thank you so much. We appreciate it. Jose Torres, senior economist, Interactive Brokers, has a pretty decent economic outlook next year. And again, he's got an economic growth of 3.4%. That's pretty darn solid, particularly if we have some inflation on top of that. And that's talking solid mid-single digit economic growth. That would be pretty interesting. So we'll see how that plays out.
And there's also, though, as we talked, a healthy dose of risk factors. And one of them is playing out today.
Yep. Some geopolitical issues out there. This one kind of popped up out of nowhere. Nigeria, the U.S. launching a strike or a series of strikes against Nigeria here. Laura Davison, a Deputy Bureau Chief down in Washington, D.C. Laura, are we learning any more about what assets were employed by U.S. forces against some of these targets in Nigeria?
Some of these details are still coming out, but there were several Islamic State sites that were struck in the region here. And what we also know is that there are more to come. The Nigerian foreign minister has been out talking to the press this morning and said that he expects that the Nigerian military and forces will continue to work with the U.S. government for more strikes to come on some of these terrorist sites, and that there will be significantly more damage in some of these strikes that have yet to occur.
Really, President Trump trying to detail that he directed American forces to carry out what he called, quote, a powerful and deadly strike against ISIS. How much of this is How does this fit into the broader context of President Trump's foreign policy? Because when he was first voted in, the whole idea was less global action by the United States. Instead, we feel we're in a more active period right now.
Yes, this was, something he talked about on the campaign trail is he wanted to end all these foreign wars. They would end day one, notably Russia-Ukraine was one he said that he would be able to end very simply.
Getting out here,
obviously
but
that one is
this
still
next scandal,
ongoing, and the thorny peace process talks are still happening. But what we saw yesterday,
everything's set up for it to drop. You got the stochastics.
Directed these strikes. Here's a video of it. Has really been part of his playbook for his first term. He has wanted to get involved in some of these strikes, whether it be Iran.
This next scandal is going to tell a lot here in a minute 30.
Sees some goals.
I'm going to get scaling out here once we get some distance.
Intervening in some of these smaller countries around the globe, and this is
NQ is on 50 EMA.
Peril for him as he goes forward. His MAGA base, his America First base, has not wanted to engage in some of these foreign conflicts and spend money on these things. So this is a key tension point going into Trump's second term of what he campaigned on and how he's actually governed as president.
All right, we'll pay attention to all of this. Laura Davison, thank you so much. We appreciate that. Laura Davison, Deputy Bureau Chief, Washington, D.C. for Bloomberg News. I don't know. I'm going to be sitting on a beach in Aruba in 3 weeks, folks, with a cold beer in my hand. Usually we just watch these tankers go in and out of Venezuela, and that's pretty entertaining. But if you're going to see some U.S. warships there, that could be a whole nother game altogether. So we'll see how that plays out here. We also got some weather. That's certainly in the news here for our friends on the West Coast, Canada, getting hit by some big storms. We're going to get a storm here in the metro New York area.
37 seconds to the next
That's going to be
candle.
news. So let's check in with Josh Shaw. Bloomberg News joins us here in our studio. Let's start with California. Just getting battered out there, aren't they? Both Southern California and in Northern California with snow.
A lot of rain the last couple days. More rain today, this morning in Southern California. Hopefully it's projected to taper off this afternoon. But flash flood warnings across LA County. If you don't know the status in your area, please call 211. Find out whether you have an evacuation warning or whether you have a stay off the street warning. But a lot of rain falling, making it pretty dangerous in that area the day after Christmas.
Your heart has to go out to what has been a really torrid year for those living in and around LA.
We're on the VWAP on the NQ.
And the wildfires, the damage has actually made these flash floods ever more dangerous and more likely, right?
That was something that surprised me in my reporting when we talked to meteorologists. The burn scars left by those wildfires around Los Angeles, they can make flash floods worse. First of all, the trees are gone, no vegetation to soak up all the rain that's falling, and then the actual fire, that intense heat, it basically bakes the soil, making it hydrophobic, so the water just slides right off of it as if it was a concrete slope, as opposed to soaking up that water. So it does make the flash floods worse.
All right, so that's our friends out on the West Coast. How about here in the metro New York area? We're going to get a kind of the first notable snowstorm of the year.
A little more fun, especially if you have little kids. Right. We're expecting starting around 4 o'clock, could be up to 9 inches, 5 to 9 inches, and get the sleds out.
It's been a while since we've had meaningful snow in this market, it seems like.
Exactly, yeah. It was back in 2022 that we got a little over 7 inches in Central Park. So, yes.
So we've been, quote unquote, lucky. I'm using air quotes here. For those of us who don't like to tromp around the snow and shovel.
I mean, I'm upstate,
big push
folks,
down.
And it is nicely snowy throughout. In fact, there wasn't much out to be seen on Christmas Day, but we had our first dump a couple of weeks before festivities. I was out on the sledge and on the slopes. But in that respect, I mean, it's great for me and my kids, but I feel for those who are trying to get in a plane right now.
Yes, we've seen cancellations, a lot of cancellations, hundreds already out of New York City airports. And one thing that came up in my reporting, we're seeing cancellations even in advance of the actual bad weather. And that's because you have to think about, those are international airports. You have flights leaving Singapore. It takes 19 hours to get to New York City. So obviously those flights need to be canceled before the weather starts so that they're not arriving in New York City in a dangerous snowstorm.
Here's my flying strategy, Caroline.
Okay, talk me through.
I'm only flying these days if somebody's paying me to do it.
So
big candle.
Couple little exceptions. There is an Aruba exception in there, but I mean, it's just not worth it anymore.
You were excited about Aruba when it comes up twice in one conversation.
Dude,
you can
every
really
January,
tell.
boom. Every January. They love us down there, by the way. It's one happy island.
Sounds great.
Yep. Yep.
They like your money too.
Oh,
I'm
they
sure.
do. Yeah.
I could do with a beer right now. I'm envisaging a beer on a beach. That sounds pretty nice. Instead, I'll just have to get something warm up with the snow a little bit later. But coming up, we thank Josh for bringing in what is some deep reporting across the anxieties hitting those travelers today, Josh Saul, on all things weather. But next, we have U.S. Bank Asset Management Group's Tom
just barely
Hainlin
touched my.
about the three themes shaping markets in 2026. Stick for us. This is Bloomberg Markets, where we're at or around record highs.
What the fuck?
Technology is embedded in every aspect
Order
of our lives.
order filled. Order canceled.
For the future. From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
In case you missed it on Balance of Power.
Let's play a game. Who's your favorite recording artist?
Kiss. Stop, Phil.
No, come
Order
on.
canceled.
Somebody from the past, present, or future.
All right, Jimi
All right,
Hendrix.
1100
Jimi
on
Hendrix has
ENQ
never
I got.
in his entire career or now ever gotten paid a single penny when his music is played on
And how we
AM
working
and
on
FM
the-
radio. The stunning fact is that the Russians and some other countries actually do pay performing artists on
working,
radio, and Americans do
Yes,
not. And this has
tighten up,
got to
though.
change and should change. No matter who you hear on AM and FM radio, they're getting 0 pennies for the airplay. The new artists, every penny counts. And the fact that they can be played on radio and not even make 1 penny for their performance is criminal.
Don't miss Balance of Power live every weekday.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Should have marketed
Bloomberg
it out.
Television. Top experts, great questions.
All right, here we are. We got Caroline Hyde, Paul Sweeney.
All right,
we
I'm
are live here in our
So I got
Bloomberg
800 on the
Radio,
ES
TV
and
studios.
1190
We're
on
also
the
doing
NQ.
YouTube
Took some
thing.
heat,
We're
though.
also, we're out there
Took more
everywhere
heat than I
across the
wanted.
multimedia, so
But I got
you
it.
just can't escape us, folks. Looking at the markets here, we got a little bit of a
Took a little
sell-off
more
here. The
heat than
S&P
what I
down
was
3,
looking
the
for.
Dow down 82, and the
That's my
Nasdaq
profit
is
for the
down
day.
9. I'm not going to make too much out of that.
So ES got
teeny
800 on the
Teeny
ES.
tiny moves with
And
kind
these
of
are
low
PA
volume,
accounts.
as you would expect the day after Christmas. And you know, the gains we've
All right,
had
that's
year to
enough
date,
excitement
you
for
can
one
take
day,
these
maybe.
Anywhere, folks. Stocks, bonds, a lot of the commodity space. The dollar's still weak. That kind of stands out as still weak.
And
But
NQ.
a lot of
So about $2
good
grand for the day.
returns have been made across the risk spectrum here in 2025, which of course raises the question, now what do we do in 2026? So let's check in with U.S. Bank's Tom Hainlin. He is a national investment strategist there. Tom, thanks so much for joining us here. What are the conversations you're having
I know,
with your
man.
clients here?
You can get in
Gear
trouble
up
so much
for
faster on the
2026.
NQ. You can get in so much trouble
Good
so
morning. Thanks for having
fast.
us on. You know, the conversation we're having at the beginning of
How's that channel
26 are
working,
kind of similar
Henrik? Is
to
that
every
working
other
good
year.
for
You've
you
got
over on
a
Discord?
sequence of events that are coming up for the year, but how to make sure you're best positioned to reach your financial goals. That's what we're talking to clients about. And I would just say we've got a pretty constructive outlook for 26. And we
Yeah,
can get
ES
into
is
that
really
in
easier,
details
yeah.
why.
Well, let's start,
It
Tom,
really
with
is.
earnings. I still think earnings matter. We had really good earnings in 2025.
It just is.
All
All right, guys, I got to do a
for
couple
26,
things.
it's pretty
I'm doing a
solid.
lot of
Double-digit
housekeeping
kind of
stuff.
earnings.
Like
Is that
I made
enough to
Hendrik's
support
Discord room
this
so he
market?
doesn't have to listen to
Yeah, rounding
Bloomberg.
out, Paul. So it was
And
tech in
oh
24
hey,
and
did you guys
25.
see
If you
my
look at
face ripper
26,
candle?
2 of the top 3 growing
Or my
sectors in terms of
emote?
earnings in S&P 500 are actually
This is a
materials
face
and
ripper
industrials,
emote.
and that's that handoff to more of the physical economy that we see in 26. that
Twitch is
broadening out
muted.
beyond the tech sector into the cyclicals.
What do you
And
mean
those
Twitch
earnings
is
estimates
muted?
are pretty strong.
You
down
can't hear me
top
through
in
Twitch?
small caps as well as in Europe and Asia as well. It's a pretty
What?
broad earnings advance that we see in 26.
I hate to be a broken record, but Tom, forgive me, I usually talk about technology. So I'm going to ask you about AI and the broadening out theme there, because we've seen a lot of money put into a few names, picks and shovels. It's all about the infrastructure. But the productivity is where people want to see really
Oh, you
big
muted
gains.
it. Oh, okay. Yeah, that's what I meant it. That's how I meant it to be. So as long as it works right, I'll advertise it in the chat bot, in the chat bot. It's perfect. Okay, good. All right, good. All right, brother. I did that for you, man.
Like healthcare, you can see it in industries like insurance,
So
where you're now using this technology.
I'll set up a chat bot so that anybody who doesn't want to listen to Bloomberg in the background can join you. No problem, brother. Hey, how you like my face ripper? Hey, you want to see something cool? Watch this. Watch this, Henrik.
You know, kind of the digital form, but also the physical world. But then this, 26 is also going to be the year we.
It's a trap.
Applying it in a profitable way.
And then if you are just all in on the AI investment theme, and
it's a trap.
Nvidia or Alphabet or Meta.
It's a trap. It's a bear trap.
Where are people starting to see? Is it in the applications layer as well? Are we going to see software get any sort
it's
of
a bear
in the
trap.
same way that the hardware has?
Oh, you couldn't hear it?
Yeah, I mean, it's in terms of how to take that data and turn it into something.
Oh, because it's through Discord. Okay, okay.
The application layer, but even just.
Well, I can't. I don't think.
It's the companies.
You know what? Maybe I can mic that over. Let me make a note. I'll try.
It could be
Let's see if I can make.
It could be industrials or healthcare.
I might be able to make sound alerts go over there.
If there's one area of the market where we're perhaps less optimistic about is maybe the more defensive sectors, because we still, relative to your prior
sound
guess,
alerts.
we think that the economy is still growing in 26.
And Ninja Trader.
Time to kind of pivot into.
So you can hear when I take my trades.
Hey, Tom, how about the bond market?
In
We had
Discord.
solid high single-digit returns in the bond market here. I can sit in a 2-year treasury.
Okay.
All
right. I'll see if I can't fix that later.
Bad way to make it.
Yeah, I know, but I think I can do it through OBS with a couple of clicks. I think I can do it because the mic was easy. Setting up the mic, it only took me a minute once I could sit down and think about it. You know what I'm saying?
People are earning a good nominal yield in things like treasuries, but for taxable investors, municipal bonds are on a tax.
That's on my list.
It's really attractive for us.
I got a whole week to work on this stuff because I don't have real work.
And even higher if you're willing to take some credit risk. And then the bond market on the taxable side, mortgages that aren't backed by federal agencies.
General chat.
Pretty attractive yields without having to take a lot of credit risk there too.
For what?
Yeah, I mean, for those of us in high tax states, I mean, we're getting taxed left and right in Europe.
In the Discord room?
The city, I mean, munis are the way to go. They don't get enough talk, in my opinion.
Discord.
That's why we have a dedicated section on Friday
chat.
afternoons on Bloomberg Intelligence where we do munis in focus.
Yes,
Uncle Donnie's pissing in the wind.
Exactly. So, Tom, here, what's the real play here? Is it still a 60-40
that's a good
outlook
one,
in portfolios in 2026, or
Henrik's Uncle Donnie's pissing in the wind in general chat and Discord, guys.
When we think about alternatives, we think about just
all right.
diversifiers.
3-6 made 1K. Good job, brother.
Start to get up a little bit.
Good job,
so
man.
We look at areas of the market. Like
yeah, you gotta.
Where,
I let it run too long. I let that last trade. I knew it was coming back. It's just
physical build out.
But I got in too early, and I let it run too long. I took too much heat for the profit I took. I took way too much heat for the profit I took, and I'll admit it.
Correlated to stocks and bonds, and add a nice inflation diversification if it stays sticky here.
What about getting outside the US? I mean, Paul's made a great point throughout that if you've been long foreign indices and you've stripped away some of the dollar impact, how are you looking at opportunities outside of the United States?
Yeah, a lot of the return we got, Caroline, for U.S. investors in foreign markets was either multiple, expansion from very low levels, or currency, translation back into dollars.
Yeah.
But fundamentally, the story is very different in
so
2026.
I got to be real careful if I'm going to take another trade.
10% like earnings growth for foreign development.
My profits. This is more than enough profit for one day.
2.5% dividend yield on top of the cash flow driving stock buybacks. And emerging markets seem to be set up for another solid year as well, with high teens earnings growth estimates for 26.
Okay, guys, I got some busy work to do here. I'll be watching. I'm here, but I'm gonna wait for my setup. But I got a lot of stuff to work on, and I want to work on it while I'm off. from real work.
Yeah, I mean, the things we're watching.
So I'll check back in 15, 20 minutes. I'm watching chat. If you guys see something or have an entry, let me know. But I'm here hanging out. And if you don't want to listen to Bloomberg, you can go to the Discord. And I made a channel called TTF Live Stream Audio, no Bloomberg. And Henrik's in there, so you guys can hang out in there and just listen to the mic if you don't want Bloomberg. But all right, I'll check back in 15, 20 minutes, and we'll see how the chart looks.
If we were to see inflation to meaningfully decelerate beyond that target, that would kind of bring in a different Fed regime in 26 and a different outlook for the economy.
Tom, it's an election year coming up in 2026. That oftentimes brings in a level of uncertainty into the marketplaces. How big of a concern is election to you?
Obviously, it's a key event in 26 coming up, the midterm elections in November. I think our work has shown that the performance of the markets, it still is really part and parcel of what's going on in the economy. What's the expectation for growth? What's Fed policy expectations? That to us is still the primary driver of the outlook for 2026. The elections will obviously be on the horizon. It will be a newsworthy event, but we don't see it yet as an event that would cause us to change the perspective of how we see the economy and market performance in the first half of the year at least.
Tom Halen, it's great to catch up with you, National Investment Strategist at US Bank Asset Management Group. Able to go pretty global with us as well, even though he's at US Bank Asset Management Group. We thank you. Look, we've got plenty more to be digesting. We're going to go global, but in the world of AI, we're going to hear a little bit more about what Jensen Huang has been looking out for in terms of 2025 growth, where he sees 2026. An important conversation to have, given that a little rather late in the day on Christmas Eve, a statement went out about the latest acquisition, or indeed licensing deal that they've done for Grok technology.
Yep, that was the story, the theme. It started out AI as, boy, this is a interesting story. And then they came out with that revenue bump up maybe 3 years ago, NVIDIA did. Then it became an NVIDIA story. Then it became a tech story. And then it became a totally economic, broad economy story. Yeah. And we're still, it just feels like we're still just figuring out what some of the implications can be across different industries and different companies.
And who are the key players? Like, there's a wonderful story on the terminal today about how Larry Ellison, not Elon Musk, was 2025's defining tech titan. There's just not a story that Larry Ellison isn't in some way involved in, whether you're looking at your old world of media and you think about the consolidation, or indeed the fight for Warner Brothers Discovery going on there, and who's helping finance one particular deal for Paramount there, but also how he's just been in the very heart of the AI infrastructure build out as well.
Yep, it's amazing. Again, just one of those titan careers in technology. It's just one of the all-time greats. And now I think it's pretty interesting to see him playing around in old traditional media. Who would have thunk it in the beginning of the year? This is Bloomberg. Good morning.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
oh boy,
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
No, it's impossible.
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Jensen Huang, of course. One of the leading lights of your portfolio performance in 2025 has been NVIDIA.
Yeah, I mean, I don't track technology nearly as closely as you do, but boy, is he positive. Yes. And I guess, but I'll tell you what, he delivers. And more than delivers. I mean, they're the meet and beat type of poster child if there ever was one.
Totally, and then it's just how much the market has already got ahead of his meet and his beat, because actually the stock does always tend to underperform the day after their earnings because people have got so exuberant and priced in such phenomenal growth. But here lies a $4.6 trillion company, and it's trading up on the day. We are at the highest since November 2025. But if you're looking at how much they've returned over the course of the year, they're up 42%. They have been busy making deals of their own. The latest is with Grok, which is an inference chip company that they're doing a license deal for, and indeed consuming some key executives from the business, as well as licensing the underlying technology. But he's been wheeler dealing. $100 billion to OpenAI is being promised if they use their chips, of course, but you don't have to use my chips. There's a lot of this circularity issue, isn't there?
And, well, Jensen Huang, one of my favorite functions on the Bloomberg terminals, Rich Go, he comes in at number 9 in terms of total net worth, $156 billion. That's nice. What's also nice is on a year-to-date basis, up $42 billion is net worth. So again, as goes NVIDIA, the stock, so goes Jensen Huang. So good for him.
No wonder he's a little bit optimistic.
Yes.
Let's check in if our next guest is as optimistic. He's certainly got some exposure to these high-performance private names. Evan Schlossman's with us, principal at Suro Capital Group. And just, I mean, for our audience, first and foremost, just dictate what Suro Capital is, because you're a publicly traded fund, I understand, but in private companies, I'm looking at your portfolio, you've got Canva, which some are saying maybe is going to be tapping the markets at some point. Of course, standout there is OpenAI, many bracing themselves for potential IPO in 2026. You're in Plaid as well, so in fintech. What is it all about at Suro Capital?
Absolutely. Good morning. Pleasure to be here. So Suro is an interesting vehicle, as you mentioned, because we are publicly traded. You can, buy our stock as any other stock on the market 1 minute, sell it 10 seconds later, and then buy it right back, right? So it's a fully liquid vehicle in that sense. But we are a BDC and invest in private, mostly equity, almost all equity, venture-like names. And so you can think of us as sort of an evergreen venture mid to late stage fund. But we happen to be fully tradable on the public markets. And so very interesting story. But yeah, the impetus there was basically, venture capital is a fairly closed-off ecosystem. Unless you have the right check size or in the right area, it's very difficult for especially retail investors to get direct access to that. So at Suro, we wanted to create a access point, a vector for retail investors, really anyone who invests in the stock market, to get access and exposure to some of the most prolific sort of late-stage names.
How are you
that we
gaining
really see
access,
driving growth.
Evan? Are you going in via SPVs? What is your route to gaining markets on the gaining shares in the secondary
Absolutely.
market?
We do all of the above. So we spend time investing directly in companies, in primaries, as many venture capital funds do. We also will look at investing in SPVs, especially as you see rounds are getting larger and larger. SPVs provide one way to sort of pool capital with other investors to meet minimum sort of check sizes and get exposure to names we like. We really take a top-down perspective. We look at market leaders in sectors, areas where we want exposure to, names we want to be a part of, and try and come up with ways where we can get direct access or exposure to those names.
Caroline and I were just talking about OpenAI and a potential IPO this year and kind of the valuations being discussed. What's your view of OpenAI these days?
Well, I mean, as you mentioned, so OpenAI is in our portfolio, so speaking our book there, but we are incredibly excited about it. I think if you look at the trajectory and what they're doing, 800 million weekly active users they just came out with, it's about 10% of the world. The way that they are able to drive forward innovation change in a substantial part of the market is phenomenal. I think if you look at, and this is part of the Suro sort of story and thesis here, if you look at the value being created by not just OpenAI, but other names in sort of the adjacent spaces here, is incredible the amount of value that's being captured and created in the private markets. And so that's why Suro provides sort of a way for investors to get access and exposure to that value creation pre-IPO, right? And then once you have the IPO, you then enter the public markets there. But we are extremely, I'd say, bullish about the growth and trajectory of that sector.
How about the competitive nature in the AI space for OpenAI in particular? I mean, we're seeing more and more competitors come into the market space. How do you guys kind of think about that?
We are, and it's really interesting, especially if you look at the sort of the transformation of the last year or 18 months. One, we see innovation just driving forward the pace and the rate of change. So if you look at it from a end user customer standpoint, it is fascinating at the growth that has been able to be achieved from just a technical and practical standpoint when you look at the model's capabilities. And so innovation is really pushing that forward. And we see this as the early innings of this market. I mean, if you think about the ways that companies and users and consumers are able to utilize AI, the pie is certainly growing. And so as these models and competition pushes models capabilities to be better and better, we really see expanding sort of use cases and ROI for that, and a growing pie there. We also see differentiation in the market. Look, OpenAI, I think it's not a crazy argument to say they're in sort of the pole position now from a consumer standpoint, very strong enterprise business. But I think you'll start to see different models carve out different niches, and that'll likely evolve over time. But it's very interesting, sort of the competition, as you would expect in any market, just pushing forward or pulling forward the sort of technical capabilities here.
Now, of course, OpenAI hasn't been without some of the hype, and within that, therefore, some of the anxiety builds. There's been much talked about potentially it going for raising yet further money at an $830 billion valuation, is what the Wall Street Journal was reporting. They need another $100 billion. Of course, they've got a lot of compute needs. They'd previously just agreed to take cloud from Amazon, with Amazon investing in terms of equity going forward. But this idea of circularity, of getting money from NVIDIA, from Amazon in return, there's not always a promise, but there's potentially an expectation that you use their GPUs, and certainly they're going to be accessing their cloud. How have you managed to talk to your clients about that, about some of these? There was quite a typical trade leading into the end of the year that people were sort of going long exposure to Google and short exposure to OpenAI.
So it's interesting, right? Because the way you are seeing sort of the underlying infrastructure market, and look, we saw this trend in AI, a sort of a unique market in which you had unmatched demand. You had, the demand for AI far stripped the supply. And so we put about $55 million to AI infrastructure in 2024, and market cap for Suro is about, 240 million, give or take. And so the way we look at it, and from that position, is these companies right now are pining for more capacity. If you look at the earnings calls for the hyperscalers, if you look at recent comments from OpenAI, Anthropic, others, they believe that as long as they can get and secure this capacity, there are real use cases, expanding use cases, but they have demand for sort of more and more compute, especially as the technology advances. And so the way, we're seeing recent deals, as you announced, with NVIDIA, recent capital formations, the need for more compute and certainly build out of data centers, the driver behind that is the demand side. And so if you look at the commentary from these companies from earnings calls over the past few quarters, it has been increasing amounts of demand that are continuing to sort of outstrip the supply that they're able to produce. And so we see that as a pretty strong signal from these providers, the frontier models, in where they are projecting sort of the demand and use cases for the technology going forward.
Evan, thanks so much for joining us. We really appreciate it. Evan Schlossman, he's a principal at Suro Capital Group, talking about those are the folks that invest in a lot of these AI type situations before they get public. Think OpenAI and the like. So some interesting discussions there. It's certainly been a story for this market. AI has been for the last 3 years, propelling equity market gains just across the board here. Let's take a look at the market today here. S&P's unchanged. The Dow's minus 60 points. The Nasdaq's up 7 points. Been a good year for IPOs as well, and you could make that case that 2026 could maybe even be better in the IPO market. And for that, we're going to check in with Natalia Kinyajevic. She's Bloomberg News. She follows all the equity markets here. Natalia, talk to us about 2025. How was the IPO market?
So overall, IPOs did really well. When we look at the IPO Go function on Bloomberg Terminal, and we
I love that one.
Exclude all SPACs, we see that companies that went public this year delivered 19.6% return, outperforming the S&P 500. That's despite the fact that we had so much volatility overall in the stock market, driven by tariff concerns, and then there was a government shutdown. Overall, I should also say that the last IPO of 2025, which was Medline, and that was the biggest IPO here in the US, really helped that performance. So we see that the stock is up by almost 50% from its trading debut, but returns were mixed. We had winners and losers, Paul.
Yeah, stock, I'm still going to Medline. That's got a market cap of $60 billion. It's hitting 52-week high today at $45. So again, you get those big deals where everybody's involved, the big institutional investors, the index funds, but as well as some smaller funds, some hedge funds, and then individuals, maybe 20% of the deal goes retail. When those deals lift, that really helps the market.
Exactly. And as your guest just pointed out, retail is also becoming a really big component of this IPO market pipeline. I would also say that this time around, when we look at how deals were priced, we saw that many deals were multiple times oversubscribed. We saw demand from long-only investors, we saw demand from hedge funds and retail, but the performance was a little bit tricky. Yes, we saw some gains during the first day of trading, but then many investors like fast money hedge funds, they wanted to sell those positions almost right after the company starts trading. And that also signals that some people, they just don't want to hold those stocks because there was so much uncertainty this year. So I don't know, maybe the picture will be different in 2026.
Yeah, I mean, usually when you go in and pitch an IPO, you get the management team and the board, they want to see stability in the marketplace, not just a higher and rising marketplace, but stability in the marketplace. And they want to have some stability in kind of macro environment, have some confidence, and kind of up and down in 2025 from that perspective.
Exactly. So, and this is what, for example, the latest IPO, Medline, really showed. People want to see a predictable cash flow. They want to see clients, established businesses like with Medline as well. And in terms of sectors, I think AI infrastructure is doing well this year. Crypto, of course, depends on the stock market volatility. I know everyone is watching SpaceX potentially next year, right? And I don't know if it can be an indicator. We had one really good story this year from space and defense sector. The company is called Karman. It's doing really well. I think it triple digits returns on a year-to-date basis. So that could also signal that there is an appetite for companies from this sector.
Caroline and I were just talking about what could be two mega deals in 2026, OpenAI and SpaceX. I mean, these companies are worth hundreds of billions. In case of SpaceX, maybe over $1 trillion of valuation. I can't even fathom getting that type of IPO out the door. But does the street think that those two deals might come this year in 26?
As of now, yes, people are really optimistic. Of course, we try to track every single step. So, for example, the SpaceX, we know that Bloomberg reported that the company already told employees that it's entering the so-called regulatory quiet period.
Okay.
Earlier, there were reports that the company started selecting banks. So potentially, we could see it happening.
All right, very good. Natalia Kenyajevic, we appreciate that. Natalia's from Bloomberg News giving us up to date here. Coming up, we're going to examine the retail outlook for the New Year's. The holiday shopping season comes to a close. The money, I think people were spending it. We'll take a look. This is Bloomberg. Good morning.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the two teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only two teams that was independent.
So now you have two soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Stores are still really important to the physical experience as well as to the omni-channel experience. And I think the mistake we sometimes make as retailers is go with a curve and try and say that that is going to perpetuate itself into the extinction of stores. And I'd argue that, no, you actually see people going to stores, and where they browse and where they buy is up to them. And they may browse online and buy in store, and they may browse in store and buy online.
All right, that was Macy's CEO Tony Spring. I think what he was talking about there is, I got it now, omni-channel.
Mm-hmm.
That's what it's all about. You can do the retail, you can go the physical, you can do the online, you can mix and match and do all that kind of stuff. That's omni-channel.
And it's also just meeting your consumer where they're at.
Yes.
Right?
Yep.
Are they browsing? Are they then converting when they're coming into a store? Do they want to touch? Do they want to feel? Are they totally at ease doing their entire purchasing through Instagram, eventually maybe through OpenAI's chatbot as well, ChatGPT? We've got a lot to ask because we are in this sort of transition year, not only in terms of how we shop, but how the shops are having to import as well. I mean, what an incredible 2025.
Now, it's one thing to be be like Walmart is an importer. But how about this is the example I use all the time, my local toy store in my town, which we like to go to if we can. What does that person do? So in terms of, so we'll get all that. Let's talk to Stacey Fraser, founder and CEO of clothing retailer Pink Chicken. Love the name. Have no idea what the background is, so you can share it with if you want. Talk to us about Pink Chicken. What do you guys do? And just tell us where you are in your growth right now.
Yeah, well, first of all, thanks so much for having me. So Pink Chicken is a 19-year-old children's lifestyle brand. We're founded kind of more around the spirit of a sunny day. So we focus on all original patterns that bring kind of joy to getting dressed. We like to put a little confidence and a pep in the step of little kitties everywhere. Yeah.
I mean, you've also got some, not only do you have great swimwear and tops and tees and dresses, but also I'm loving some of the puffer jackets as well. So we're here for the ice cold weather. But what has that been like? Talk us through 2025. What a whirlwind it has been. We can go to consumer sentiment later, but how have you managed your business through tariffs, through changing policy?
Yeah, it's been a very interesting year. I mean, first we opened 4 retail stores this year.
Oh, congrats.
So yes, thank you very much. Our last one in Houston, Texas. But yeah, it's been definitely challenging with tariffs, and I think the uncertainty of not really knowing what's going to happen has been really hard to plan your business. But we have a really incredible community and a very loyal fan base, or not fan base, customer base. So it's really, their support has been amazing this year,
And how are you holding on to that fandom and that love and that loyalty? You're in Charleston, and I'm thinking about the shopping experience in Charleston, and you're giving a Prosecco into people's hands on whichever Saturday it is of the month. But how are you meeting them on Instagram, in social? What are you thinking about their journey as they purchase Pink Chicken?
I think for us, we always show up authentically, and having retail stores and also being a designer, you get to really touch your customer where they are, like in our stores. And I think brands that are giving an experience to a customer through what they're wearing and how they show up, whether it's on social or the retail stores, it's really where you build brand loyalty. And our stores are really like community hubs where families can come and have a joyful experience. So I think that creates a deeper connection.
How do you mentioned that you opened 4 stores this year for a total of 11. How do you decide when and where to open a store?
Yeah, I mean, I think we let our customers tell us where the next store should be. It's actually fun to do an online Instagram poll and find out where they want the next store, but we do put a little more science into it, which is looking where our community exists and opening in those areas. We've also tested different markets. We've been in cities, main streets, outdoor shopping centers, and our most recent one I mentioned was in the Woodlands in Texas. So, yeah,
that's a great community down
it's
there.
Amazing.
Phenomenal.
It's phenomenal.
Yeah, great golf course down there. Well, I love it down there. E-commerce versus bricks and mortar. How do you guys think about that?
I mean, I think both are important. You started the segment about talking about omni-channel, and it really is meeting your customer where they are. And they do like to shop in multiple different ways. So I think that both are very important. Both are very important to us.
How price elastic or inelastic is your loyal customer? Because I can see as a parent, and just today, I'm buying pajamas for my daughter, and I was amazed at the price point on certain, but then I went across to a different one, and they're like a third of the price. How are you thinking about where, because you're coming to you for patterns, for probably the textures, for the versatility. How inelastic or elastic is that purchaser?
I mean, for us, quality is the most important thing, and I think that's one thing that customers come to us for. And so I think it's really important just to be consistent in your quality, and I think that the pricing, I think with the tariffs that happened, I feel like, the brands really have tried to absorb as much as we can in this third and fourth quarter of the year. But that's not sustainable. And so, how do you go back and look and open up the hood of your company and see if you can find savings elsewhere so that you don't have to pass off?
Where have you had to look?
everywhere, you know? And I think that that's one thing in times like this is that it forces you to put a magnifying glass on every aspect of your company where you might not have done before. So we're trying to look at the positives of it and really taking away efficiencies, building stronger partnerships with our vendors overseas. So it's been okay.
Every time we get someone in here that really speaks to and meets with consumers every day, we want to ask, how is the consumer doing out there, do you think?
You know, I think what we try to do in our stores is provide a joyful experience. So I think they come to us for an escape. We do. We had Santa visited all 11 of our stores this year. We have craft events. We make it a really fun shopping experience so they can escape all the stresses that are going on in the world today. It does cost money, and I think that consumers now are really focused on value and what does that mean to them. And if they can find brands that provide quality and something that's unique and special and they feel connected to, I think it's worth it to them.
What's the future of your company, do you think, over the next 5 years? Opening more stores? What's your longer-term growth outlook?
Yeah, I think for us, like the omni-channel strategy will continue our growth trajectory in all three channels, which is wholesale, our brick and mortar store expansion, and then our web.
Can I very quickly ask what's worked best? Like you now, TikTok Shop is going great guns, but
yeah.
It feels as though you have more of a presence probably on Instagram and other areas of social.
Yeah, we haven't really entered into the TikTok world. We have one viral video about dogs in our office that was a couple years ago. But really, we connect I think that people are craving more in-store connection. So I really think like in this holiday, we had all of our employees had to do a shift in each of our stores. Wow. And because it's so important to connect with the customer and connect with the community. And I think we all crave that. So that's been really successful.
Well,
a former banker, I have to ask the question, how are you financing the growth of your company?
We are fully bootstrapped. So we haven't taken on any investment to date. So everything we've done have been through the process.
Do you go through a local bank and for a loan to develop a store for inventory, that type of thing?
We have a line of credit. We don't have any debt,
okay.
But we've been able to grow very thoughtfully because it's been a slower growth over the years, but it's been very thoughtful, which has allowed us to really stick to our values and our community.
Well, it's no small task building this business to have however many, you said 11 stores now?
Yeah, that's awesome.
And to
4 this year, that's great.
Phenomenal. Well, next time we're down in Charleston or in Texas or 2 here in New York City, go pay it a visit. I love the name, Pink Chicken, founder, CEO, clothing retailer. Wishing you a very happy rest of the holidays and a very fruitful new year. That was Stacey Fraser. But meanwhile, if you've been invested in this market pool, you have some extra money to put to work to your children's outfits.
I think so. I think, again, this kind of goes to the K-shaped economy. For those folks that own real assets, stocks, bonds, real estate, things are good to great. And that's just the way it is. If you don't, then you're more susceptible to, say, inflationary pressures and more dependent upon the paycheck. Those are the folks that are struggling. We see it across a whole wide range of industries. And that's kind of tough to talk about the U.S. consumer because it really is stratified.
So bifurcated.
Yep, exactly right.
I mean, whereas if you've been long gold, congratulations, you're up 73% this year. If you're long silver, up 164%. Metals at a record high, stocks at a record high. Paul Sweeney, what fun.
Yep, thank you very much. That was great.
From New York, wishing you all a very happy holiday.
in case you missed it on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays. In case you missed it on Bloomberg Open Interest.
The kids, the millennials, they now all of a sudden have to pay back their student loans again.
Part of the millennial generation, when we also graduated, you were dealing with the aftermath of the financial crisis, and you also had this problem of finding jobs.
Weakness in
all right, guys, I'm back. How we doing?
It's also my generation, the baby boomers.
We're still doing the VWAP drift.
We're not thinking about hiring right now.
Looks like we're working below it on the NQ and the ES.
Live weekdays.
Hey, Tofasti, how you doing? Are you a trade view guy? The thing with NinjaTrader, man, if you're out there, the thing with NinjaTrader is it does so much more.
Welcome back to the opening trade.
It's been around a very long time, so it takes a little bit to really understand where everything is, but it's a lot more powerful once you understand how to use it. So it's a give and take. It's a little tougher learning curve, but it does so much more than a lot of other platforms. But I'm a little biased. I've never used any other platform, so that's probably going to make me biased toward it a little bit.
They said every citizen should be investing in the market.
You get any trades in today, Tofasti? Too fasty? Tenzimo. Short on the NQ. Tenzmo's short on the NQ.
Why is it that NFTs have not
I like that call. I like the short. I got into the short too early this morning. I was one cycle too early. I think I used TOS about 5% of what it can actually do. I'm sure NinjaTrader, yeah, it is, man. It does so much. I mean, you can even have NinjaTrader even has a vendor program where you can create your own strategy and let people subscribe to it and encrypt it, which is what I'm doing. I mean, you can make it your own little business. You can have your own little enterprise out of it, you know?
Live from Washington, D.C.
But like I said, I've never really used anything else, so I'm going to be pretty, I'm going to be biased. But I know TradingView is easy to get up and running on.
And we'll be joined by former Congresswoman Jane Harman as well as the
oh man, I like the short now, huh?
Targets in Nigeria on Christmas. We're just learning more.
There wasn't a real clear signal for me. I guess it was. See, I went off this signal back here, and I paid some heat. I paid for this signal with this heat, and then now it's really starting to.
With a quick look at the markets, which have given up most
full take profit. All right, Tenzmo, good job, brother.
Tenzmo
got himself a full profit take.
The Nasdaq
I love
down
it.
About 10 points, down industrial average, losing 90
full
points.
profit take.
Fractional losses for all three indexes, of course, after we saw record high levels
Nothing
going
better
into
than that.
Christmas. So not a big shock to see a little bit of a pullback here, despite the seasonality and the talk of a melt up here in the.
I'm going to be real picky the rest of the day. I already got my money for the day,
Nvidia,
so
though, coming back to life a little bit today, up over
I'm gonna
1%,
be really
more
picky.
than $2 on news of the Grok licensing deal. And we're kind of mixed up in the retail space as we pick through receipts from holiday shopping. Target is actually moving higher, something we don't see a lot, up $2 right now. Walmart is up just a fraction. TJX is down a fraction. It's going to be a day like that with holiday light trading, but we do have a full session plan with the bell set for 4 p.m. Our top story today, they're coming to Mar-a-Lago. Volodymyr Zelensky and Benjamin Netanyahu both planning meetings with Donald Trump Sunday and Monday, respectively. And that's where we start our coverage with Bloomberg's Eric Martin, who joins us now with his view on diplomacy, covering the State Department for us here in Washington, D.C. Eric, it's great to see you. We'll start with President Zelensky coming to Washington, noting that it would require, at least what we had heard until now, real progress to be made for him to get on an airplane to come to the United States, for President Trump to sit down with him. Has there been a breakthrough when it comes to peace in Ukraine?
What you think about the Epstein files?
Yes, we're expecting.
It's a CIA, Mossad, MI6 blackmail ring, really head by the CIA. All the real stuff was taken out.
Everyone is looking for, the potential.
Like the real people who were involved, all the elites from all over the world, all that stuff has already been gone and erased.
Secretary Rubio and others go to Geneva to meet.
Whatever's left in there is what they wanted to be in there before Trump could get his hands on it this time around. So,
as well as European officials and a meeting with Zelensky in Berlin.
It just makes me sad that nobody's going to jail for the things they did to all those little kids, you know?
And so everybody is still looking for whether we can get this elusive break.
We'll never know really the full extent of it all. We'll never know.
Except this has been the big skepticism, is that Russia, that Ukraine can ever agree to something that Putin would accept, and that whether Putin is truly interested in having an end to this war.
But if we do, find out somebody was doing on that island, and we got 100% proof that they were with little kids, a bullet in Central Square on live TV would be okay with me.
Russia's territorial control.
And they should even have a lottery for the person that gets to pull the trigger. That's what I think. But that'll never happen. That's some kind of weird fantasy that there's actually justice.
Sure, well, that's what
regulators. We regulate any stealing of his property. We're
damn
good.
Justice Speeder.
There can't be any geek off the street. Gotta be handy with the stealing, you know what I mean?
What's up, Keith? Thanks for following me. Are you a trader, man? Gusta?
Mount up. Or certainly seeing President Trump personally.
You learning how to trade, or are you a trader, Gusta?
Engaged in a
I'll introduce you to the channel. I got a few minutes. I'm kind of doing busy work, admin work on everything today. I'm already pretty much done trading unless I get like the double secret probation signal.
The next thing to look for is whether there's similar interaction with Russia.
If you're there, did you bounce? Did Gusta, did you bounce? You a bouncer?
His way as well to sit down with President Trump on Monday.
It looks like Gusta bounced.
This brings us to phase 2.
Well, thanks for following, dude. If you can hear me, let me know. I'll introduce you to the channel and kind of tell you what we're all about and what our focus is here.
Was that really some of the things about the Board of Peace need to be worked out before we would see phase 2?
All right, guys, I'm going to get back to my busy work. I'm just watching the charts. I'm watching. Oh, hey, there you are. How you doing, man?
Gaza.
You're a day trader? Do you trade futures, man? Are you a futures trader?
We need to see this Board of Peace selected, and that kind of agreed.
We do futures here with prop firm funding.
For instance, the announcement of countries that would be participating.
So the theme of the channel, I'm kind of creating a place where people have full-time jobs, you know, dudes just grinding it out, and they want to try and get ahead with a plan B.
Reach an agreement with Hamas about how they would disarm. We've always
you know, we focus on trying to learn how the markets work and get better using prop. We don't use our own capital to futures trade. We only use prop firm. And then once we get good enough to get a payout, that's the money we use to fund our cash account.
Their armament and their
CFDs. Okay, cool.
Perhaps the last piece of leverage that they have, and so.
Is there any? Are there any that are like related to the?
And yet they're also giving up their weapons.
CFDs.
That certainly is seen as as perhaps the ultimate maximum aspect.
So do you buy like contracts, or is it like buying a stock? Those CFDs.
Those weapons, rocket launchers, things they've used against Israel in the past.
But anyway, yeah. So Eric, people who you know, we got a lot of traders here that are really good, and we got a lot of new traders. And anyone who's grinding out their daily job and want to get ahead, that's, you know, we're here to create a structured trading day. So I try and be the structured trading day example for everyone. one. You know, we look for news, we wait for our setups, we talk about psychology. You know, we don't trade in high volatility areas. You know, there's structure to our day, and that's, you know, if you're working full time, you should be able to afford, you know, an eval for a prop firm or whatever as entertainment money, and then we try and turn entertainment money into a real cash account through prop firms. That's what we do here. But CFDs, are you in the States, Gusta?
I mean, that was a big blow to him. And I give the Ukrainian people even more credit for putting
I'm
up
not
with 4 years of war.
I'm not
They
sure I'm
are
familiar with
Ukraine's
CFDs.
strongest weapon, the Ukrainian heart.
Are they like
But
options?
what does Putin get out of this? Maybe, you know, something like North Korea, South Korea with some kind of a police
Oh, okay,
border.
yeah, that's what I thought.
He doesn't
Okay.
get much new territory.
So do you buy
He certainly
contracts
doesn't get an
off
open door
those?
to
You like
take
buy
over Europe,
contracts
which is
short or
something he
long?
might
Is
be
it
after.
like that?
And
Or do you have
I
like,
don't
or do
see
you
it.
buy options if they're
Mitch
going to go higher or
McConnell
lower?
said, that Putin has been playing Trump since January. I agree with Mitch McConnell.
We got a lot of
But
people
the
in
other
Europe here
point
too.
here is that Europe has now promised some additional aid. Imagine this: the defense bill that Congress passed, Congress did something, contains hundreds of millions of dollars of aid for Ukraine. So if Trump lets that go forward, please.
It's
let
just
that go
speculating.
forward
Okay,
and
so it's like
doesn't do
futures.
any
It's speculating
kind
on
of,
price and works like
stuff
normal
to our
trading indices
intelligence
like NAS
capacity
100.
that really
Okay,
helps
you're on the
Ukraine,
NAS 100. Okay, I
keep
know
its,
exactly what you're doing.
at least keep parity
Yeah.
with Russia. This
It's the
can
same
go
kind
on
of thing
longer, and maybe Russia will be worn down
Ladioff
more.
in France is doing.
Let me talk about the Middle East.
I think
for a
he
minute
does the
because
NAS 100 too. I
see
know
anything
exactly.
going on there.
I know exactly what you're doing.
Bibi
Same
Netanyahu
thing.
just announced new,
So it's tied to the Nasdaq and the
Israeli
ES, and
housing
we
in the West
watch
Bank. Now, that's not
on the
Gaza,
Nasdaq
but
and
it is
S&P 500
enormously
here.
provocative.
The
He has
ES,
said he
you're looking
will
at the
not-
NQ
will
right
not
now, which
recognize
is
two
the
states, and I thought a
which would be
cornerstone of
related to your
increased
NAS
involvement
100,
or
I believe.
ongoing involvement by the Arab neighborhood.
And then we got
was a
the
path to two
ES, which
states.
is
So
related
even if
to
there is
your
some kind of a
SPX
police
500.
force type thing, as your commentator pointed out, Hamas is not gone. Hamas
Mainly a
won't wanna be
derivative of
gone.
some kind, I believe.
And I just don't see how that gets anywhere. There, I'm a really super pessimist.
The short's starting to
All
look
right,
pretty
so we've
good,
got
huh,
two
guys?
Pessimistic.
Don't get
cards
trapped,
here.
though. It could be a bull trap. I got
You
trapped
said that
earlier
Putin's
for a
been
little bit.
playing President Trump since January. Is Netanyahu also playing President Trump?
NQ is definitely
I think
looking
so.
a little.
Yes. I think that Trump is tougher with him than former President Biden was ever able to be. And Trump has still kept his strong
All right, well-
support from many in the pro-Israel community. But I think that Netanyahu is a hard-line conservative, would understate it. A hard-line, maybe reactionary Israeli, and hasn't budged here. He did get the good news is, and Trump helped with this enormously, got the prisoners back and got sadly the bodies of the deceased back. That's great. But I don't see Hamas willingly move out, and I don't see major efforts to improve the quality of the Palestinian leadership, such as it is. So I don't see how you put money into developing, I guess what Trump's son-in-law wants to be some new beachfront property if there is no stability. I just don't see that moving. And one more thing, Joe. Let's remember that also in the Middle East is ISIS. We bombed ISIS, we the U.S., in Syria recently. We're bombing ISIS now in Nigeria. But ISIS is not just a training group on the ground. ISIS is now all over the internet, radicalizing people like those in Australia and maybe some in the United States and Europe in the near future. So it seems to me, if I were President Trump, he hasn't called me lately, but if he did, I would say, please focus on this, Mr. President. It is the most imminent threat to U.S. security.
Well, you brought this up to us. Maybe it was 2 weeks ago, Jane Harman. And sure enough, the headlines on Christmas, U.S. forces striking ISIS targets in northwestern Nigeria. The president wrote on Truth Social, and he had a lot to say on Christmas on social media. Merry Christmas to all, including the dead terrorists, of which there will be many more if their slaughter of Christians continues. There have been a lot of questions about whether this slaughter of Christians is in fact taking place in countries like Nigeria or even South Africa, which the president had first brought forth in a meeting in the Oval Office with the prime minister, the president of South Africa. We've not received details on this. The military conducted multiple strikes, according to the president, but we haven't heard anything else. Jane, what are we getting into in Nigeria?
Well, I don't think we know. The government has pushed back and said there is no slaughter of Christians. I'm sure some Christians are being killed. Similarly, in South Africa, which is not to praise those governments, but it is to say that this seems to be another campaign pledge, some kind of pro-Christian white supremacy agenda, although that would be tricky in Africa. Why don't we have a strategy for our foreign policy? Why don't we focus on the real threats, the imminent threats to the United States? We've degraded a lot of our intelligence community assets in the United States, and that worries me enormously. And recent articles just talked about how Russia has been able to degrade and invade the cyber protections in Europe. So all of that leads me to believe that people are going to be radicalized on the web. ISIS has a very sophisticated use now of technology, and this is where we need to go, and this is what we need to beef up. And so these random actions around the globe, take Venezuela, if I could just
CFDs and manipulated counterparts of futures.
But nobody was defending
Strip it of volume. Your mic is on Bloomberg or something goes through the Discord.
And he has now been pardoned. And the new person that
you
Trump
can hear
supported has just been elected in Honduras.
You can hear the other news. Okay, yeah, I listen to other news sources.
Why?
Well, let me ask you. I've only got 1
All right.
minute left.
Is it
Jane,
loud,
I'm
Henrik?
loath to cut you off. If we're striking targets
Let me
on the
turn it
ground in
down.
Nigeria, will Venezuela be next?
Is that better?
Who knows? I mean, I don't.
I try and get my volume levels to where I can hear it, but it doesn't go over the mic.
The sad part, let me just, in my 12 seconds, where is Congress? Where is Congress? Congress just last week defeated 2 resolutions to assert itself.
Okay, cool. Thanks, brother.
Line votes. Go figure.
All right, I'm gonna
Why
get
did
back to
Congress
my
come back
my
from its
busy
long,
work here, trying to make things a
closed for
little better.
business,
I got the list of shit I'm doing. I gotta
vacation,
build a
or
website
that's not
too.
fair, but closed for business,
All right, guys, let's just watch it and see what we get. See if we get a reversal to go to the long. We're kind of drifting away from the VWAP on both the NQ and the ES. I'm really liking that action. That's what I was hoping was going to happen. Then I got caught in the rotation back up. But then I got bailed out down here on these candles. I got bailed out. So I was in up here, and I took heat, and then I got bailed out here, and the short was still good off the 20 EMA, so that's kind of nice. So if we get a reversal to go long, then maybe I'll look at that trade. But right now, I'm just kind of, I already made my money on the short. So I'll just wait for my next day setup, and we'll see if we get another chance today. But I'll check back in 15-20 minutes, guys. I'm always watching the chat, so if somebody says something, I'll try and hop back on and answer if I see something. But I'm just working away here. Let me know if you need anything.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Hey, have a good day. Let's get weird. Yeah, I don't think I'm doing much of anything else either, brother. I think I'm just gonna keep what I got and feel happy because I took heat to get it. But the trade was right because it's working out the way I wanted to the first time, but I don't think I want to get into another one. I'll wait for better volume. But you have a good weekend, man, and maybe we'll see you Monday. The stream will be back up Sunday night, 6 o'clock, brother. Have a good weekend.
It's Balance of Power on Bloomberg TV and radio, Boxing Day edition, as we dig through receipts from the shopping mall and the websites, of course. And it does seem like we are, in fact, spending even more time at the shopping mall or in the store. Bricks and mortar doing pretty well, according to some of the numbers that we saw from Visa and MasterCard coming into the holiday. Visa had total U.S. retail spending up 4.2%, beginning of November to Christmas period, a little bit below the forecasts, but found physical outlets remain dominant, accounting for more than 73% of transactions compared to 27% online. Maybe it's all the procrastinators like me who are out there on Christmas Eve running through aisles to see what was left on shelves. This, of course, all plays into politics, with the President of the United States preparing Americans to do with less in a period of time where prices remain stubbornly high. He said just recently in his speech on affordability that you may not need 37 pencils or 50-something dolls this Christmas. We may need to go with less, even as in some cases Democrats speak to the issue of abundance. How this all comes together politically for the White House is something that we talk about with Laura Davison, Bloomberg's Washington Deputy Bureau Chief, who's propping up the operation today. It's great to see you, of course, knowing that these were actually pretty decent numbers coming out of the holiday, knowing that we haven't seen an explosion in inflation based on the tariff regime, just kind of sticky prices. How do we think about the economy going into the new year and what the president predicts will be a boom?
Well, this is certainly what, Trump is out there talking about, saying, look, there was all this doom and gloom that inflation would be running wild because of the tariffs, and that hasn't, at least in the data yet, really come to pass. But what we're hearing from importers, what we're hearing from companies is, one, because of all the uncertainty with the tariffs. They were on, they were off, maybe they'll be off again. We'll hear what the Supreme Court says. In addition to just that these things take time to kind of work their way through the system, that retailers were really hesitant to raise prices. But after, we get some sort of clarity about whether these tariffs are here to stay, retailers are suddenly going to have to start incorporating that into their supply chain, into their pricing mechanisms. And that could mean these are hitting
January 9th. Let's take a look at metals because they're just up, up, up and away.
Right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
In case you missed it on Balance of Power.
Let's play a game. Who's your favorite recording artist?
Kiss.
No, come on. Somebody from the past,
Why can't we go with it? All right, Jimi Hendrix.
Jimi Hendrix has never in his entire career or now ever gotten paid a single penny when his music is played on AM and FM radio. The stunning fact is that the Russians and some other countries actually do pay performing artists on radio, and Americans do not. And this has got to change and should change. No matter who you hear on AM and FM radio, they're getting 0 pennies for the airplay. The new artists, every penny counts. And the fact that they can be played on radio and not even make 1 penny for their performance is criminal.
Don't miss Balance of Power live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/finds treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's Balance of Power on Bloomberg TV and radio. Thanks for joining us as we keep a live view on Capitol Hill now, an empty building for the most part. But there is a big to-do list there waiting for lawmakers when they return next month. Of course, having left the matter of Obamacare subsidies unresolved, not to mention funding the government at least beyond the end of January. This is something that we're watching closely. Two parallel items here: funding the government and also, by the way, dealing with the Epstein files, because the healthcare subsidies may not be solved as we work our way through the balance of the year. There will be a vote that was brought by a discharge petition, but outside of that, it's unclear that there will be a path forward. Something that we want to spend some time with Bloomberg's Mike Dorning talking about from our Capital Influence team. Mike, it's great to have you. I hope you had a great holiday. And as we get back to things in the new year, there are a lot of questions about whether we will be heading for another government shutdown. Before we get that far, though, we do have the matter of Obamacare subsidies to be addressed, as well as the Epstein files. Chuck Schumer is talking about putting up legislation here that would force the disclosure of more files here. And Tom Massey and Ro Khanna in the House want to hold the Attorney General in inherent contempt. Will either of these efforts go anywhere?
Well, I think it'll depend on what the talking about Obamacare, what the Trump administration does on the Epstein files. You'll hear this banging on the administration on the Epstein files, but they're still in the process of releasing them. Yes, they've missed the deadline. Yes, that does break the law. But if the files do come out, or enough of them come out to take some of the steam out of this, then there won't be enough Republicans that are willing to defy the president. But it's kind of a dynamic situation there. And the way to bleed some of the pressure out is just to release enough files to peel off the rank and file Republicans from this movement.
Yeah.
On the health care, they forced the vote. That was going to be an important political vote in the House. And you will probably see the Obamacare subsidy extension pass the House as a way for some of the Republicans who are at risk of losing their elections to sort of say, we want these subsidies extended. But then that goes into the Senate, and the leadership of the Republican Party in both the House and the Senate don't want these subsidies extended. So they'll work against it unless President Trump weighs in. He could obviously tip the balance if they're feeling enough pressure to extend these subsidies.
How closely are we connecting Obamacare subsidies and a potential government shutdown, or should we not be thinking about it like that? Nobody wants to relive this whole experience after the longest shutdown in history, and Chuck Schumer has indicated that he's looking to work with John Thune. Mike, there is the risk of sleepwalking into a shutdown. How should we be thinking about this?
You've absolutely got it. The party leadership on the Democratic side does not want another shutdown, or if possible, if they have to have one, as short as possible. They made their point in the last shutdown, which broke a record, and they weren't able to get the Republicans to cave on the Obamacare subsidies there. There is a dynamic within the Democratic Party, though, that there are a lot of Democrats on the younger side, on the more progressive side, that don't feel like the leadership has pressed this point hard enough and would like to see them pressing other points harder. So even though the leadership is trying to stay out of another shutdown, you're right, there is a risk that we could sleepwalk into it as the Republicans kind of refuse to go along with Obamacare subsidy extensions and things like that.
Well, this could be a fun year, I'll tell you.
Yeah, I mean,
you think about what could be produced as opposed to.
High, but
yeah, okay, that's good to hear. Until it is, right? Well, you think about what could be produced as opposed to what could be avoided here. Mike, will we get new crypto market framework legislation? Is there anything new that lawmakers can craft in 2026?
The crypto market legislation is definitely something that's quite likely. You've got you've got Democrats and Republicans who are committee leadership that are joined on that. So you've got a fair number of Democrats that are interested in doing something on that in the Senate. You've got a lot of money in the crypto industry. They have, I think, over $250 million already in their campaign war chest to influence the upcoming congressional elections. So there's a lot of reasons to do this, and it's more likely than not that they will succeed in some way. That said, there is some opposition, both from the banking industry, they want concessions, and also from more progressive, sort of consumer-oriented Democrats that want more protections for consumers and investors.
Got it. Mike, thank you. It's great to have you with us. We're going to have a lot to chew on in the new year with Mike Dorning from our Capitol Influence team here in Washington. He's got his eyes on Capitol Hill for us every day. We've got our eyes on the weather as well right now, not here in D.C. We're actually going to dodge the bullet. But if you're in New York, New Jersey, or Connecticut, it's coming. A couple hours from now, as a matter of fact, with a winter storm warning in effect and snow that's supposed to begin right around 4 p.m. Eastern. It looks so calm right now on Bloomberg TV as we check out the Manhattan skyline. Josh Saul has this covered for us from the Weather Department here at Bloomberg and is with us now. Josh, it's good to see you. What kind of travel interruption should we be ready for? I'm seeing reports of 8 inches coming. Is that what you expect?
Could be up to 9 inches, which will be as much as we've seen in this area since 2022 when Central Park got 9 inches. When Central Park got about 7.5 inches. What makes it especially dangerous this year, obviously one of the busiest travel periods of the entire year. It's going to stay real cold overnight, which means that all that snow and ice is not going to melt. It's going to be there on the roads, making travel more difficult for drivers. And another issue that came up in our reporting is that everyone is flights have been so bad. A lot of people more people than before have chosen to drive this year for their holiday plans. AAA says about 110 Americans on the road around this period. So the roads are crowded. A lot of people driving instead of flying. So this intense amount of snow and ice potentially making post-Christmas travel really dangerous.
Man, yeah, 9 inches in New York. I mean, you're actually... That's a shovelable snow, as they say. Are the airports ready?
Yeah, get out the sleds if you have kids. The airports are ready, but already a lot of cancellations. We've got about 1,400 cancellations across the U.S. A good chunk of those are in New York City's big 3 airports, and we're seeing cancellations, of course, even before the bad weather starts. You have to think about travel and flights that are starting long ways away, 19 hours from Singapore. Those flights are canceled so that they're not landing or arriving in New York City in the middle of a snowstorm that would make navigation difficult.
Yeah, wow. Well, I guess we'll have the weekend to clean up, but a lot of folks, of course, with holiday travel are going to be dealing with some potential interruptions here. Josh, thank you. It's great to have you with us here on Balance of Power. Josh Saul at World Headquarters in New York. We'll try to get back to Josh in our second hour as we count down to the first flakes fall. And it does remind us the season that we're in here and, of course, the importance of travel when it comes to the economy. We knew that there would be a lot of folks out and about this year, and with the benefit of lower oil and gas prices, potentially a bit of a stimulant for the economy. And it's where we turn with our political panel Joining us right now, Bloomberg Politics contributor Rick Davis, fresh off the holiday, Republican strategist and partner at Stone Court Capital. Doug Farrar is with us as well, former director, the Office of Public Affairs, Democratic strategist with us here, having come from the FTC. It's great to see you both. Rick, the economy is hard to ignore coming off a holiday like we're just seeing now. I'm picking through some of the numbers. It looks like retail sales were up anywhere from high 3% to low 4%. And prices were pretty well stubborn, consistent through the holiday shopping season. What kind of a look is this going to be as we enter the new year and the administration predicting a boom in the economy in 2026?
Yeah, some of the data is really head-snapping. I mean, when you look at consumer sentiment, even this month, you haven't seen much worse consumer sentiment in a decade. It's sometimes all-time lows in the last couple of months and consistently borne in. But then you see the record stock market, the red-hot GDP numbers, decent sales figures for the holiday, and I think it's going to be a roller coaster. Even the Fed seems somewhat, head scratching when it comes to how do you balance the sort of persistent inflation with a worsening job market. So I think this is going to be a very challenging year. I hope we set records on the economy. Nothing's better for the federal deficit than a big growth rate. I'm all for it, but let's not put the goose before the gander.
Well, fair enough, Rick. And, I guess we do have some reasons to be optimistic here, Doug. We didn't see the doom and gloom scenarios that so many economists predicted. And we've got a market here. I realize we're down a little bit today, but basically at an all-time high to end 2026. How do you rationalize those two?
Well, I think it's mostly being driven by circular AI investment. And when I think about what the president promised, he said he wanted to lower costs. He wanted to increase manufacturing jobs. We're down 49,000 jobs. Tariffs are really having a huge impact on consumers, especially those outside of, the top 5 or 1% of Americans. And really what's holding up the economy is this sort of unbridled AI investment that the president is stoking through his own policies. And obviously AI is great and an incredibly innovative tool, but one wonders how much that's hiding some softness in the economy.
Yeah, well, I'll tell you, circular investing, you're going to get some attention when you use that phrase here on Bloomberg. Doug, is this AI spend looking like something less than Wall Street is hoping it is to you? What does that mean for next year?
Well, I think these companies are sort of sending money back and forth and describing, future growth and revenues that is unclear where they're going to materialize from. I also think you've seen AI start to become more unpopular with voters, and not just with voters who might be driving trucks or doing jobs that are immediately threatened, but also white-collar workers who are looking up and thinking my job may, be threatened by artificial intelligence. At the same time, you've seen adoption of AI programs by businesses be pretty ineffective. According to a study that was issued by MIT, some 95% haven't increased productivity all that much. So I think we're making a huge bet, both the markets and the government, frankly, on the success of AI. And, the government's already taking steps to make sure that bet won't fail, or if it does, that there'll be a bailout, given all the money that they're throwing at it and the regulatory support. So it's a little concerning that we're so overcommitted, or maybe not overcommitted, but so committed to this particular sector.
Rick, I've just got 30 seconds in this block. Will the Supreme Court ruling on tariffs be the most important thing for the markets next year?
I think it'll be really influential because obviously what happens if they rule against the president's use of executive powers to implement these tariffs, and then how do they back that out? There are hundreds of billions of dollars at stake of government spending that has to go back to consumers. So I do think that's one of the critical aspects of this. But as we've seen, the Supreme Court.
Rick and Doug will stay with us. We'll have a lot more of our panel straight ahead, huh?
what some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Watching Wall Street here on Balance of Power in what is the final trading session of the weekend. We've only got a handful more to get our way through the year here. We had a nice pop in the early going, but we've managed to give up most of our gains here with the broad market turning south. The S&P 500 and the NASDAQ down fractionally each, down about 7 points. Vonnie Quinn is watching the markets for us here from World Headquarters in New York. Vonnie, I guess we shouldn't read too much into this on such a light volume trading day, knowing that the markets went into Christmas at all-time highs.
Literally 1 and 2 trades have disappeared, Joe. We're at about 50% of trading volume for the last 30 days. That's actually even more than you might have expected on a day like today, particularly with a holiday on a Thursday. That said, we're trading close to records, and nobody is that disappointed, I think, because there were so many question marks over whether there was a bubble in AI, whether the circular financing would pose a problem, whether these SPVs that some of these companies are using to hold debt off balance sheets, whether that would become a problem. All those worries have been set aside. So the S&P 500, it might be down 0.1% right now, but we are trading at close to records, and we're up 18% on the year on that index. As for the NASDAQ 100, we're up more than 22% on that index, even if today it is flat. Plenty happening under the surface as well. Let's look at yields, because those are potentially a mover next year as well. Right now, we're range bound between 410 and 420 on the 10-year. We are waiting on fresh non-farm payrolls data, though. That comes January 9th. That's going to be the next big catalyst, although we do get an ADP employment change report next Tuesday. And we also get the Fed minutes next Tuesday, which will be interesting just in terms of personality, consensus, how consensus can be drawn, how many dissents and how strong the dissents were. We'll get more details into all of that. And of course, early in the new year, we'll get a name for the new Fed chair nominee, and that may have an impact on this market as well. But let's take a look at metals, because that's a fascinating story. Here we have gold, silver and platinum all at records. I mean, they've just been going up all year long. Silver has been going up almost twice as much as gold. It's up 150% year to date. Gold, for its part, up 70%. Now, you could credit escalating geopolitical tensions, but we have oil lower today. Surprise, surprise, down 1.9% on the potential for perhaps some kind of Ukraine détente. So back to those metals, you can basically credit everything from central bank buying for gold to industrial uses and stockpiling ahead of tariffs for some of the other metals, and just general speculation as well, according to a lot of traders. And then if we take a look at the dollar, we have seen dollar weakness. Today we're slightly stronger. Some some sterling weakness, giving up some of that strength we've seen over the last few days, euro as well, but particularly the yen. It's another 0.5% weaker today. We've had 2 rounds of verbal intervention on the yen, don't forget. So the Bank of Japan is going to be watching that very, very closely. The Bank of Japan having turned hawkish and just really might be in trouble into the new year if bears continue to keep hold over the yen.
Pretty amazing. When you talk about the metals here, to see the gold and Bitcoin charts put over each other here. You've got gold up another 1.5% today. We're above $4,500 an ounce. And when you think what we saw with Bitcoin going into the president arriving at the White House, it's down about 530 right now, trading just above $87,000 for a token. It's just role reversal with these two, isn't it?
Exactly. And in fact, Bitcoin down on the year unusually, although we are at higher levels than we were before, as you say, the president went into office. I think for Bitcoin, some of the catalysts might come next year with maybe, more legislation around the Genius Act. Will stable coins get more regulated and so on. But also the fact that Bitcoin had been trading as a risk asset, but now it's sort of dropped off as a risk asset, whereas gold had always been trading as a safe haven. It is really quite amazing how the two have diverged, having really moved together for so long, as you say.
Isn't that the truth, Vonnie? Thank you so much. We'll get back with Vonnie Quinn a little bit later on here on Balance of Power as we watch Wall Street on a quiet day here, the day after Christmas, and only a few sessions left next week. So the numbers that Vonnie was talking about are going to likely be pretty close to where we end the year, with a NASDAQ up about 22%, and S&P 500 up about 18%. Little movement today as we watch here. We want to bring the panel back in following a pretty wild 24-hour period for Donald Trump on social media. He was very busy there at Mar-a-Lago with a number of posts. In fact, too many that I could even count. I mean, it was dozens. Rick Davis and Doug Fair are back with us. Doug, I don't know if you managed to read some of these, but they included several Christmas messages. And coming from Donald Trump, I guess they might not be that much of a surprise, but just sometimes you need to just kind of reset your clock here and remind yourself that this is the President of the United States. In this case, Merry Christmas to all, including the many sleazebags who loved Jeffrey Epstein. This is a long post. Gave him bundles of money, went to his island, attended his parties, and thought he was the greatest guy on earth, only to drop him like a dog when things got too hot, falsely claiming they had nothing to do with him, didn't know him, said he was a disgusting person, and then blame, of course, President Donald J. Trump, who actually was the only one who did drop Epstein. Doug, I read all the way to the bottom here, and it says, enjoy what may be your last Merry Christmas, President Donald J. Trump. What does that mean? Granted, the spirit of this message is sarcastic, but to predict your last Merry Christmas is pretty heavy coming from the commander-in-chief, isn't it? Is he talking to Democrats?
I hesitate to want to get in the head of the president. I did, unfortunately, read a lot of his Truth Social posts over this Christmas period. I thought we were saying Merry Christmas again. That was sort of one of his campaign promises. Now it's our last Merry Christmas. I don't know who he's threatening it with those messages, but what I will say, zooming out, is, every accusation is a confession. And across the millions of documents that are going to be released by the Department of Justice and already have been, clearly the president had a very, very close personal relationship with Jeffrey Epstein that included sort of friendly poems that they traded back and forth and other sort of inside jokes. And so I'll be interested to see what we find out from these document releases. But certainly the president may be trying to soften the ground for some bad news that may come out of that demonstrates his relationship with Jeffrey Epstein in ways that are both politically kind of questionable and also morally ambiguous. So I'll be watching to see.
There's another Christmas message. This one came earlier in the day. Merry Christmas to all, including the radical left scum that is doing everything possible to destroy our country, but are failing badly. He says we no longer have open borders, men and women's sports, transgender for everyone, or weak law enforcement. What we do have is a record stock market and 401ks. Rick Davis is back with us. Rick, is this president moving the line, actually changing what's considered acceptable decorum for the commander-in-chief, or does all of this belong to Donald J. Trump and will eventually go away with Donald J. Trump?
Well, I don't think you can look at it in a vacuum. There's no question that his first term entered in a new era of dialogue for an American president. Kind of took the wheels off, and we saw some of that reoccur during the Biden administration, not to the extent or the degree of which it did, but I think he's really accelerated it this second term, and I think a lot of these things we're seeing, especially during this holiday period, is a real shot to his base. There's no question that he had a bad last quarter of 2025, and especially as it relates to Republicans who are peeling off of him because of his stewardship of the economy or entanglement into these foreign military adventures. And so my guess is everyone got together at Mar-a-Lago. They brought in the Christmas cheer and reminded him that without his base, he can't get anything done in Washington, and that he better get on it. So I see this nothing more than a sort of, crass political effort to try and, solidify his base. And hopefully that's all it is, because we'd hate to see this kind of conduct or rhetoric continue on, year after year.
Yeah, pretty amazing. It was more than 100 posts on Truth Social, Doug, in the early hours of Christmas, targeting former presidents Joe Biden and Barack Obama, Marjorie Taylor Greene, Ilhan Omar, Senator Mark Kelly, Somalis in Minnesota, Michigan's Secretary of State, Democrats in California, and rhinos by name Tom Massey. We've only got a minute left. Doug, we talk about what might come after Donald Trump, and in fact, it seems to be J.D. Vance based on some of the endorsements that we've heard about recently. Does MAGA continue with this kind of language in another politician, or does this belong to Donald Trump?
What President Trump's always been effective at doing is rhetorically keeping MAGA on sides, and you can see that excellent point that Rick made, that they are really leaning into throwing red meat to the base. But it's sort of like that old expression, who are you going to believe, me or your lying eyes, right? I mean, on foreign policy, we've bombed this year Iran, Iraq, Nigeria, Somalia, Syria, Yemen, the Caribbean, and the Pacific, right? Lethal strikes, and he wants a peace prize. On prices, he says he wants to lower prices on day one, but prices are through the roof. So I think what we're seeing is a rhetorical attempt to keep him on side, and I don't think that Vance will be able to do that.
Doug Farrar and Rick Davis will be back in our second hour here on Balance of Power. Hope you are too. Stay with us on Bloomberg TV and radio.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy. Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
No, it was impossible.
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
In case you missed it, on Bloomberg Open Interest.
The kids, the millennials, they now all of a sudden have to pay back their student loans again.
Part of the millennial generation, when we also graduated, you were dealing with the aftermath of the financial crisis, and you also had this problem of finding jobs.
Weakness in the labor market is not just the young people, it's also my generation, the baby boomers. 67% of companies said, we're not thinking about hiring right now. That will change. This is a great time to be alive, I think.
Don't miss Open Interest, live weekdays.
This is Balance of Power, live from Washington, D.C.
Could there be a breakthrough on Ukraine? Welcome to the Friday edition of Balance of Power as President Zelensky prepares to travel to Florida to meet with President Trump at Mar-a-Lago before this weekend is out to talk peace, of course, with a 20-point peace plan on the table. We're going to get the latest on this in just a moment from Bloomberg's Laura Davison with insights from former ambassador to Ukraine, John Herbst. We'll check the markets a little bit later on with Vonnie Quinn as things turn south on us today. We'll have analysis from our political panel. Rick Davis and Doug Ferrer are with us for the hour. As far as the markets go, we have given up an early lead. No major losses, but the S&P 500 is down about 5 points in the remaining hours of trading, tipping slightly lower. The NASDAQ is down 2, and the Dow Industrial Average is off about 92 points. Bitcoin slightly lower as well, down about $600, still above $87,000 a token, and gold is pushing ever higher, up $65 now. $45.45 an ounce and a record-setting run for gold. We are seeing some bid under NVIDIA as well. It's up a little more than 1%, $2.50 on this new licensing deal with Grok, and we're mixed up in the retail space following news on holiday shopping. Visa says total U.S. retail sales up a little more than 4%. MasterCard in the high 3s, 3.9%. And we'll have further details on how holiday spending panned out in the days ahead, of course, that could help to fulfill a little bit more of a Santa Claus rally before this year is over. We'll find out together. As we keep the beat on geopolitics and some important developments over the Christmas holiday that you might just now be hearing about, including U.S. strikes against Nigeria, striking ISIS targets in Nigeria. And now, of course, this potential meeting that sounds like, well, I should say potential breakthrough. It sounds like a real meeting. President Zelensky will be at Mar-a-Lago on Sunday to meet with President Trump, and we cover all of this with Laura Davison, Bloomberg Washington Deputy Bureau Chief, who's with us now in our Washington Bureau. Laura, let's start with Nigeria and what was behind this. The president, the administration has been talking about attacks against Christians in Nigeria. Is there any evidence that this has been an issue, and who did we target?
So the targets were these Islamic State sites in Nigeria, in the northern part of the country. Trump, for several weeks and really months now, has been talking about persecution of Christians, attacks on Christians in the country, and that Islamic State is particularly targeting them. The Nigerian government has pushed back strongly on the notion that Christians in particular are being persecuted, saying this is, that yes, terrorism is a problem, but that both Muslims and Christians are being affected here. And the Nigerian government actually worked in concert with the U.S. government in these strikes and are working for more strikes to come, as we heard from the Defense Secretary Pete Hegseth. Okay, so ISIS then remains a problem for Nigeria, but the attacks on Christians is where they draw the line. Is that fair to say? Yes, yeah. So they're united in sort of the actions, the military actions that are being taken, but the motivation behind them is where the U.S. and Nigerians are singing from different songbooks. Yeah, multiple strikes, the president said. We don't have a readout on exactly
what was targeted, how many aircraft were involved, et cetera, from the Pentagon?
Correct. We have very few details on exactly what the sites are, that, who may have been killed, the number of sites, and, what weapons were used, et cetera. So that's all very cloudy. Really, all we have is essentially a tweet, a social media post from the president saying this happened.
Really something. I don't know what we're going to hear about Ukraine this weekend, Laura, but it's pretty important. It looks like Volodymyr Zelensky will be in Florida to sit down with President Trump at Mar-a-Lago. Trump has said, unless there's an agreement at hand, unless there's a deal here, he has no reason to meet with Zelensky. Does that mean we're on the verge of a breakthrough?
It would certainly suggest that there's some forward momentum. What we heard from even Zelensky, a couple days ago was that he was not optimistic for a deal. He said it didn't sound like the Russians wanted to negotiate, and that there had been all of these, these talks between U.S. officials and Ukrainian officials and U.S. officials and Russian officials, and just it seemed like we're at a stalemate. There was no progress being made. Something must have changed over the past couple days, and now Zelensky's headed to the U.S. So it's not clear from the Russian side that they are really, open to negotiating, open to this deal. They are still wanting some of these land territories that, that Ukraine still controls.
Amazing stuff, Laura. Thank you very much. Laura Davison will likely be editing stories about that visit come the end of the weekend, so it's something that we'll keep a close eye on. And we want to add the voice of John Herbst, the former U.S. ambassador to Ukraine and Uzbekistan, is with us right now on Bloomberg TV and radio. Mr. Ambassador, it's great to see you. Will President Zelensky be walking into the Lion's Den here in Mar-a-Lago, or a room where he could, in fact, strike a peace deal?
Joe, thanks for having me on. It does seem that there has been substantial progress in negotiations between the United States and Ukraine, which is not surprising because Zelensky has said yes to 5 or 6 Trump proposals.
All right, we got a long signal that happened right here, but we got a red forecast cloud. We don't really have enough volume, and we're messing around the VWAP. So all of this is it's a path to destruction if you're not careful. This is all dangerous area right here on the NQ.
Since January.
ES.
Do you see that being the
case? ES is still below the VWAP. It hasn't come back to it yet.
About to turn position on this as well.
But we don't even have enough volume
nearly 11 months
to do anything anyway.
Months now since he's returned to the White House. Take periods where he's been very tough on Zelensky.
Low. All right. So I'm just checking in, give you an update on the charts. I don't really have any clear signal yet on the ES or NQ. Playing around the VWAP. We'll just keep looking. We're in a fair value gap right now of resistance with a support right below. All of this is just bad. This is a bad place to be. Bad place to be.
While conceding some things,
all right.
Has also stood tough on others.
We'll keep grinding it out. I'll check back another 15, 20. We'll see where we're at.
Days is Zelensky's agreement to perhaps hand over, not to the Russians, but to demilitarized economic zone, areas in western Donbass which are strategically valuable, which the Russian army has been unable to take. But he's insisted, and this is new, and the U.S. seems to have agreed, that Russia must pull back equally from the areas that it controls in Donbass. And what Zelensky has insisted on, it seems that the U.S. has agreed, that there has to be serious military forces. So we're not talking about peacekeepers from the global south in that area to prevent future Russian aggression. And what Trump seems to have conceded on too, which Zelensky has long sought, are clear guarantees, secure guarantees from the United States ratified by the Senate. And now, according to what's in the media, which we can't be certain is accurate, but if it is accurate, it's interesting, the U.S. side has seemed to agree. So we've seen some serious movement by both Ukraine and the United States in the past week or so. Again, what we have not seen is any indication of Moscow's willingness to compromise.
What you mentioned what could happen in the Donbass, and I realize that could take on a couple of different forms. Is a demilitarized zone off the table at this point?
Well, it seems that the demilitarized zone is very much on the table. But the Russians had insisted, and still have not changed its position. Ukraine gives to them territory the Russian army has been unable to take, and the Russians do give nothing back in return in Donbass. What Zelensky has insisted, and apparently the United States has agreed, is if Ukrainian forces are moving back in western Donbass, the Russian forces have to move back at least a comparable amount, and as keep that as a demilitarized territory. So that's a serious concession. And again, if the U.S. has agreed there have to be troops, serious troops, in that area, in that demilitarized zone, international troops to prevent further Russian aggression, that would seem to be another element of compromise from Team Trump.
All right, so you sit down at Mar-a-Lago and talk peace. Does that mean that Vladimir Putin also needs to sit down with President Trump? Will they get back to this idea of meeting in Hungary?
Well, I don't know where they'll meet, but I assume if Zelensky and Trump are satisfied after their meeting, then there'll be some form of reach out to the Kremlin. Now, according to the media, Kirill Dmitriev, who's the Putin envoy, was in Florida this past week, and so he apparently has reported back on roughly the terms that have been reached between the U.S. and Ukraine, and the Russian reaction has been interesting. They haven't rejected it. They've praised Trump's efforts to achieve peace. They said they're willing to continue to negotiate, but things Putin said as recently as a week ago would not allow the sorts of ideas that Zelensky and Trump seem to be agreeing on to be accepted by the Kremlin. But again, we'll see. Putin has been meticulous about trying to avoid annoying Trump, albeit without conceding one little bit. At some point, he may not be able to do the two things together.
To what extent is President Zelensky trying to head off the constant communication between Steve Witkoff and Moscow, whether he's talking to Putin or his lieutenants? Is that why he needs to get to Florida right now?
Well, I think that the plan that was given to Zelensky by the Secretary of the Army Driscoll in the middle of November was far too favorable to the aggressor, to Putin, and reflecting, I think, Kremlin influence on parts of the Trump team. But that was corrected, within a few days when Rubio met with the Ukrainians in Geneva. Rubio and Witkoff met with the Ukrainians in Geneva. And since then, we've seen a back and forth of ideas. And we've seen Ukraine being willing to compromise, but not to make fatal mistakes, like simply giving Ukraine highly strategic land in Western Donbass without security guarantees, without any requirements from the Kremlin to actually make peace. And again, the deal that has been emerging, again, we only have some of the details, we don't have enough, suggests that the United States has taken account of this. And this reflects, again, Ukraine's ability, Zelensky's ability to advocate for their positions and Team Trump's willingness to listen to them. And that's a good thing.
Really fascinating. What does China make of all of this? What is President Xi watching in Ukraine?
Well, Xi is watching intently American policy in this war. He doesn't want Russia to lose. And by lose, I mean Russia not being able to take effective political control of Ukraine, which is why Xi has provided significant support to Putin, albeit trying to avoid American red lines, like by sending weapon systems to Russia. But he wants us, he wants to see America allow Putin to win in Ukraine, because that would be a sign of great weakness, which Xi would, you might say, interpret as meaning he has a free hand to go after Taiwan.
We are spending some time with former ambassador to Ukraine and Uzbekistan, John Herbst, ahead of this meeting at Mar-a-Lago on Sunday between President Zelensky and Donald Trump. Trump said he would end this war on his first day, Ambassador. Is there a chance he ends it in his first year?
No. The only way this will end is if Putin understands the United States is determined, that Trump is determined to achieve his stated goal of a durable peace. Not a peace which enables Putin to come back from war of Ukraine in 6 months or 12 months or 36 months. But the only way to do that is to make it extremely painful for Putin to continue. Because for Putin to have effective political control of Ukraine, he has to take a great deal more of Ukrainian territory, including Kyiv and Dnipro and Odessa, which means a lot more fighting. The only way that Putin understands he cannot achieve those objectives is if Trump puts serious pressure on him in three forms. One, greater sanctions, more of what Trump did in October, meaning the sanctions on Lukoil and Rosneft, two major Russian oil firms. Two, major weapons supplies to Ukraine. Under Trump's view, it doesn't have to be paid for by the American taxpayer, but the Ukrainians and the Europeans will pay for it. Three, the United States should work with our European allies at making sure the $300 billion, roughly, of frozen Russian state assets in the international financial system go to Ukraine. One of the bad proposals that was presented to Zelensky in the middle of November, reflecting undue Russian influence, was that Ukraine would get 100 billion of those assets, and the U.S. and Russia would get the majority of those assets. That was not a good look. That suggested to Putin that the Trump team was not going to be tough.
With the potential of much more fighting ahead, former Ambassador John Herbst, we thank you for the insights, and I hope you had a great holiday. Happy New Year. Thanks for joining us on Bloomberg. I'm Joe Matthew in Washington. We'll assemble our panel a bit later on this hour. Much more to follow on Bloomberg TV and radio.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
In case you missed it on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Thanks for joining us on Balance of Power. I'm Joe Matthew in Washington. This day after Christmas on Bloomberg TV and radio, we're watching stocks lose a bit of ground, and bit being the key word there. The S&P 500, which finished Christmas Eve at an all-time closing high, is down just about 5 points right now. The NASDAQ is losing 3. We'll check in with Bloomberg's Vonnie Quinn for a bit more here on the Friday trade and holiday light volume as we consider the recent conversation that Bloomberg Wall Street Week David Weston had with the boss at Bank of America, CEO Brian Moynihan. Let's listen.
The AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at customer or client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus, up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer, and you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
You have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year, and we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say in the 4.5%, which is very consistent with a very solid growing economy. In the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster, but even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, or 40-year, it's 5 and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. Then you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that, and the consumer's in pretty good shape. Spending more money, employed, and earning more money, but differences between different types of consumers, and then being wise in how they spend. If they, they trade down, and all the things you're hearing the retailers talk about are true, but the aggregate amount of moving in the economy is still growing.
So you mentioned flattening out in the employment growth. There are always risks to the upside and the downside in any of the numbers that we project. How concerned are you about the downside? Because certainly the Fed is very focused on a softening labor market and whether that may be a problem for us.
So if you look at the predictions for our team and the other economists for unemployment, we're kind of peaking out at this level now in the mid to 4.5, 4.6 range, and then it sort of flattens out. But the Fed has to be wary because they have a mandate to maintain full employment, and we're at full employment now, and they have a mandate to maintain price stability and inflation fighting, and those two mandates can work together sometimes and against each other sometimes. And right now we're in that unusual case where the labor market has softened, and yet the inflation, because the massive buildup inflation after COVID and stuff is now still working its way down. Our team predicts that the inflation rate will get to the Fed's target, through the end of 27, but it's continuing to work in the right direction, which gives the Fed, in our view, latitude to keep cutting rates next year, especially in the first half. That will then provide a stimulus in the second half of the year. Those rate cuts do benefit the consumer somewhat, but in fact benefit small businesses, because in mid-sized business, they borrow on lines of credit, which are floating rate indices, and as rates come down, they get instantaneous benefit. And if you hear our small and medium-sized businesses, they're pretty optimistic about next year, telling us they expect to grow, they expect to hire more people, and those small businesses are the backbone of the U.S. economy. We're the largest small business lender in the U.S. economy, so we see them being very active.
This year has been good for the markets. It's also been good for Bank of America. What do you need in 26 to continue the growth?
Look, we just need our team that's done a great job for us over the last several decades to keep doing it. And what they need to do is go out and get one more client and do one more thing with every client we have. And they know that across all of business, whether it's our markets teams, whether it's our global corporate investment bank teams, our consumer teams, our wealth management teams, all of them need to go out and just drive more business. And that organic growth engine, which you described in our Investor Day a while back, that is intact. It's been growing with the market. And now, because of some dynamics in the repricing of the balance sheet, we'll get more earnings lift out of it like we did in the third quarter. But that organic growth engine, more customers and more with each customer, has been driving a Bank of America, and our team just needs to do more of that, and they know that.
Bank of America CEO Brian Moynihan in conversation with Bloomberg's David Weston. Bank of America shares are slightly lower, along with most banks today, down about 20 cents right now, about 1/3%. But indeed, David's right. It has been a good year. B of A stock up about 26% so far in 2025. Most banks are lower. Citigroup, money centers are all down. Citigroup's down a little more than 1%. JP Morgan down about 0.6%. We're seeing BlackRock, Goldman Sachs trade lower as well, with a little bit of a give back today in the markets after closing at an all-time closing high on the S&P 500 on Christmas Eve. Bloomberg's Vonnie Quinn is watching Wall Street for us today in holiday light trading. In this Friday session is with us now for a bit of an update here. We did give up some early gains. Vonnie, what seems to be on traders' minds?
Sure, yes. Several stocks reversing gains now, Joe. I mean, it is coming into the afternoon hours, and incredibly, it is a full trading day, so stocks will trade until 4 p.m. That was not the case on Wednesday. They only traded till 1. So potentially this is a little bit of profit taking before the weekend. It's going to be very light trading next week as well. Today we saw about 50% of the 30-day moving average traded. That said, we haven't given up too many gains. We're still very close to records on that S&P 500. It's down just fractionally, less than 0.2%. The Nasdaq 100 is down just a few points, not even 0.1%. The Russell 2000 is doing the worst. It's down 0.7%, and that's true of the year as well. It's gained about 14% versus a gain for the S&P of 18+ and a gain for the Nasdaq 100 of 22+, and that's mainly thanks to the Mag 7, which as a group are up 27% year over year. Let's take a look at yields, because potentially that's the story for next year as the Fed potentially goes on pause. Now, 2 cuts are priced in for next year, but there's just an 18% chance priced in for January of a cut in January. So traders very definitely think that the Fed is on pause. We'll get more jobs data January 9th. We'll get the Fed meeting minutes next week from the last Fed meeting. And we'll, of course, get a new nominee name in January as well if the president does follow through on his promise to tell us early in the new year. So as you can see, the 10-year has been range bound between 410 and 420. It looks to be staying that way for now. Metals have been rallying substantially. Let's get to some movers, because we did see some movers today, including NVIDIA, which did a deal with Grok, which is attempting to compete with NVIDIA in developing an AI chip. So NVIDIA is higher on that. Target reversing gains that had been higher. It's now lower. The FT reporting an activist stake. Tom's Capital is taking a stake in Target. And we have to mention Warner Brothers Discovery, because if another story is going to bleed into next year, it is certainly this one. The battle between David Ellison and, of course, Netflix continues, and David Zaslav may even get more money for his shareholders on this one.
Wow, Vonnie, thank you so much. And a rare move higher for Target. Interesting. All in the wake of the Christmas shopping period. Vonnie Quinn, thank you so much. I'm Joe Matthew in Washington, where we're going to dodge the snowstorm, but that will not be the same for New York City, with snow set to begin falling just a couple of hours from now. We'll check the forecast coming up on what could be a dicey holiday travel weekend. All ahead on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at midnight Eastern Time, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington with our eyes on the tri-state region. Indeed, a winter storm warning in effect here for New York, New Jersey, and Connecticut, with a pretty real snowstorm on the way. Just about, 3 hours or so from now. There's a live view, if you're with us on Bloomberg TV, of the New York skyline. Snow should be falling by about 4 p.m. Eastern time, just in time for a very important travel weekend. And we're joined for more by Bloomberg's Josh Saul, who's tracking the storm for us here. Josh, there's really nothing more beautiful than a fluffy snowstorm in the city of New York. But if you're trying to get anywhere, this could be dicey.
That's right. Fun to watch from the fire, but not great to be out driving. It's an added danger is it's going to stay cold this weekend, which means the roads are going to stay icy and difficult and dangerous to drive on kind of right through the weekend.
Wow, the accumulations are pretty real. This is a storm warning, not a storm watch. You're looking at between 6 to 9. What's the city going to get? What's LaGuardia going to get?
Could be up to 9 inches in these areas. Yeah, it should be the most we had since 2022, and that means a lot of, you mentioned LaGuardia, it means a lot of flight cancellations. Flights starting all around the world that are supposed to get here right when the storm is kind of at its thickest. A lot of those flights are being canceled.
So if you're getting on a plane, hoping to see the ball drop in New York this week, are the airports taking precautions? What are we hearing from the local authorities?
If your flight's cleared to come in, then it should be just as safe as normal. But definitely a lot of flights canceled, a lot of flights delayed. And an interesting issue that came up in our reporting is that flights have been so bad this past year or so. A lot of people have opted to drive instead, which means that the roads are even more crowded and more people are depending on their cars to get around, which is dangerous given how rough the roads are right now.
Yeah, that's scary. Always feels a little weird when they pull the plane over to do the de-icing thing. I suspect we're going to see a lot of that this weekend with the temps that you mentioned. Josh, thank you. I don't know if you're spending the night inside World Headquarters, but I wish you luck because that snow, as we mentioned, is set to begin just a couple of hours from now. As we look back on the year and look ahead to the new year, we wanted to spend some time with Eric Larson, Bloomberg's legal reporter, who we have spent so much time with talking about the Supreme Court over the past year, and we're still waiting for the big one, of course, the Supreme Court's ruling on President Trump's tariff regime. And Eric is with us now from World Headquarters in New York. It's great to see you. Eric, we understand this could be days or weeks away, right? This is an imminent ruling.
Yeah, that's correct. I think some people were even expecting we might get it get the decision before the holidays. But no, we are expecting it in the next weeks, potentially very soon. No word on exactly when that will be, though, of course.
Yes. So obviously when it does, first of all, it'll be seismic in the political world, but also when it comes to markets, this could come down a couple of different ways, right, Eric? There are big questions about whether there will be refunds that are mandated as part of this ruling, whether a one-off or something that could take years to repay. How could this take shape?
Yeah, you're right. That's going to be the big question if, in fact, the tariffs are ruled illegal. I think that all of these companies that have been paying these billions of dollars in tariffs so far are going to demand them back. Some of them have already gone to court to set the stage for that, should it happen. And folks who have been watching this closely will recall that when there were the oral arguments at the Supreme Court not so long ago, they signaled that this conservative-leaning court could be leaning toward overturning the tariffs. You know, of course, they didn't say outright what they were thinking, but this is just based on the questions from the judges. So I think people are preparing for that eventuality. Of course, President Trump has also signaled there are other options to try to get other types of tariffs in there through other legal maneuvers, which also could end up being challenged in court. But folks are definitely preparing for the eventuality that they are overturned and they'll demand this money back.
Well, I'm glad you mentioned that because the White House has made it clear that if the court strikes down the tariff regime on the IEEPA justification, that there will be another and maybe another after that, but that would be preceded by an investigation or review, right? So this could take months before they come back to the plate.
Exactly. These other ways to put tariffs in place involve, as you said, investigations. And some of them have limits to how long they can last and how high they can be. So that's it's not quite as easy as using IEEPA the way Trump has done. No president before him had used that law in that way. And the way that he did use it, as we know, allowed him to put whatever amount of tariffs he wants on any country he wants for as long as he wants. So that's the emergency power that these lawsuits are seeking to claw back, to say that that's not how the law was intended. All the other ways are just going to be more difficult for the president to put these tariffs back in place.
I'm sure there's nothing else on the docket that rises to this level, Eric, but correct me if I'm wrong. Is there anything else that we should be looking at in terms of the court's term next year?
Yeah, there are some big ones. We still have a decision on birthright citizenship that President Trump is trying to roll that back. Several courts ruled that effort, that executive order limiting birthright citizenship was illegal. We heard arguments at the Supreme Court already. It's another one where there were signals that they might overturn Trump's executive order, but we don't know for sure. That's a huge one, involves citizenship for potentially thousands of people, babies. We also have some big decisions on state laws banning transgender athletes at schools, campaign finance, and also voting rights, and whether or not efforts to make minority districts, voting districts, are illegal. So there are some other big ones out there.
Yeah, it's going to be a huge year, with questions as well about the legality over the administration's approach to Venezuela. Eric, I don't want to conflate different beats here, because it does seem that if there will be any justification or challenge, this would be in Congress, not in the courts. Is that right?
That's my understanding. I certainly haven't heard of or seen any specific legal challenges around that yet, but it's also early days to see what happens there.
God knows, and Eric Larson has learned. You never know what you're going to be reporting the next day. It's great to see you, Eric. Happy New Year. Thank you for your great coverage in 2025, as always. I'm Joe Matthew in Washington, where we were graced by the Kennedy Center honors just a couple of nights ago. Did you see that? The 23rd, they played it back on CBS. First time ever Donald Trump was the host. They called it the Kennedy Center honors, not the Trump Kennedy Center honors, knowing that the name is being changed by the administration. Here in town for the awards, along with some testimony on Capitol Hill about royalties for musicians on the radio, KISS frontman Gene Simmons. We spent some time here in our studios at Bloomberg. Listen.
Nothing's changed. Okay. The artists are not getting paid. That, I mean, especially our children and our children's children are going to be the next generation superstars after they climb their way to the top and fight for it. What do they have forward to look? What do they have, looking forward? They're going to get 0 pennies when their songs are played on AM and FM radio, and that's insane.
Do you have the president's support on this? Did you talk to him about it?
I spent some time with the president alone in the Oval Office, and we talked about family. And I've known the president, proud to say, before he became a politician. But what else we talked about is a private issue.
Okay, so that wasn't about legislation, I guess.
I didn't say that, but you're leading the witness, Your Honor.
Oh, not to. Well, I wouldn't think that would be private.
Well, these are semantics, but I'm not anti-semantic.
I hope that you're not, because we wouldn't be able to do this right
It was a little clickbait there. What I talked, I specifically said what I spoke with the president about is not for anybody else's consumption.
Okay.
Well, there is such a thing as privacy.
I completely understand. I only ask you because so many lawmakers come on the air and say, if we get a directive from the president, we can make this work. What did you hear in the committee from members? Did you get a sense that there are votes on this?
I've heard a lot of support.
Yeah.
I met privately with Senator Marsha Blackman and Mr. Schiff. Both sides of the aisle seem, let's just say, as soon as Congress gets their act together, the president will sign this. I am convinced of it, my personal opinion.
Well, our audience should know, and you're talking to the business community right now, that you are no stranger to big business and some pretty shrewd moves. It was a Bloomberg report when you sold your publishing rights last year.
Well,
Pop House Entertainment, $300 million.
It's not entirely accurate, so just here to correct it for the record.
Please.
An entity called Pop House, a futuristic company out of Sweden, came and bought KISS, the underlying rights, the makeup, logos, as well as the writing publishing, for a respectable sum, enough to buy Rhode Island. I give you a pregnant pause so that this sinks in. But the future looks even more gargantuan than the past. We are in the middle of the first motion picture to be directed by McGee. There's an awful lot of stuff that I can't talk about because nobody wants to find out what they're going to get for Christmas in July.
Fair enough.
There is an enormous commitment by Pop House in the future of KISS, and this is just the beginning. When you look at a caterpillar and you say, well, that's the end of its life, no. You're short-sighted. You don't understand that it's going into a cocoon, which is where we are now, and we're going to come out and defy gravity with beautiful wings and soar to the heavens.
Very poetic.
I am kind of a big deal.
I've heard that, and a poet.
I was a fan, actually, of Bloomberg when he was mayor, met the gentleman, and he struck me as a powerful and attractive man.
Well, I can only agree with that.
And I loved his algorithm that made him rich and fish, but that's another story.
Well, I'll tell you what, we've got the terminal right here. I'm sure there's a disclaimer I'm supposed to read somewhere, but with everything you just described, you just outlined the future of the music business. Why are you chasing down the old format?
Well, look, the old formats, if they worked and they were justified, should and would continue.
Yeah.
But tell me what your retort is, even though I know you're not retorted. How do you validate our stars, the people who fought their way to the top, never getting a cent for radio airplay? How do you validate that while radio is making $14 billion? Again, I'm not demonizing them. It bears noting we need each other, but somewhere between paying artists $0 and $14 billion, there should be remember, the name of the act is fairness.
Yes, right.
American Music Fairness Act. You should let me talk more. I can increase more people will watch this instead of SpongeBob SquarePants. Come on.
I believe that. That's why you're here. Nobody gets this much time, Gene Simmons. Okay, so you've said a lot. Well, we consider the future of the music business. Do you worry about AI regulation? Do you worry about these FACO bans coming up? Speaking of algorithms, and by the way, Mike Bloomberg is not only the boss here, but founder, chairman, Bloomberg LP.
That's right.
AI is a worry for you or not?
AI is a concern if left unregulated. Anything, beautiful horse that you just bring in, if it runs wild, you've got to have some parameters that we control instead of AI.
Gene Simmons with us here on Bloomberg, indeed, talking about the American Music Fairness Act, the AMFA. We'll see if it goes anywhere, and we'll let you know if it does. I'm Joe Matthew in Washington. Thanks for spending part of this day after Christmas, Boxing Day, here on Bloomberg with our eyes on the markets, giving up some early gains, at least in terms of the S&P 500, down 2 points now. The NASDAQ is green again, up 11. Dow Industrial Average down 82 points with a couple of hours left to trading for this week. Been pretty good for gold once again, up about 1% here, 45.28 an ounce, but Bitcoin tipping lower, down $653, just above $87,000 per coin. Stay with us. We'll assemble our political panel next, right here on Balance of Power on Bloomberg TV and radio.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Thanks for being with us on Balance of Power here on Bloomberg TV and radio. I'm Joe Matthew in Washington, coming in for a landing here on Wall Street with about 2 hours, a little more than that, left to trading. In holiday light volume, the S&P 500 is down just about 5 points. When we come back to Washington in the new year, lawmakers come crawling back from the holidays in a bruising debate over health care premiums that ended this year on Capitol Hill. There are going to be big questions and some fast work required. If lawmakers are going to deal with the expiration of Obamacare subsidies, which, by the way, is just, 4 days off right now, we go over the cliff when we hit the new year. And then, of course, the matter of government funding. That'll be the end of January. If you've listened to this program, you know about this all the while. 2 very important deadlines that really could help set the direction for the entire year in Washington when it comes to politics. Maybe not just Washington, maybe the country when it comes to the midterm election cycle. And that's where we start our conversation with our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis is with us, partner at Stone Court Capital, alongside Democratic strategist Doug Farrar, former director for the Office of Public Affairs, the FTC. Great to have both of you with us here. Rick, I don't know your thoughts on this as we look beyond January. But many have suggested that if there's no deal on health care reform, not only might the government close at the end of January, but that could in fact be the issue that tips a Republican majority into a Democratic one in the midterms. If politics is national, as you frequently say, will the midterms be decided next month?
I actually think the midterms were decided last month. I really think that the Republicans lost the initiative on health care. We had a chance to get ahead of it and take away an issue for the Democrats. And, you know, when you look at the stack of debt that we've laid on through the One Big Beautiful Bill, not a very popular bill to voters and not hardly sold by Republicans in the process, you know, we've laid ourselves bare. And so I think if the election were today, you know, you'd have a 40, 50 seat loss. So I think it can improve, but if the Republicans don't do something more aggressive on health care, it just gives Democrats way too big a handle to use to beat up you know, House members and win seats next cycle.
Yeah. Doug, do you agree? Were the midterms decided in December?
Well, I'd like to agree, but I'm always a little nervous about the fortunes of my party. What I will say, though, is that the wins are clearly favorable for Democrats. I mean, they found an issue they can really campaign on in affordability. Obviously, the president does him and his party no favors in the way that they handle a lot of the cost issues in the economy, including health care. But, you know, there's lots of twists and turns left to come. What I will say, though, is I think it's time for the Democrats now to buckle down and not just say, okay, we want to make things more affordable, but show how they plan to do it. And I'll be looking to see which candidates in which races are able to articulate a really compelling policy agenda as they hope to take over at least the House and hopefully the Senate.
Will you be watching New York Mayor Mamdani? He's going to be sworn in just about a week from now, Doug. Does he have the playbook?
Well, he's being incredibly well advised. He's got a great set of transition chairs, including Lena Khan, who's a real policy all-star. Obviously, people like Senator Warren and Senator Sanders and others have been close to the transition, as was reported by the Times today. And I think what they're trying to do is figure out how to deliver on his agenda. And there are a lot of policy options that are available to him that don't necessarily require Albany or the city council to get involved, because there's lots of really strong consumer protection and worker protection rules on the books that they can enforce and signal enforcement to businesses. So I think he's got a really good opportunity to hit the ground running.
I'm not sure how to think about Mayor Mamdani, Rick, after that meeting with Donald Trump. He was going to be the foil, right? This was going to be the enemy of all Republicans for the next political cycle. But now they're shaking hands, laughing together, talking about affordability as if they are partners. Does that change the political prospects for Mamdani in New York?
Well, it's certainly changed the political prospects for Stefanik in New York. I mean, basically that's true. Meeting knocked her out of the race. So he's already delivered a win for the governor at Stefanik's expense. Look, I think all this focus on him is relatively irrelevant. There's virtually nobody outside the boroughs of New York who cast their ballot based on what's happening inside the boroughs of New York. And so, yeah, it's going to be fun because a third of the entire media establishment resides in that jurisdiction. And so everybody's going to be watching what he does. But I know very few voters who are sitting there breathlessly holding their vote to see what he does and then make a decision. So, yeah, a lot of steam, but not a lot of fire.
Interesting. You know, Doug, following the elections, the big question was, does Mamdani have the playbook for Democrats, or is it, in fact, the two moderate governors in Mikey Sherrill and Abigail Spanberger? And a lot of folks said all of the above, that the Democratic Party, if it was going to be successful in the midterm cycle and, in the next presidential election, it's going to have to keep growing the tent. Do you agree?
I do in some ways, and I don't in others. I mean, I think you see Sherrill and Spanberger adopt some pretty progressive economic concepts, from trying to freeze rates at the utilities in New Jersey under an emergency order to an effort to set up a public PBM, which is an entity that's a middleman in pharmaceutical products in Virginia under Spanberger. I think there definitely needs to be a big tent with respect to sort of cultural and social presentation in different districts. Obviously, what works in Brooklyn is not necessarily going to be what works in Nebraska. But interestingly, there's a candidate running in Nebraska with a very similar economic concept to Mayor Mamdani, who's getting a lot of attention and potentially going to threaten the incumbent. So I do think the Democrats have found an affordability message with an economic populism frame, and now they just need to deliver on it. And that's one thing where Mayor Mamdani will be very relevant because he's set the bar very high, and I expect he'll deliver.
Rick, where's the money going? We're looking at some doozy Senate races, right? Whether it's North Carolina, whether it's Texas, the races in California. We could see some new records this cycle, no?
Yeah, I spent a little bit of time in Texas last week, and Republicans are really looking at what could be an incredibly confusing and also super expensive primary that then leads into an equally expensive general election. North Carolina, as you mentioned, historically a place where a lot of money's spent. No question it's going to be really important to Republicans there in order to sustain their majorities in the Senate. Anybody who thinks the Senate is an automatic Republican domination is wrong. They've got to think through what happens when the bottom falls out if Republican policies aren't widely accepted. And, you know, that's, I think, one of the missing elements. Democrats sort of, kicked off this idea of reassessing their party. They didn't want to make it public because I'm sure it would hurt. But the Republicans have to be equally concerned. Right now, we have some of the highest retirements in history going on in party in power. Why would anybody want to retire if you think you're going to win re-election? And so the reality is this could be a rocky one, but there's no question fundraising and spending records are going to be set in this cycle.
Are Democrats ready for it, Doug, in the financial department?
I'd like to think so. I mean, obviously, I was concerned to see the DNC not come out with their autopsy, and obviously there's still some ongoing infighting in the party. But at the end of the day, I think these folks want to beat Donald Trump, and while there may be some disagreements across issues like economics and other social and cultural issues, I think that the wins are favorable and that the donors will come off the sidelines. I also think you're going to see a lot of small dollar donation candidates do really well because I think people are really unhappy with the way in which very large and wealthy oligarchs are working with this administration to drive up costs for people. I mean, people are very, very mad. And usually that generates a lot of attention and can generate a lot of small dollar donations supporting candidates who are more on the populist end of the party.
Really, really interesting conversation. Doug, thank you so much. Of course, Rick Davis, they'll be back with much more as we make our way into the new year, and I appreciate your insights, as always, our great panel. Rick Davis, partner at Stone Court Capital. Doug spent time at the FTC as director for the Office of Public Affairs, our Democratic strategist, and great to have you both with us on this day after Christmas. Watching Wall Street as we count down now with 2 hours to go. It doesn't look like we're going to have a big old Santa Claus rally to take home this weekend. In fact, the broad market turned lower a few hours ago. The S&P 500 down just 1 point. NASDAQ is hanging in, though. It's up 18 at the moment. The Dow Industrial Average down 72. We're looking at a VIX of just under 14 and the promise of more gains next week in holiday light volume. That's the seasonality behind all of this. And Vonnie Quinn will have more on the markets as we get into our next hour. Thanks for spending part of your Boxing Day with us. I'm Joe Matthew in Washington. We'll see you next year on Bloomberg TV and radio.
In case you missed it on Balance of Power.
let's play a game. Who's your favorite recording artist?
Kiss.
No, come on. Somebody from the past,
Why can't
present,
we go
or
with
future.
it? All right, Jimi Hendrix.
Jimi Hendrix has never in his entire career or now ever gotten paid a single penny when his music is played on AM and FM radio. The stunning fact is that the Russians and some other countries actually do pay performing artists on radio, and Americans do not. And this has got to change and should change. No matter who you hear on AM and FM radio, they're getting 0 pennies for the airplay. The new artists, every penny counts. And the fact that they can be played on radio and not even make 1 penny for their performance is criminal.
Don't miss Balance of Power live every weekday.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every week.
All right, guys, just checking in.
Bloomberg Television.
Just working on all kinds of stuff here today. So this is technically a long signal, but the problem is if you look at the ES, it hasn't even made it to the VWAP yet, and it's starting to reject the VWAP. So this is, probably going to be it's probably going to roll over and pull back. So it's not really a very strong signal, and it's not one that I can take. So I just kind of looking at what we have. It's been a real slow day, no news. I mean, we're just kind of grinding it out until everybody gets back to work. So if you got any questions or anything, let me know, or if you got anything you've been working on. But I'm hanging out, trying to get things done. I'll talk to you later.
Welcome to Bloomberg Markets. I'm Vonnie Quinn.
And I'm Isabel Lee.
And we're joining you on a day where the S&P is about to flip positive. It's crazy because it is a full trading day today, December 26th, after that holiday yesterday. And Isabel, we are still at records here.
Definitely a record. And in the middle of a Santa Claus rally. This is the 5 last trading days of December and the first 2 of January. So we're right in the middle of it, and it's looking good.
It's looking good so far. And underneath the surface, there's plenty happening in spite of what could have been a very moribund day. And we're seeing the VIX really at its lowest levels of the year as well, albeit up very, very slightly today, Isabel.
Definitely. Let's get a cross-asset check because I'm a cross-asset reporter and I love doing that. We're looking at an S&P that's trading higher. It's up at the 39th time this year as recent signs of economic resilience really reinforce positive expectations for corporate profit. So the index is headed towards its best week this month, Vonnie, but volume is 50% below the average of the past 30 days. We know that there are about 10 people in Wall Street, but still we're in the middle of that Santa rally. Bonds still on pace for the best annual performance since 2020. That's, of course, following 3 rate cuts. So let's go to oil. Oil is down as investors assess progress in the long-stalled Ukraine peace talks. We have Ukrainian President Volodymyr Zelensky saying he's expecting to meet U.S. President Donald Trump in Florida on Sunday. And of course, who can forget precious metals? We have gold, silver, platinum, all jumping to records. That's with support from escalating geopolitical tensions and U.S. dollar weakness. With Michael Purvis of Talbot Capital saying that, okay, yes, he's bullish, but silver is now extremely overextended. And of course, Bitcoin, my favorite, it's down for the year, which is very interesting. Bitcoin has really
acted more like a risk asset this year than a haven, but it's still interesting to look at.
And I just want to jump in there as well, because some of the movers that I've been looking at relate to what you've just been saying. So one of the big movers today, Freeport-McMoran, obviously one of the miners, up 3%, benefiting extraordinarily from this run-up in metals, not just the precious metals, but the industrial metals as well. Let's move on now to NVIDIA, up 1.5% as well. It's up more than 40% year to date. Not the best performer of the Mag 7, but certainly giving this market a huge boost this year. It's done a licensing deal with chip startup Grok. Now, Grok is one of those smaller companies that have been trying to rival NVIDIA, developing their own AI chips. So NVIDIA making this investment is sort of bringing them into the fold, although they will operate independently. Target, interestingly, up 2%, but maybe not for the reasons you think. It's not particularly because of a strong consumer. In fact, the stock is down 27% year to date. The FT reported earlier activist investor Tom's Capital has taken quite a significant stake in Target, and we'll see if Tom's has something to do with improving performance there. And then ServiceNow, NOW, the ticker there is higher as well, although it has given up some gains. A massive deal for ServiceNow. It's not the first one this year. In fact, it's not the first one this week. A $12 billion deal announced today. And of course, we had that Armis deal earlier in this week for $7.75 billion. And of course, it bought MoveWorks a few weeks ago, earlier this year, invested in Genesis and did a bunch of other investments. So plenty of movers and stories today. But coming up, we're going to be speaking with Rob Thummel of Tortoise Capital as oil drops with Ukraine signaling progress on peace talks. We're also going to have Stacey Widlitz of SW Retail Advisors as retailers look to maintain their holiday momentum. And Dana Peterson's going to be an interesting conversation with Dana of the Conference Board as investors chart the Fed's path forward. And don't forget, we get those minutes next week, so that will be an interesting one to watch for. Now, let's get some more on these equity movers and bring in Bloomberg equities reporter Alexandra Semenova. What have you been watching, Alex?
So we have to talk about the incredible performance this year, of course, once again led by technology. You wouldn't be surprised to find that some of the best performing sectors in the index this year are once again consumer discretionary and information technology. Those are, of course, the pockets of the market that house the Magnificent Seven stocks that have continued to rally this year. And some of the best companies were the ones focused on tech hardware and the build out of AI infrastructure. You have SanDisk up about 600% year to date, a latecomer to the S&P 500 joining in November. Really incredible run there. Western Digital, Seagate Technology, Micron Technology, all posting rallies of at least 200%. It was all about AI and the incredible profit growth around these companies, and investors really enthusiastic about their investments. The question, though, of course, is will that continue into next year?
So what are the laggards we are looking out for next year then?
So some of the laggards this year, though, kind of hard to mention because the only sector right now in the red is real estate. It was a pretty broad-based rally in real estate, down on the year very marginally. It is, of course, at the difficult intersection of elevated interest rates, demand struggles, so that section has struggled. Energy also a little bit of a laggard. And then looking also at some of the outperformers, interestingly, industrials was one of them. This was a year marked by geopolitical tensions and an increased U.S. defense budget, so that helped the sector. Also, financials were big winners this year, of course, benefiting from trading revenues from these big banks as they capitalized on market volatility, build out of payment systems. And my favorite stat that I read from Chris Harvey over at Wells Fargo, you'd be surprised to learn that JP Morgan actually outpaced Microsoft, Apple, Tesla, Meta, and Amazon over the last 5 years. So financials having a really solid run too.
Over a 5-year period. Yeah, I am surprised. Alex, the narratives that might dominate in the beginning of next year, I mean, has the bubble talk gone away, or is that going to be one of them still?
It's definitely going to be one of them still. And in fact, everyone is talking about how they're expecting the bull market to continue into a fourth year. You know, we're going to see double-digit earnings growth most likely, at least according to what analysts are expecting right now. But we're going to see some of the other pockets of the market participate more. It's not going to be just about tech. We're going to see some of the ho-hum, more boring old economy sectors like industrials and energy and financials kind of leading the way as the S&P 493's earnings catch up. This also comes at a time that the Magnificent Seven have returned something like 300% since this bull market began in October 2022. So people are just expecting that those gains will fizzle out a little bit. Obviously, these companies have a much higher bar when it comes to what they say about whether they can monetize the heavy spending on AI, and investors are going to treat them with a little bit more scrutiny, and their earnings growth will probably slow down a little bit.
Alexandra Sevenova, the star reporter of Bloomberg Equities team, she follows the space closely from strategists to their S&P target to everything and everything in the stock market. Thank you so much for joining us. Turning to the commodity space, we have oil dipping and muted post-Christmas trading as Ukraine signals progress in peace talks. We have Rob Thummel, Senior Portfolio Manager at Tortoise Capital, joining us now. Thank you so much, Rob, for joining us on this day after Christmas. The very first question I want to ask you is, why has the geopolitical risk premium in oil disappeared?
Yeah, no, that's a good question, Isabella. Yeah, well, the premium has disappeared effectively. The peace talks in Ukraine obviously are one aspect of it, but frankly, we just have so much supply around the world, right? So OPEC Plus has been brought back some volumes to and created really an oversupplied oil market. The U.S. has continued to grow production, so there's just an excessive supply of oil really around the world right now, and so there's really not a concern if we would have some disruption in supply that could not be filled by somewhere else in the world.
So you talk about excessive oil supply. Could less Venezuelan oil actually tighten supply?
Well, and you're right, Isabel. That could, and so that, but the Venezuela oil exports are not that meaningful. There's some, but they're not that meaningful. But we probably need some other source of supply disruption, whether that's from OPEC or whether that's from the U.S. not growing as much, or even Russia and maybe sanctions on Russia resulting in less exports. That's what it's going to take to really get this oil market balanced. And until the oil market gets balanced, you're going to see a lot of downward pressure on oil prices, which I guess is good for us as consumers because it keeps the economy booming, it keeps inflation low, and it keeps gasoline prices low as well.
Yeah, surely the administration is very happy. Oil down 20% year to date. Rob, I'm curious, any reaction in the oil market at all to these strikes in Nigeria or the potential for something to escalate maybe there?
Well, not yet, but that's where that geopolitical risk premium that Isabella was talking about could come back in. If we see more things like this, that could result in oil prices coming up a little bit. I mean, Nigeria does produce a fair amount of oil, and once again, if Nigerian oil supply was removed from the market or reduced, that would help get this oversupplied market balanced a lot faster. And if that was the case, then you could see oil prices increase. But there's a tremendous amount of supply of oil in the markets today, and so as a result of that, I think we're going to continue to see oil prices, and the futures prices also indicate this as well. You're going to see some pressure on oil prices, and it's going to probably stay in the 50s for a bit.
So what happens to sanctions then, Rob? Assuming that there's some kind of a détente or something gets worked out in the Ukraine agreement. I mean, President Trump really wants this to happen, and it looks like Zelensky might be opening the door to something happening. At that point, won't some sort of sanctions have to be lifted off Russia, and what would that do to oil prices?
Well, that could add. Yeah, no, that's a good point, Bonnie, and that could add some more volume back to the market. You know, Russia's already been producing pretty much what it wants, and so I'm not sure that we're going to see a significant increase to the global oil supply if the sanctions were lifted. I just don't. I think obviously the risk of the supply coming down would be less, and so I still think that oil prices are reflecting that already, because if you look at the futures curve, I mean, oil prices are most of the futures curve has a 5 handle, so a $50 handle on or $50 from here on out for the next year or so on oil prices, and so that pretty much reflects a pretty healthy supply of oil, and we'll see what happens at demand. Often the cure to low oil prices is low oil prices, so we can see a global economy that continues to be strong, which will boost oil demand, and then that could help balance this crude oil market as well.
Let's go to energy and investment trends. You call electricity the new oil. Who benefits the most in this AI-driven economy?
Yeah, so if AI is the future economy, at Tortoise we do believe that electricity is the new oil, and so companies we think that actually produce natural gas or transport natural gas are going to benefit, because we think that natural gas will be one of the primary fuel supply sources generate that electricity. So the companies that we like at Tortoise are companies like Williams Companies. It owns the largest natural gas pipeline infrastructure network in the U.S., and it's transporting natural gas gas all throughout the U.S. And Williams is doing things like building behind-the-meter electricity to support some of this AI build-out. And so that's beneficial to the consumer, but it's also beneficial to Williams as well. So and they pay a nice dividend, and they're going to grow that dividend. So it's companies that either produce natural gas, like an EQT, which is one of the lowest cost producers of natural gas in the U.S., as well as Williams, who transports that natural gas, and then companies like Cheniere Energy that actually exports the natural gas. So we really like the natural gas theme long term, both not only here in the short term, but also in the long term. And
well,
so
Rob,
we see.
Let me just jump in there then and ask you about natural gas prices, because they've been tanking basically all year. Is there something that's going to bring them back?
Yeah, well, and you're right, Vonnie. They have been. Some of it's been weather driven, but what you're going to start to see and continue to see is a significant increase in demand for natural gas, not only this year but next year, as electricity becomes the new oil, as electricity demand in the U.S. because of AI and this AI-driven economy continues to grow. But natural gas it'll become very clear that natural gas is the commodity that's going to keep electricity costs low. And that's really a competitive advantage for the U.S., long-term competitive advantage for the U.S. going forward.
Rob, thank you so much. An absolute pleasure to speak with you today, and thanks for making time for us the day after the holiday. Rob Thummel is president at Tortoise Energy Independence Fund and senior portfolio manager, investment strategist, and managing director at Tortoise Capital Advisors. His picks there, Isabel, EQT, Williams, and Cheniere, and of course, Nat Gas front month contract $4.40. It is up 3.8% today, but you would think more with this cold, no?
More with this cold than just volatility because of these geopolitical tensions we are seeing. But markets have overall whiplash this whole year, Vonnie.
That's for sure. That's for sure. Not so, though. Equities, they are still hanging out at records, with the S&P down just 1 point, a solitary point right now. And we have the 10-year yield at 413.75. Do stay with us. Lots more market talk ahead. We're going to talk retail with Stacey Widlitz of SW Retail Advisors. This is Bloomberg Markets.
Some people travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg Markets. I'm Vonnie Quinn alongside Isabel Lee, and of course all of you. Happy to have you on this post-holiday trading day. Well, Christmas may be behind us, but holiday shopping and returns are still in full swing. Bloomberg's Romaine Bostic sat down with Macy's CEO Tony Spring and asked him what it takes for Macy's to be at its best.
It's not about improving the customer experience. So we've had record customer service scores. That's our Net Promoter Score. Would people recommend Macy's to a friend? And we're seeing scores we've never thought possible at the brand. And that was a real focus of mine. We've improved the quality of the assortments. I thought there was way too much redundancy, way too many of the same things. And I thought the breadth of what we offer as a department store needed to improve. We need to go good, better, best, contemporary to classic, in a range of brands, things as we've talked about that are convenient, that you've heard of, that you count on, Staples, Levi's, Nike. And then at the same time, we've got to be there introducing new things that you haven't heard of, that are becoming more popular, because people are looking for that combination in a destination. We also wanted to make sure that our team was working together. So I'm a big believer that you need strategy, you need culture, you need leadership, and you need execution. We're now at the point where those four elements are coming together, and we're delivering a better experience for the consumer. But you can't kind of have one without the other. You know, a great culture without a great business without a great culture. The combination of elements is what I sought out to do when I kind of came into the role. And I do think that, you know, patience and determination go together. You have to have the patience to kind of lay out what you want to accomplish. You have to accept the fact that some things just don't happen because you snap your fingers. And then you have to have the determination, the ambition to kind of go after what you think is the right thing to do for the business.
A big part of your strategy, this bold new chapter, is also to shrink the footprint of Macy's. At its peak, you guys had, what, 700 to 800 stores. You're less than, what, 400 now, or around 400
around
or so
400
now.
Today.
And the plan is to go down to roughly about 350. You've done a big remodel of some of the existing stores already, 125. How much further does that go in 2026?
We'll add more stores in 26, and we'll close some more stores in 26. And I think, as you described, it is working on both sides of the equation. Closing stores is not alone a strategy. Reimagining stores without dealing with stores that are past their prime is not complete enough of a strategy. So we want to make sure that we're doing both things. And of course, it's supported by a healthier digital business, one that is both a place of transaction and a place of discovery. We want to build relationships with the consumer. That means we have to be able to provide a better experience where they live. We think of the digital business as a channel at times, and I'm like, no, the digital business is actually a geography. The people who shop digitally in New York shop in their stores in New York, and they want to see a great experience, digitally, physically, and in between.
And that was Bloomberg's Romaine Bostick with Macy's CEO Tony Spring. Sticking with retail, shares of Target rising with the FT reporting an activist investor built up a stake in the big box retailer. Stacy Whitlitz, president and founder of the SW Advisors, joins us now. Stacy, despite worries about consumer confidence, spending is still strong. What's driving it?
Absolutely. And we're hearing so much noise in the market that consumers are cautious, particularly from CEOs. We just came out of Q3 earnings. But the bottom line is what we're seeing is that consumers are spending, and they're spending full price. So what we've seen before Christmas and even through today is that discounts have been lower year over year, not only from a headline perspective, but the amount of inventory on discount out of there is lower. So that says to me that the customer is willing to spend on what they want when they see exciting and new product. And as the CEO of Macy's was talking about, you have to create a customer experience in the store to inspire. And that's why so many retailers are continually reimagining their stores. Macy's is doing it, and Target is now really attempting to reinvigorate their stores.
But how do you explain why promotions are flat or down? You would think that if there's a promo, consumers would buy.
Absolutely. And you can really tell the mood that our consumers are in every year, because some years you will see the retailers and the brands push the promotional pedal a few days before Christmas, and it's unexpected, it's not planned, and that is your cue that things are not going right. We did not see that this year. But the other thing is that when we came out of the third quarter, inventories were incredibly lean this year. There wasn't a lot left over. Some retailers were even chasing into demand toward the end of the year. You know, and certainly we've seen one of those reasons is because a lot of retailers and brands ordered in front of the tariff impact, and they've run through that inventory this year. Next year will be a different situation as we see cost of goods increase.
Yeah, I was just going to say, if that happened and that inventory is now already lean, then what happens into next year? Has everybody bought everything they're going to buy then?
Well, that's, a lot of the retailers were smart. They bought in front of the tariff impact. And there was, if you look at even furniture, Williams-Sonoma, the Pottery Barn brand, this summer, you couldn't get your hands on any patio furniture. It was back ordered because consumers were saying to themselves, oh, well, the retailers are telling us they're going to raise prices next year. We believe them. Many retailers normally do raise prices somewhat each year, but maybe the increases will be more than expected. So they were saying, oh, I'm going to buy that big ticket purchase up front. But then there are others like Best Buy that this holiday season, we're seeing an upgrade cycle, particularly in gaming. And again, if that consumer wants that must-have product, they're going to spend and they're going to pay full price.
Stacey, every year Howard DeWitt used to come on and predict the bankruptcies for the following year, and it was always a little bit of a depressing segment, but often he got it right. Now, we have seen some good turnaround stories this year, but who should we be watching for that might be in trouble into 2026?
So I think, you just heard from the Macy's CEO, and they're doing the right thing. They're shrinking, they're right sizing, and that is the way to go. The consumer has changed the way they shop. Certainly Target is having big issues because their consumer, they normally have a higher end consumer. That consumer is walking out the door and going to Walmart. Walmart's success over the last year or so has largely been as a result of the higher $100,000 consumer share gain shift. So, I'm a huge buyer of Walmart. Not only do they have the higher end consumer, but they have the advertising, high margin business rolling in. There are certainly brands out there that continue to try to turn themselves around. American Eagle has had some really interesting collaborations. I would say the consistency is not there yet. And of course, Victoria's Secret has done some amazing collaborations, most recently with Love Shack Fancy, that has really worked for them. So it is about finding that collaboration, that must-have product, and of course that brand halo into 2026.
I'm still thinking about the full price dominating. Are there any risks retailers should watch out for as full price selling dominates?
No, this is the exact scenario that we want. And what we've seen in the past, even during COVID, it was we had a lot less inventory, but at a much higher margin. And I think that taught retailers a really great lesson that profitability and brand halo is incredibly important for the go-forward business. And that's what we're seeing now. We're seeing retailers able to manage their inventories in a much smarter way.
Stacey, we just have about 30 seconds, but I have to ask you, because you're an angel investor, what kinds of companies are you looking at right now? What do they need to have, and what segment of retail should they be in?
I think it's all about health and wellness in the workplace. That's a huge theme that we're seeing. But I would say, on a public market perspective, one of my favorites is Nike here. So I had a sell on it for 2 years, and I'm starting to really see the North America business turn. We're starting to see less promotions there. Obviously, China is still a huge pain point for them, but I think that is going to be one of the most interesting public market stories of 2026.
Stacey, thank you so much for your time today. Fascinating conversation there with Stacey Woodlitz, President and founder of SW Retail Advisors. And Isabel, I have to ask you where you did your shopping this year, mostly.
Online. Everything online. I had boxes and boxes, and my husband was really like, oh my God, because he had to throw them downstairs in the basement.
I just hate doing the unboxing. It ruins my hands. And
it does. You have to have them. Yeah.
Anyway, we won't change our habits now. Let's look ahead to the next segment, because we're going to be speaking with Dana Peterson. She's chief economist at the Conference Board, and she's going to shine a light on some of this data that we've been seeing and the key issues facing the U.S. economy into 2026, including, of course, the midterm elections. This is Bloomberg.
you missed it on Bloomberg Open Interest.
The kids, the millennials, they now all of a sudden have to pay back their student loans again.
Part of the millennial generation, when we also graduated, you were dealing with the aftermath of the financial crisis, and you also had this problem of finding jobs.
Weakness in the labor market is not just the young people, it's also my generation, the baby boomers. 67% of companies said, we're not thinking about hiring right now. That will change. This is a great time to be alive, I think.
Don't miss Open Interest live weekdays.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
In case you missed it on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is Bloomberg Markets. I'm Bonnie Quinn alongside Isabel Lee today. Well, the head of the country's second largest bank expecting a solid showing from the US consumer next year, but harboring some concerns around what he calls non-tariff barriers in key regions. Here's part of Bank of America CEO Brian Moynihan's interview with Bloomberg editor-at-large Francine Lacroix earlier this month.
The U.S. consumer is doing fine. And so for the month of November 25 versus November 24, the amount of money are 70 million consumers who's pushed about $4.5 trillion plus in the economy every year. They pushed in about, for that month, about 4.2, 4.5%. And so it was good, and around the Black Friday in the U.S. and the Cyber Monday and all the things they talk about, the spending was solid and good, and it's consistent with a growing economy. Our team has economy growing next year at 2.4%. So Candace and her team, who are the best in the business, you know, that's their thing. But everything we see in the consumer side sets that up.
Is there a worry about affordability? So we hear it from certain pockets of consumers.
Yeah, and there is. And so this is why you have to sort of sort the aggregate economic impact of the consumer, our 70 million consumers spending, versus the different deciles of income and things like that. But if you sort it into thirds, and our institute that writes on this, the bottom third is growing. It's just growing at a slow rate than the middle third or the top third. And so that's what you hear about the K economy and things like that. The good news is with the unemployment rate at 4.4% or so, the new claims for unemployment is still at a very low rate nominally compared to 19, but the actual labor force is bigger. Those are all good things. So the people are working, they're getting paid, et cetera, but they are worried about prices and affordability, and I think that will dominate the conversation until it's settles in.
You know Kevin Hassett, and you've known him for quite some time.
Yeah.
What kind of chair do you think he'll be? Will he bow to the president's will?
Well, he's got to be nominated first, so let's let the president do his work and make his decision. But look, I think all the candidates are highly qualified. Our job is to work with them. I think the Fed, as an institution, has to be independent. There's no question that. I think the U.S. Fed is the example for the world of how to run a centralized Federal Reserve with independence. There are parts of it that there's a lot of commentary about the supervisory side and the reach and the activities. That's a separate question. But the Fed independence on monetary policy is key. I think Kevin and all his colleagues that are talked about would all believe that and understand that and drive that.
Brian, there's a lot of geopolitics today. Macron's in China. We have Vladimir Putin over with, Prime Minister Modi in India. There's a lot going on with Ukraine. How do your clients work around this internationally? So you say, some of the tariffs have settled. Yeah. Do they worry about anything more for 2026, or do you think, again, they're ready to do deals?
Well, generally there's things that you look at, you say, I can have an impact on this or control it, or I can make a decision on it, and other ones you can't. And kinetic wars, war in Ukraine, getting the Middle East settled, Israel and the Gaza Strip settled down, the debates around Taiwan, all these things are on people's minds all the time. But the reality is there's not much I can do about it. Trade and tariff is different because that comes down to where they might locate supply chains, how it'll affect the cost of goods sold. And if you watch through the summer, it's become clear that there's sort of 10 to 15% increase is generally across the board result. That's helped businesses understand it better. And so I think that's been worked into their plans. And that's why you're seeing the relief come off from Liberation Day, where people were very confused, to now people have generally said the issues of China national security and stuff are unique. The issues of solving the Russia-Ukraine war are unique. But I don't think businesses sit there and say if that doesn't solve or does solve, if they're in very specific businesses, yes. But generally, they're more worried about the ability to address markets and drive. And I think one of the things administration's worked on that gets lost in the percentages and count is the non-tariff barriers, and those are real barriers, both in the EU, frankly, through regulation and stuff, and in China and other places. And working on that is important for multinational companies, not only in the United States but around the world, because to get access to markets without having to change product is a big deal.
Thank you, Bank of America CEO Brian Moynihan and Bloomberg editor-at-large Francine Lacroix. That was Moynihan painting a relatively rosy picture for 2026, even with a shakeup at the Fed in a potentially volatile midterm election season. Joining us now to discuss is Dana Peterson. She's chief economist at the Conference Board. Dana, thank you so much for joining us on this December 26th, a day after Christmas. We have the third quarter GDP coming in at a stunning 4.5%. That's well above estimates. How much confidence should markets put in that number, really?
I think you need to take that number with a little bit of grain of salt. We were missing quite a bit of data, certainly inventories and trade data. And when you look at the consumer spending, which was quite strong, and I think that's reflective of the fact that most people are working, the drawdown in inventories did not match the rate of growth in consumer spending, nor the decline in imports. So I say that there's probably going to be some revisions there, but you can't ignore all of it. You did see a pop in government spending, potentially, it's the end of the fiscal year. But all in all, I think that the fourth quarter is probably going to be a little bit weaker. Again, we had the shutdown, which should reverse in terms of its impact in the first quarter.
If hiring is slowing, but consumers are still spending, how long can that dynamic realistically hold?
Well, the key thing is people are not getting fired. So many businesses are still waiting on the sidelines to have a resolution regarding tariffs, what that's going to look like. Also, any companies that are into construction or even had benefited from industrial policies in the prior administration, they're expecting to see less money, potentially pulling back on investments. And so given the fact that companies still don't really know what's going on or what will happen, they're waiting. And so they're not letting people go because labor shortages are still with us. But and they also remember the pandemic era, how hard it was to get back workers. But the thing is that many companies are not letting people go, but they're also not hiring because they're just uncertain.
It does seem, Dana, that at least consumer confidence has troughed. Do you agree with that statement? And what about business confidence?
We don't know if consumer confidence, well, we have the consumer confidence measure. In our measure, we don't know if it has troughed. It certainly has fallen and continues to fall. The last reading for December, which we posted earlier this week, showed that consumers are still very worried about current business conditions, the current labor market, meaning that it's very difficult to find a job, and also their expectations for not only business conditions, but also labor markets and incomes were very negative. They were also very concerned about their current finances. However, the one bright spot is that consumers believe that by the summer of next year, things will be better, and so will their finances be better.
And so they keep spending. Is that the case? I mean, I know consumers do and say different things, right? We all do that. But they do seem to be spending continuously.
Yes, because most consumers are working, right? If you look at jobless claims, initial jobless claims, they're still super low. Yes, continuing claims are rising because it's difficult to find a job in this environment. But nonetheless, as long as consumers are working and they're not getting let go, they're going to continue to spend. A lot of that spending is going on credit, and they're also using things like buy now, pay later, but they're spending nonetheless, and that folds up into GDP.
What about housing? That sector remains under pressure despite lower mortgage rates. Do you think that affordability is now a bigger constraint than the rates themselves?
Well, yes, affordability is a huge constraint. Home prices have risen very aggressively. Certainly that started off in the pandemic when everyone was trying to, move and find a better place with an office. But still in all, prices don't necessarily go down. They may be rising at a slower pace, but still most homes are very elevated in terms of the price, especially existing homes. Because think about it, even though mortgage rates are down, they're probably not anywhere close to 2.5 or even 3%, which is what many homeowners have because they refinanced during the pandemic. And so why would you trade in your great mortgage rate for something that's higher? And that's kept the existing homes market frozen. Meanwhile, starts are still challenged by labor shortages, also shortages in terms of materials, and also zoning laws that really restrict where you can build. So it doesn't matter that the mortgage rates are down if the home price is expensive and there's due to scarcity. And there's just nothing really available because people who own homes don't want to move. You're going to continue to see the housing market in the U.S. be quite weak going forward.
I do know friends personally who have interest rates that are mortgage rates that are below 3%, and they're very happy with that. Let's now go to, we know consumer inflation is easing, but goods prices are rising again, as you've mentioned. Do you think we're underestimating the drag tariffs could have on spending?
I don't think so. The challenge is that the tariffs have been delayed at least twice this year. And so we haven't seen the full effect. But when you look beneath the surface at goods prices, yes, a number of things are starting to rise, they're starting to pick up. We think the worst of the tariff impact is probably going to be in the first quarter of 2026. And that's probably when you'll really see consumers pull back. Indeed, many of them may have purchased items and goods ahead of those anticipated tariffs. And so maybe that's part of the strength we saw in the third quarter. But again, fourth quarter, a lot of uncertainty, government shutdown. And then next year, there's also quite a bit of uncertainty. While some people will see lower taxes, other people may see cuts in their Medicaid or other programs. So that's later in the year. So in the beginning of the year, you'll get a little bit of a boost again from the tax cuts. But if you have student loans, you're going to be paying for those starting in the beginning of the year. So I think that we're just going to see weakness in the fourth quarter and potentially in the first quarter, and maybe a little bit in the second quarter, but really start to pick up once we have greater certainty with regards to tariffs, and certainly fiscal policy will be much clearer.
So given all the unknowns, Dana, and all the things that are fearsome out there, should the Fed not cut in January? I mean, the market's only pricing in an 18% possibility of that, and it seems like nobody's really expecting the Fed to do anything except stay on pause, but it sounds like maybe the Fed should consider a cut.
Well, the challenge is we're still missing a lot of data. I was just looking through data yesterday, and we do have manufacturing inventories through October, but we still don't have any trade data or inventories for other types of for wholesalers or even retailers. We don't know what consumer spending looks like in the fourth quarter. We just don't have a lot of information. So potentially the Fed could say, well, we don't have information. We're waiting for revisions to see if this GDP number is real. Indeed, the head of the federal FOMC meeting, Chair Powell, even said at the last meeting in December that he might, look at the data with a grain of salt. And he expected that there could be some issues because of the shutdown and difficulties collecting the data, and also fewer workers to process that data and get it out the door. So there is that risk. However, we will get a ton of data in that first week of January. We will receive ISM data. We will also have payrolls data, and we're also going to have a few other inputs that will be useful to help the Fed to understand what's going on in the U.S. economy.
Dana, thank you so much for joining us today and being so generous with your time, and in fact all year, obviously. Dana Peterson is Chief Economist at the Conference Board. Well, coming up, Isabel, we're going to discuss whether value stocks and opportunities outside of the United States deserve more attention from investors next year. I was looking, and it does appear that they have outperformed this year, DMs outside the US.
Yes, DMs, EMs, they all outperform not only the US, so it's really not only the US that's a market in town.
Well, to answer those questions, we'll be speaking with Andrew Cry, Co-Chief Investment Officer at Crescent Grove Advisors. This is Bloomberg Markets.
Here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burton in Florence, Italy, and this is Bloomberg.
This is is Bloomberg Markets. I'm Vonnie Quinn alongside Isabel Lee. All right, well, geopolitics is still at the forefront as we near the end of the year, and the war in Ukraine still raging after nearly 4 years. Though we do have some movement on discussions to potentially bring a stop to the fighting at least. Let's bring in Bloomberg News Washington Deputy Bureau Chief Laura Davison to give us the latest. Some movement, Laura, but it seems like there are some sticking points that both sides really don't want to move on. I mean, territory for one. Is there really going to be a demilitarized zone?
Yes, this is really not clear. There's been parallel talks happening between Ukrainian officials in the U.S. and between the Russians in the U.S., but the Ukrainians and the Russians have not been talking to each other, and they still appear very far apart on some of these territory issues, as well as what a security plan for Ukraine would look like after a war is ended. Volodymyr Zelensky, the Ukrainian president, says he's going to Mar-a-Lago to meet with Trump on Sunday. The White House has not yet confirmed this meeting, so it's not quite clear exactly the details of what this discussion could look like. But Zelensky seems very upbeat and positive that there could be some forward movement, which is a stark contrast from a couple days ago when he was saying he did not think that a deal was in reach. So this is a fast-moving issue, but as you noted, there's a bunch of things that they still have to work out, and it's not yet clear that a deal is immediately within reach.
What about the U.S. launching a military strike in Nigeria against Islamic State targets? What's the latest on that?
Yeah, so it sounds like there is more to come here. This was a surprise attack on Christmas Day against some of these Islamic State sites. The U.S. government and the Nigerian government were working in concert on these and had, been talking, all day leading up to these strikes. Though their reasoning for kind of what's happening here seems to be a little bit different. Trump and the administration has talked about this in relation to attacks on Christians in the country. The Nigerian government has pushed back on that and said, look, terrorism is a problem, but the terrorists are not specifically targeting Christians. It's Muslims and Christians broadly. It's our residents, our population that's broadly being targeted by terrorists. So while they are kind of different on the messaging here, there seem to be more attacks that will be coming in the coming days. It's not clear exactly what that will look like, where in the country, the size and scope here, but that's something that both officials on both sides have said to expect.
Laura, how is all of this activism, if you like, going down with the MAGA base? I mean, Trump had come into power saying that he didn't want to be involved in wars anywhere in the world, and yet there are these strikes off of Venezuela. There's chatter about going into Venezuela maybe at some point. Now these strikes in concert with the Nigerian government, apparently.
Yes, this has really been perhaps one of Trump's biggest shifts in policy from how he was as a candidate to how he's governed as president. We've seen, him really get involved in a host of countries, in Iran, in Somalia, and Syria as well, of having some of these targeted strikes. So it's not clear exactly how much voters will care about this when they go to the polls next November. Though we do know that his base, has branded themselves as America first, which means not getting involved in some of these foreign wars and foreign conflicts. We've seen some signs. Laura Loomer, for example, a far-right activist, she did come out in support of these attacks in Nigeria. She, again, was repeating the line that the president said of this is, supporting Christians in the region. She, however, has been not in favor of the boat strikes in Venezuela. So it seems that, the base does not have a kind of a clear sense of where they want to go here and are seeing some of these interventions as good while others as not so positive.
Our thanks to Laura Davidson, our Bloomberg News Washington Deputy Bureau Chief. We'll hear more from Laura a little bit later in the afternoon. So turning back to markets now, we have a relatively flat Friday trade on the day after Christmas, but it's been a big year for major U.S. indexes. Much of it, of course, driven by tech and AI, the names, NVIDIA, AMD, and all of those. So to find out whether we should expect more of those in 2026, we're joined by Andrew Cry. He's the Co-Chief Investment Officer with Crescent Globe Advisors. Andrew, thank you so much for joining us from Milwaukee on this Friday. We have a full day of trading ahead of us. In your note, I found this to be very interesting. You said investors are too overweight the U.S. market given the shifting macro backdrop. Which pockets of growth are you seeing, if not the U.S.?
Yeah, I think it's a function of a couple things. One would just be this idea that, U.S. markets are pretty richly valued on the back of those Mag 7 names that you described. The mega cap tech sector, broadly speaking, trading at pretty extended valuations at this point. So from our perspective, we think the opportunity is for investors to take some chips off the table within those segments of the U.S. market that have done so well over the last couple of years at this point, or really, several years, and look at areas like developed international markets, Europe, Japan, that have some nice fiscal tailwinds at this point. I think that's an interesting element of not only do they trade at cheaper valuations, but they've got a catalyst now. And then even emerging markets. I think you can point to EM broadly speaking, and if you just look at earnings revisions over the last several months now, have really moved in a positive direction and are looking, quite optimistic in terms of what we're going to see in 2026, both in emerging markets and in developed international markets.
Talk to us about old economy stocks, those with limited tech penetration. Which ones there do you like? Where do you see the better risk reward?
Yeah, this would kind of go back to that same theme of what's the next play around AI, right? What's the second derivative, the third derivative effect of AI? And instead of just buying NVIDIA, which is sort of producing the AI via the chips that they're selling and manufacturing, think about the areas of the economy where AI can actually penetrate into these legacy businesses and have a meaningful effect on their ability to drive profitability, to enhance margins. Think about any, type of industry where you can augment labor with AI, so maybe that's industrials and manufacturing and those type of settings. Think about areas of the economy where it's heavily personnel and sort of administrative, driven in terms of the cost structure. That could be financials, that could be healthcare. So we just think that's the next play here. And those businesses aren't necessarily reflecting from a valuation perspective the ability to enhance margins, enhance profitability going forward because of the way that they're implementing AI.
Andrew, I just want to point to this chart. It shows US stocks actually underperforming the rest of the world in terms of developed markets by the most since 1993. So while the US has done extraordinarily well, developed markets elsewhere have done even better. And so I'm curious what markets you would be interested in if you were taking some chips off the US table.
Yeah, I think it's really, we'd highlight that mega cap growth segment of the U.S. markets in particular and use that as your funding source. And again, there's continued to be momentum, not without a little bit of dispersion across the Magnificent Seven, but still a momentum trade there, right? NVIDIA and some of the other high-flying names this year. So I think that for us is the funding source for, again, take developed Europe as a great example of an area where you can buy companies that are, have a nice growth tailwind in terms of earnings revisions, trading at reasonable valuations, call it mid-teens on average, if you look at in particular the EFA more broadly as an index. And then you've got this nice catalyst in terms of more fiscal spending. You had ECB rate cuts for a period of time there where you had a more accommodative monetary backdrop. You've actually got a trade backdrop that doesn't look that bad. I think it feels worse in this environment than it is in terms of the actual data that we're seeing. So those would be the areas we would sort of point to in terms of the relative value opportunity to rotate capital.
What about emerging markets? Because the MSCI EM index is up 26.6% this year, so that would have been a nice play this year too. In fact, you could really have been anywhere. But for example, China, is China investable? It's had a nice run up, but it continues to wind higher.
Yeah, I think we continue to see signs that the Chinese government, the policymakers will continue to support that economy and support markets via liquidity injections and sort of do whatever it takes to kind of keep the economy on track. I think the other big piece of this that we haven't touched on yet is the dollar, right? The trajectory of the dollar this year has been much weaker. And if we keep seeing the Fed cut rates into next year and we see these interest rate differentials continue to widen out between the U.S. and other economies around the world, as you've seen other central banks kind of move to pausing in their cutting cycle, well, then that's another potential catalyst where you've got another leg down in terms of on a trade-weighted basis, let's say, for the U.S. dollar, which would benefit things like, developed international emerging market stocks going into 2026.
So, Andrew, what's the bigger risk for the Fed right now? Cutting too soon or waiting too long?
We think it's cutting too soon. It's cutting too much too quickly in terms of providing stimulus, effectively what they're doing to an economy that's on pretty good footing. So if you think about sort of a late cycle type of economic backdrop and market backdrop, but you've got early cycle monetary policy with aggressive rate cuts in this environment, we just think that runs the risk then of triggering inflation back to the upside, sort of seeing a reacceleration there, not making incremental progress towards the 2% goal. I get that they want to try to protect the labor market. We just don't see that as much of a risk potentially alongside, again, what we would argue with fiscal deficits and the idea that you could trigger an inflationary bout because of rate cuts. We think that becomes the bigger risk, particularly on the long end of the curve, right, where the Fed doesn't have as much ability to control relative to the short end of the curve and their short-term policy settings. If we see a 10-year yield, for instance, tick back up from, call it 4.1, 4.2, where we are today towards 5%, because we see term premium being built back in, we see inflation concerns reasserting themselves, right? That to us becomes the bigger risk for capital markets in 2026.
Andrew, thank you so much for all your time today. That is Andrew Cry, Co-Chief Investment Officer with Crescent Grove Advisors, a firm with roughly $5 billion in assets under management. And he's based in Milwaukee, which apparently, Isabel, is actually warmer than it is in New York City and on the East Coast at the moment. Kathy Entwistle is going to join us next of Morgan Stanley. We'll also be speaking with Elisa Rees of Wedbush.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizons Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Watch Horizons Middle East and Africa every trading day at midnight Eastern Time. Only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Welcome to Bloomberg Markets. I'm Vonnie Quinn.
And I'm Isabel Lee.
And we are desperately trying to finish this session in the green. The S&P 500 is down less than 3 points right now. We are hanging out of those records. Very little movement on the surface, but underneath there is plenty going on. We're going to take you through it, right, Isabel?
Definitely a lot going on. Let's give you a cross-asset check now. We have the S&P up for the 39th time this year. The index is headed towards its best week in a month. Volume, of course, is 50% below the average of the past 30 days. We always joke that there are only 10 people in Wall Street right now. Most mega caps are down, but NVIDIA is rising on a licensing deal with AI startup Grok. But still, we're in the middle of a Santa rally. Bonds still on pace for the best annual performance since 2020 following 3 rate cuts. So we're looking at oil next. Oil is falling as investors assess a step forward in Ukraine peace talks, which could lead to a deal that allows more Russian oil into global markets. And of course, we can't forget precious metals. Everything is rallying from gold, silver, platinum. They're all jumping to record highs with support from escalating geopolitical tensions and U.S. dollar weakness. We have Michael Purvis of Talbot and Capital, though, saying that, he is bullish, but silver is now extremely overextended on a near-term basis. And last, Bitcoin. It is Bitcoin's second down year this year, which is honestly slightly unbelievable. It hit around 125,000 earlier this year and now is trading just around 87,000. Last year, Bitcoin ended the year lower as well by around 24%. But I want to remind everyone that in 2023, it was up by around 340%, and that is not a typo. It was 340%.
I did not know that. That is a really interesting statistic. Well, let me get to some of the movers. You mentioned all of the precious and non-precious metals moving higher. Freeport McMoran up 3%. A lot of the miners are higher today, once again, obviously benefiting from those moves in metals. Then we want to look at Target. It's up 2%. The FT is reporting activist investor Tom's Capital has taken quite a significant stake in the retailer, which is down 27% year to date. So we'll see if Tom's can have an impact. And then now, NOW, the ticker, that's ServiceNow, obviously. Bill McDermott's new company, obviously used to run SAP. Another huge deal, a $12 billion deal, and that's just after a $7.75 billion deal earlier this week, and plenty of deals earlier on. That company on a merger spree this year. NVIDIA finally is one of the gainers today as well, up more than 40% already year to date. NVIDIA has done a licensing deal with chip startup Grok, which had been one of those smaller companies trying to rival NVIDIA. So coming up this hour to explain all of these moves to us, we have Kathy Entwistle of Morgan Stanley as stocks fluctuate near all-time highs. We'll speak with Alicia Reese of Wedbush Securities on the battle for Warner Brothers. That should be an interesting one. And Jay Goldberg of Seaport AI will power gains into 2026 with his talk, because that's what he is going to talk about. But joining us now to get a broader look at today's equity market moves and perhaps some of the stories into next year is Bloomberg's Natalia Kinichevich. So Natalia, what does positioning tell us today about stock market direction?
Right, so positioning as of now is still bullish, right? So when we look at, first of all, seasonality, it is favorable for U.S. stocks. The end of the year, then early January, typically it is historically a really good time for U.S. stocks. Then we look at buying across institutional traders, retail traders. Everyone is quite bullish right now. We see the options market is also pretty optimistic on U.S. stocks. So as of now, no concerns, but we will see. And also, I need to point out that we are keeping an eye on buybacks. It also has been one of the driving forces behind this U.S. stock market gains. And as of now, the companies are still in the so-called before the blackout period, which means that they can buy stocks. And it is also some kind of support for U.S. stocks.
What about crypto? We saw a lot of IPOs in that space. I love writing about crypto. It's always so volatile and always so exciting. How did they perform, considering everything that happened this year?
Right, so the IPO market was really volatile this year. However, overall, I should start with this data from Bloomberg Terminal IPO Go function. If you exclude SPACs, all companies that went public this year delivered 19.6% gain, outperforming the S&P 500, which is already pretty impressive. So going back to your question about crypto, of course, it was a huge vibe, right, positive vibe around crypto stocks. First, when we saw that Circle went public, the stock surged by almost 300% during the first few days of trading. Then we had this crypto market volatility, and not every crypto story was successful. For example, look at Gemini. The stock jumped during the first trading session, but then fell below the IPO price. So it was really volatile. So people are not buying just all crypto stocks. They are being selective.
What about the decline in volatility? Because we are at our lowest closes basically for the year, which is kind of insane. I mean, we're below 14. Is that affecting positioning?
Yeah, so it is affecting actually both.
All right, guys, it's been a very slow, dreary day here.
And the IPO
Got a little
market.
bit of something
so first
earlier.
Of all, when we look at positioning
That's
across
fine.
the so-called
But we
systematic
keep just,
funds, they usually follow the stock market direction.
you know, just hanging around the VWAP, not really doing nothing. So, I mean, we're at 308, 306, whatever.
That the VIX is moving lower.
I think that's going to be, you know, I don't really see anything really happening from
across
here.
U.S. stocks. So this is a very good indicator for potential like gains
we'll
for the
just
U.S.
we'll
stock
keep an
market.
eye on it.
And then on the IPO
We got maybe
side,
20 minutes if,
VIX,
you know,
when
something
the
really
VIX
good
is
comes up and volume
trading
comes
and
in,
or
maybe,
above
but
20,
it's looking like we're just
it is a
done
very
for the
bad
day. Enjoy
signal
the
for
weekend.
IPOs. This is
But
what
we'll
we
take
saw
a look.
this
We'll
year
keep
because
watching.
there was so much volatility. Now the VIX is trading at one of the lowest level, if not the lowest level this year. It means that companies are getting more comfortable and we may see more listings ahead.
And our thanks to Bloomberg's Natalia Kenijevic. She covers everything from equities to IPOs. She breaks a lot of news. Follow her on the Bloomberg terminal. Sticking with markets, joining us now is Kathy Entwistle. She's private wealth advisor at Morgan Stanley. Kathy, thank you so much for joining us. We have a lot to talk about, but first let's start with equities. Your overweight U.S. stocks. Why now favor small and mid caps over large caps?
Absolutely. Well, first of all, the S&P has had quite a run. We're expecting it to hit about 7,800 by year end. And while the large caps have had their run, the leadership's broadening. We think that small and mid cap stocks are going to take the lead now, and it's going to be driven by improved earnings breadth and operating leverage, and just heavily favoring U.S. stocks over any global peers for the coming year.
We started the year expecting around a 12% S&P earnings growth. Then estimates fell, and now we're right back to where we started. Does that signal real resilience or more complacency?
I think it's real resilience. There's a lot going on. There's a lot of reasons why the market might not do well, but overall, we're starting to see, corporations pivot from the soft landing, and now it's into the strong cycle. We're hearing less and less of earnings guidance being downgraded or reduced, and more about optimism going forward into 2026.
So what are the main concerns your clients have? What have they been calling you about over the last month to 2 months, Kathy? Because there were a lot of concerns in this market and a lot of volatility for a time.
Yeah, there was a lot of volatility for a time, and I think there have been concerns over this year with a lot of economics and policy, and we had a big dip way back. I think that was in early April, and from that point, we've done very well in the markets, and just keeping clients positioned, keeping them focused on their long-term goals, and matching up their portfolio to what those goals are. So if you look out longer, you want to be invested in the markets, you want to be in equities. A lot of times when people pull their money out of the markets, they end up hurting themselves. So our job is to help them have that long-term view and invest in the right areas of the market at that time period.
So when they came to you and said, look, I'm up X 100% on 3 or 4 names, you've got to get me out of these names, I want to hold on to those gains, were you advocating for rotation at all? Do you think there'll be more rotation next year?
Yeah, it's tough when it's in a taxable account, right? Because the cap gains tax can be very significant. So we want to think about how to thoughtfully bring them or reduce their exposure. So we will take some of the bigger names or the bigger profits off the table during the year, and we have done that. We've also used other ways to reduce that like concentrated position concept. But we do want them to still continue to invest in these types of companies that have high growth. They're adopting to AI. They're creating a lot of value, and it makes sense to stay invested. It's just maybe trying to keep away from an overly concentrated position with just 4, 5, 6, or 7 stocks, and to reduce some of those and then move forward into the year 2026 with new holdings as well.
Pivoting out of equities, why underweight cash in a rising rate environment with a high opportunity?
Well, first of all, in a rising rate environment, I think that we're actually going to have a lowering of rates. We've seen the Fed cut the last, in December, we're expecting another cut in January and April. And the cash positions have gotten, and they're getting paid less. Clients are getting paid less for their cash positions than they were last year. So I think this is just the beginning, and we do want clients to move their money into longer term or even mid-duration investments, fixed income versus short term. They are going to start losing some of the return they've gotten very used to over the last 2 years.
And you like duration in the first half of 2026. What makes the front end rates attractive?
I would say just in terms of the duration that we like is like the belly of the curve, right? It's more of the medium or intermediate side of it. And it's because we don't want to go out so long that we have to worry about changes coming quicker than we expect, but we want to go out long enough to have our clients rewarded and paid for the money that they're putting into the markets.
In terms of alternative investments, Kathy, it looks like you're saying underweight generally, but if you want to overweight some in there, you should overweight real assets and commodities. Which commodities, given that we've seen, 150% spike in silver, gold up 70%?
Yeah, we still have a slight overweight on real assets and commodities, specifically gold and energy. And that's basically because they're acting as a hedge against this lingering, sticky inflation concept. We do think that we can have a little bit of a kickback with inflation at the beginning of the year, but we don't want our clients to panic because we think this is just a temporary rise that we'll see again, and that will work its way through as well. So it's just different ways to help modify and temper what's going on in the markets with the client's portfolio by using some of these tools.
Kathy, as we approach year end, how much have you seen tax loss harvesting? Has it been, more than usual this year, given that there were gains in other parts of the market potentially for people?
Yeah, we've been doing a lot of tax loss harvesting. I spend a lot of time working with that on our clients' behalf, because we do believe that one of the best things that we can do for our clients is to add alpha to the portfolio. And by mitigating taxes, that's a great way to add alpha. So yes, and there are a lot of, in order to take, to minimize that tax impact, we've got to find losses hidden inside there with the gains. So that's about the work that we're doing right now and finishing up for the year.
And we have just under 30 seconds. Why overweight securitized credit over corporate bonds?
Corporate bonds are a little bit rich right now, and the opportunity in securitized credit is a little bit more interesting. So from that standpoint, we think that's a better trade for the clients.
All right, Kathy, thank you so much. That is Kathy Entwistle, private wealth advisor at Morgan Stanley. And it really is fascinating, isn't it, Isabel, to look at the market from the perspective of somebody wealthy who has their money with a private wealth advisor, as opposed to a trader or, a hedge fund investor for the longer term, or even, a private equity investor.
Exactly, because they have a different time horizon and they don't really want to go in and out of a trade. They want to preserve their capital for long-term wealth, maybe to pass it on to their kids. So it's all about appreciation of assets with just maybe 10, 20, 30-year time horizon, which is very different from day traders.
Talk about not looking at your account. I mean, if you had those gains and you were being told that you shouldn't sell more than a few percentage points of them, I think it would be very hard. Luckily, I don't have that problem.
Same here. And if you have a huge capital, then, 2% rise in that would be already huge,
All right. Well, coming up, an escalating battle for Warner Brothers. Talk about extracting value. David Zaslav is on the brink of doing that right now. Alicia Reese of Wedbush Securities is going to join us next. I'm Bonnie Quinn alongside Isabel Lee, and this is Bloomberg Markets.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
In case you missed it on Balance of Power.
Let's play a game. Who's your favorite recording artist?
Kiss.
No, come on. Somebody from the past,
What can
present,
we go
or
with
future.
it? All right, Jimi Hendrix.
Jimi Hendrix has never in his entire career or now ever gotten paid a single penny when his music is played on AM and FM radio. The stunning fact is that the Russians and some other countries actually do pay performing artists on radio, and Americans do not. And this has got to change and should change. No matter who you hear on AM and FM radio, they're getting 0 pennies for the airplay. The new artists, every penny counts. And the fact that they can be played on radio and not even make 1 penny for their performance is criminal.
Don't miss Balance of Power live every weekday.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. This is Bloomberg Markets. I'm Vonnie Quinn alongside Isabel Lee, and it is time now to look at media and specifically the Warner Brothers deal in the making. Shares of Warner Brothers down about 1.4% now, slipping after a report Paramount Skydance could walk away from its bid and instead litigate against the company's board. But is it really going to? Is David Ellison really going to give up like that? Bloomberg's Chris Palmieri joins us now. Chris, it seems unlikely that Ellison will go without some kind of a fight, or at least an answer, right?
For sure, yeah. The idea of the litigation is something they've been hinting at for a while, even before this latest hostile offer. They had the law firm Quinn Emanuel, big litigators, sent a letter saying they're really unhappy with how this Warner Brothers sale process is conducted. But we're told that that's an arrow in the quiver, but nothing is happening imminently along the litigation front. In fact, if you look at what happened earlier this week when they made all those concessions to Warner Brothers and they had Larry Ellison backstop $40 billion, sort of built into that $40 billion is money that they could pay to Warner Brothers if they cancel the Netflix deal. There's a breakup fee that's sort of built into that backstop from Larry Ellison. So all indications are they're proceeding with this deal.
There has been a lot of ping pong back and forth when it comes to this deal. How would you rate it in comparison to other takeover bids? Is it more than usual? Is this a lot of surprises more than what's typical?
I would say more than typical. It's got all the hallmarks of a classic takeover fight, and it's got all the Hollywood drama and aspect to it as well. So this is colorful personalities, colorful properties, and colorful bidding, I'd say.
So we knew that Zaslav wanted more money. We knew that was something from the very, very beginning, and John Malone, of course, too. We have Paramount $30 a share, Netflix $27.75, but all in, it's probably roughly about the same in terms of pricing. What will it go up to, do you think, Chris?
Well, it seems he's got Paramount has to add at least another $1 to their offer to cover that $2.8 billion breakup fee. Then they've got to offer something else to make it more attractive for Warner Brothers to break up and move with them. So, another $1, too. So you're talking $32, $33 a share. That's sort of the direction things would have to head.
Thank you so much, Bloomberg's Chris Palmieri. And sticking with the bidding wars for Warner Brothers, let's bring in Alicia Reese. She's Senior Vice President of Equity Research at Wedbush Securities. Thank you so much for joining us, Alicia. So Netflix calls this deal transformative, but is it really worth the regulatory headache?
There will certainly be a lot of regulatory headache for Netflix. They have quite a long process ahead of them, and it's no small feat. But if you add a huge studio, over 100 years old, Netflix is then in contention with a lot of the other studios that it has been trying to compete with over the years. It's long vied for the likes of Warner Brothers level content. It's got really amazing content, and Netflix wants to boost that. It's doing so on its own with, adding live content over the fourth quarter, doing significantly more merchandising around the likes of of Stranger Things and doing more marketing around that, significantly better than it has in the past. But, it's still a newish company. It's only been producing content for just over 10 years, whereas, the likes of all these studios, Disney, Warner Brothers, Paramount, have been around over 100.
You said this wasn't a clear shot. What's the single best reason that this deal could get blocked?
Yeah, because I think Netflix is relying on the regulators looking at viewership overall of TV content. And they're putting YouTube and regular TV, not just streaming viewership, in that same bucket. Whereas I don't know that they will only use that bucket. And on the buying side, the content buying side, it's a lot trickier because you don't have YouTube in there. YouTube pays for user-generated content by and large. And so you have, studios buying content from content makers in Hollywood. They want a lot less of a monopoly on that side.
If Netflix does win out, that leaves a little part of the business to the side, and assuming it gets through all the regulatory approvals and so on and it's all done, then what happens to that business?
Discovery Global, there has been a, quote unquote company C who's been interested in that piece of the business. Paramount, Skydance might be interested in that piece because they clearly have shown interest. They have only placed a value of about, $2.75 per share on that piece of the business. So if Warner Brothers thinks they can get more than that, then they'll certainly still go with Netflix's deal because then combined they can get more for that. It depends on what this company C is bidding for that piece of the business.
What will swing it? I mean, for David Zaslav, he's not the only one. Obviously, there's a whole board and then there are the shareholders to consider. But Zaslav does seem to have a shopping list of what he wants, and one of them is a higher price, dollar value. What else does he want?
Well, for a long time, there was, for over a year, this whole discussion was around whether or not, which shares they wanted to go with. There was a varying and increasing over time percentage of cash being offered for the shares, but then, putting it next to Paramount Skydance was a little tricky because giving shareholders the most value was not necessarily tied to a stock that was less certain. Tying the deal to Netflix stock is certainly more certain. And so I think he was just looking at overall shareholder value. If it's an all cash bid and they're going directly to shareholders, that's a different scenario. And so shareholders have a big decision to make before early January.
And if this drags on for 12 months, 18 months, what do you think could happen to Netflix stocks in the meantime?
Well, Netflix is still doing significant work with its own, shares, or with its own business. It doesn't, it doesn't need this Warner Brothers acquisition to thrive. It would certainly accelerate that thriving, and it will accelerate its pursuit of, theatrical entertainment. It's kind of been dipping its toes a little bit, and I think there are a lot of concerns around its ability to do so, or its commitment to do so. But recently Netflix has made those overtures. But look, they have the Crawford Alvarez fight was 41 million. Jake Paul fight was 33 million viewers. The Christmas NFL games, 65 million viewers. You have Netflix, the Stranger Things. Just in the fourth quarter, you're bringing a lot of viewers onto the platform that may not have been viewers throughout the year. And if you can keep them there with more content in January, that's real, profitable viewership that I don't think is, that will probably sway shareholders regardless of the deal.
We have Hollywood unions already pushing back on shorter theatrical windows. Do you think that opposition could derail this deal?
It will certainly create some challenges. I don't know if it'll derail it altogether. I do think Netflix has already come out to, kind of curtail some of its talk about shortening those windows. I think it will be committed. And I think also because you have these commitments that they have to keep until 2029, in large part, they'll see and experience the profitability of that exclusive theatrical window and probably will change their mind. But I think in the meantime, they're going to be very vocal about their commitment to an exclusive theatrical window with that studio content.
Paramount does have a lesser credit rating, but it went to all sorts of trouble in the last few days to change contract language, to make, revocable trusts, irrevocable trusts, and so on. Will that have made a difference?
Yeah, to shareholders, sure. Having the financial backing of Larry Ellison was a huge sticking point for Zaslav. Maybe some people thought it was him being made co-CEO, but it doesn't seem that that's his priority. It's the absolute certainty that the shareholders will have that this, deal will pay off for them. And, having this as a revocable trust, irrevocable, in cash, that all matters to shareholders quite a bit, yes.
All right. Well, Alicia, thank you so much for all of your context. I have no doubt we're going to be speaking to you early in the new year and beyond that as well. That is Alicia Reese, Senior Vice President of Equity Research at Wedbush Securities. And it's fascinating, Isabel, because Netflix is only up less than 6% this year. Warner Brothers Discovery, though, up 175%.
Wow.
Isn't that insane?
That's a huge difference,
Most of it came in the last few weeks, right?
That's fair.
We started getting these bids that were getting upped and upped and upped. All right, well, we were going to continue Bloomberg Markets now. It's been a banner year, obviously, for the chip makers as well. Jay Goldberg of Seaport Research Partners is going to join us next to lay out what could power the group in 2026. And I believe he doesn't love NVIDIA, so that's going to be an interesting conversation. Do stay with us. I'm Bonnie Quinn, along with Isabel Lee, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure. Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/finds treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/finds treatment.
Bloomberg Markets, I'm Bonnie Quinn alongside Isabel Lee today. Well, ASML is Europe's most valuable company and one of the most important cogs in the global AI supply chain. Bloomberg's Tom McKenzie discusses how ASML is benefiting from the AI spending boom, the new technology set to drive growth in the AI era, and its approach to navigating rising tensions between the US and China. Take a listen.
ASML is the company that's at the very center of your phone, your laptop, and the AI revolution. And yet most people have never heard of it.
ASM Lithography, a 50-50 joint venture of Philips and ASM International.
ASML began life in 1984 in a leaky shed in Eindhoven in the Netherlands. 4 decades later, it's the only company on Earth capable of making the machines that print the tiniest circuits on the most advanced chips. ASML's early ascent was turbocharged by the likes of Intel, Texas Instruments and AMD deciding not to do everything in-house. And when it came to building commercially viable lithography systems, a multi-billion-dollar bet on an untested technology, that job ultimately went to the newly founded Dutch company. That bet eventually paid off. Today, ASML's crown jewel is the extreme ultraviolet lithography machine. Costing more than $300 million, they're the size of a double-decker bus, weigh as much as a Boeing 747, and according to some analysts, contain more than 100,000 parts. The EUV uses ultraviolet light to etch microscopic patterns onto silicon wafers, smaller than a virus, allowing chip makers to pack billions of transistors onto something the size of a fingernail. ASML sits at the heart of an intricate global chip supply chain. Today's top semiconductor firms, the likes of NVIDIA, AMD and Micron, design the chips. Their designs are sent to foundries like TSMC and Samsung, which manufacture the chips mostly in Asia. And for the most advanced semiconductors, those foundries depend almost entirely on EUV machines from ASML, all made in the Netherlands. The industry's great challenge is the same one it's faced for decades, squeezing more and more computing power into less and less space. That race is summed up in Moore's law, the idea that computing power doubles roughly every 2 years. With each leap forward getting more expensive and technically challenging, ASML will be crucial to keeping that prediction alive.
And our thanks to Bloomberg's Tom McKenzie. ASML helping to power a more than 50% gain in VanEck's widely followed SMH semiconductor ETF this year. For more on what's facing the chip makers in 2026, let's bring in Jay Goldberg. He is senior analyst at Seaport Research Partners and covers semiconductors and electronics. So Jay, what will be the dominant narrative, at least in the first quarter, before we start to get earnings in again?
I think this year is going to be all about AI. Right? It's just like last year. The AI story is still out there. There's still a lot of hopes built into that. There's a lot of the supply chain is depending on that. There's a lot of the economy that's being built around that. So it's going to remain an important story. And I think it's going to be a sort of put up or shut up kind of year for AI, at least in terms of the capital outlook. I think the markets are getting a little bit wary of the spend that's required. I think the technology still has a long way to go. There's a lot more roadmap in everybody's outlook, but at the same time, it's getting very expensive, and I think we're going to have to start seeing more gains, more return on that investment that's going in.
So how do these questions get resolved? I mean, is it on earnings calls? Do we see that investment return in earnings results already? Because it would seem to me that that should take a few quarters. No, it won't happen in just one quarter. And then all these other sort of problems that investors have been seeing with circular financing, the idea of having special purpose vehicles in order to keep the debt off the books and so on. How do they get resolved?
So I think the most important trend underneath all of this is what are we actually going to do with AI, right? There's going to be a lot of eyes on OpenAI with GPT-6 hopefully coming out this year. Does that really drive new advances? So what are we doing with AI? That's the biggest question. The other elements are going to be the normal things like earnings calls every quarter, and then financing as they get announced for some of these big data center builds. We have some big conferences coming up early in the year. There's the Consumer Electronics Show in January, and then there's NVIDIA's sort of annual event, GTC, coming up in March. Those will all be critical things that we're watching for how this is playing out. And last but not least, it's not just the chip makers, but it's also the hyperscalers, the big internet companies. They're going to announce their CapEx trends results for the year. Those will be important to keep an eye on what their outlook is for the next 12 months.
So is the broader chip cycle, in your opinion, peaking, bottoming, or still unfolding?
I think it's still broadening. For the most part, But semiconductors are cyclical, and it's been a long time since we've seen a downturn in sort of the big cycle for the biggest companies. And so I think that's on the horizon. It's hard to say if it's going to be this year or next year or further out. AI is still very strong. There's a lot of demand for it. But underneath all that demand is basically 7 companies who are spending all the money that are fueling all this. And I think their shareholders are going to start questioning that spend at some point in the next year.
How much of the current market is driven by inventory corrections versus genuine, real end demand?
Oh, I think the broad market for digital logic, so for GPUs and CPUs, that's much more of an underlying demand story. I think if you look at the analog sort of industrial automotive sectors, that's where the inventory cycle is playing out in different ways. But for the core sort of big headline things that most people talk about around AI, around NVIDIA and Broadcom, that's very much a demand story, and that appears strong for the moment.
Yeah, I want to ask you about NVIDIA because you are the sole analyst that we track that has a sell rating on NVIDIA. There are 76 buys, 5 holds, and you are the single sell, and your price target is 140, which is probably about 40% lower than where NVIDIA is trading at right now, above 190. Why the sell on NVIDIA when you're so, relatively positive elsewhere?
Right. I mean, to be clear, I believe in the long-term potential for AI. I think there's a good story there. I just think no technology as big as AI gets adopted in a straight line, and somewhere along the way we hit cycles and there's speed bumps. And I think NVIDIA is risking that. What I've seen over the last 6 months is NVIDIA is getting harder and harder for NVIDIA to sell its chips. They're having to discount. They're having to invest in some of their customers. They're having to do things like backstop demand at CoreWeave and companies like that. So they're sort of subsidizing things, discounting things that makes it look like it's getting more competitive. And at the same time, we have companies like Google with their TPU, with Broadcom's help, that are looking very competitive. NVIDIA just bought a competitor, Grok, for $20 billion apparently. And so if NVIDIA were as dominant as some people think it is, they wouldn't have to be working this hard. And it just feels like they're working harder, and it's getting harder and harder for them to eke out the incremental gains. And I think that speaks to, at some point, the mean reverting.
So if you were to pick some winners next year, would you move away from the NVIDIAs of the world and maybe towards, I don't know, neo cloud providers, or most of these Grok type companies are private anyway, so I guess you can't get involved there. But where would you want to get involved in AI next year?
I think next year, Broadcom is still interesting. Anybody who's gaining share against NVIDIA is at some point a Broadcom customer. A lot of these chips, like Google's TPU, that comes from Broadcom. Broadcom does a lot of work helping them to support that. Same thing with OpenAI. OpenAI looks to be working on a chip with Broadcom's help. So I think that's an interesting area. I'm starting to look at Intel. I mean, I still have a hold rating on it, so I'm not quite there yet, but it's interesting. They seem to be making progress on Intel Foundry, on their ability to make chips for other people. I think that's a story that many people have written off as a lost cause, but there's signs of life there. So I think that's one worth keeping an eye on. And then later in the year, I think AMD starts to look more attractive once we get through sort of some of the big headlines that we're going to hear in the first half. AMD's product portfolio for 2027 starts to look much more competitive versus NVIDIA and the others, and that comes into numbers later in the year.
Thank you very much, Jay Goldberg, Senior Analyst at Seaport Research Partners. He covers semiconductors and electronics. So one prominent tech figure had a hand in nearly all the business stories that shaped the sector this year. And nope, not Elon Musk, but Oracle co-founder and chairman Larry Ellison. Joining us to talk about that and more is Bloomberg's Dylan Sloan. So Dylan, thank you for joining us here in studio, one of the few people in the office after Christmas. Why has Oracle been on a hot streak recently? How involved has Ellison been?
Yeah, so this really started at the beginning of the year. You know, Ellison, in some ways, Oracle was a little bit slower to adopt the AI play. But early this year, in January, you saw Ellison at the White House standing alongside Sam Altman and Masa Son at SoftBank announcing Oracle's part in the $500 billion Stargate AI infrastructure plan. And that really kind of set the tone for the stock all year. It's been a really strong performer, inked a $300 billion deal to provide OpenAI with compute over the summer. And then when they disclosed the full extent of that in their Q3 earnings, we saw a massive gain. Ellison's net worth personally gained $89 billion in a single day in early September. That was by far the largest one-day gain we'd ever seen for the Bloomberg Billionaires Index. So that, as Oracle has kind of been increasingly become a part of that AI trade, its stock really boomed throughout the year. And of course, it has lost some of those gains since then. It's been a bit of an up and down ride, but Ellison's been a really big part of that.
Yeah, absolutely, but definitely not immune to the sell-off that we saw. And particularly, it beat an earnings season and then saw that same sell-off that other beat and raises companies saw as well. How much is he involved in the Warner Brothers bidding war, and is that taking him away from duties at Oracle?
Yeah, absolutely. He's got a lot of pots on the stove right now, Mr. Ellison. So, as you were discussing earlier, yeah, he's, both personally backstopped the equity portion of Paramount's recent hostile bid for Warner Brothers Discovery, but as we've seen from filings, he's really been personally involved through a lot of the bidding process, meeting personally with Warner Brothers executives. Of course, his relationship with the White House has also been kind of held up as potentially one positive for Paramount's side of this deal. So aside from just his commitments at Oracle, he's been very involved there. And then, of course, in some ways it feels like a lifetime ago, but back over the summer, he was quite involved as well and put up a big chunk of the equity for Skydance's acquisition of Paramount, of National Amusements, his son David spearheading that. So he sort of has this second life as a media mogul going on behind his day-to-day duties at Oracle, which have also been increasing. He's kind of stepped back into the fold at Oracle more than he has in the past. He's increased his number of direct reports this year. He's sort of overseeing the company's finances personally. And, at 81 years old, he's still very much involved in the day-to-day of the company.
Wow, 81. So what could 2026 look like for him? Because he is a defining tech titan now, but we know that, especially in this administration, he could be the favorite this minute and be the least favorite the next minute. What do you think next year will look like for him?
Yeah, it's in many ways, who knows? A lot is still up in the air. Of course, the Warner Brothers Discovery deal, at this point, it seems like the bidding process is somewhat open between Paramount and then, of course, Netflix's bid. There's also the TikTok deal, which he's involved with. Oracle as one of the consortium of parties that's been selected to take over part of the management for TikTok's U.S. operations. That deal is expected to close by late January, but the Chinese government still hasn't given full regulatory approval, so somewhat uncertain there. And then Oracle, who knows? I mean, the stock has been performing very well, but credit default swaps are trading at higher than they have recently, and there seems to be some concern that the amount of debt the company is taking on to support its AI ambitions do put it at a little bit of a risk. So no matter what, it's going to be an interesting year, and he's going to be one of the most important people to look at, so we'll continue to track.
Gotta ask you, Dylan, you've been spending the whole year talking about and writing about titans and billionaires and multi-billionaires, and what has been the most surprising or most interesting story or person to you this year?
Yeah, that's a great question. I mean, I think that I was talking about this with one of my colleagues earlier, but just it almost seems like me and my team working on the Bloomberg Billionaires Index and tracking these people every single day, it seems like we're kind of taking for granted these massive increases in wealth and just the level that inequality amongst some of these richest people that we're seeing has increased this year. I mean, we're talking about real paths for individuals to become trillionaires, looking at Ellison, looking at Elon Musk with his pay package that was recently approved. And even a few years ago, that's something that, would have seemed incredibly far-fetched to even be thinking about. But now we're really looking at a point where that is something that seems like a realistic possibility for some of these individuals in the tech world. So it's a story that we'll be following super closely both this year and into the future.
Trillionaires.
More trillionaires. That's just what we need. That was not on my Christmas wish list, but hey, bring it on, right? Dylan, thank you so much. Do check out his stories. Dylan Sloan, no E, S-L-O-A-N, on the Bloomberg and on Bloomberg.com. Coming up, we're going to reveal the best places for your money in 2026 amid tariff shifts. Nancy Tengler of Laffer Tengler Investments is going to join me and Isabel Lee. This is Bloomberg.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the 2 teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only 2 teams that was independent.
So now you have 2 soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
This is Bloomberg Markets. I'm Bonnie Quinn alongside Elizabeth. We were just talking about Elizabeth, but this is Isabel Lee, of course, of our cross-asset team, and she's joining us today. And we're going to talk now about Novo Nordisk because it's heading for its best weekly gain since September after winning approval for a first-of-a-kind GLP-1 pill as opposed to an injection. A big step for the Wegovy maker in what's become a hotly competitive area of the market. Joining us live now to unpack what's ahead in 2026 is Bloomberg's Madison Muller. So Madison, we were anticipating this. It was a nice sort of end-of-year present, I suppose, for Novo Nordisk. How long do they have to bring this to market before Eli Lilly tries to get theirs into customers' hands?
Yeah, definitely a nice year-end present for Novo and for many Americans who have been waiting for GLP-1 pills to reach the market. It's something that these drug makers have been talking about for a while, very highly anticipated, and Novo was expecting to get approval by the end of the year, and they're now saying that they are planning to launch the pill in January. So Americans might not have to wait that long, actually, to get their hands on this. And Eli Lilly actually has a pill as well that's expected to come out next year. Their CEO, Dave Ricks, has said that he's expecting around March for it to be approved. That timeline could be in flux, but that is what the company has put out as of this moment. So Novo has to work quickly because they only have, if the date is March, only a 3-month really advantage to get a head start on their rival.
That's pretty amazing that we may see both at the first half of next year. But how much are pricing and insurance affecting who can access these drugs? And how do you think customers will choose between the two when both are already out?
Yeah, that's a really important question because that is one of the things that the drug makers and a lot of people have said is a potential advantage of these forthcoming pills is that they are likely to be cheaper. The starting doses of the pills are going to be around $150 a month, and that's because of a deal that the drug makers reached with the Trump administration earlier this year. And so when you think about that in comparison to the shots, which have a list price of $1,000 a month, and even with the cash pay discounts that these drug makers are offering, are still a couple $100 a month, the pills will be potentially a much more affordable option for patients because insurance coverage for these shots is still not very widespread. It's pretty patchy. It's pretty dependent on your plan. And so we might see that's actually going to be an important thing to watch in the coming year is how insurance coverage and access changes for these medications.
Yeah, I was going to ask you that, Madison. Is it the insurance company that decides which injection/pill you can take? Do they not give patients the choice? How does it all work?
Yeah, I mean, in theory, it's supposed to be doctors that are making the decision, but oftentimes, insurance coverage does play a big role in which medications patients can get. Some plans might choose to cover one drug over another. We've actually seen that with these weight loss shots because the drug makers can offer bigger discounts to the PBMs. And so we saw that earlier this year, actually, with one plan deciding to not cover Eli Lilly's Zepbound anymore in favor of Wegovy. So a lot of patients who were on Zepbound then had to switch over to Wegovy. And even though the drugs are very similar, it's disruptive to patient care when they have to switch medications when something is working really well for them. So that is something that we've seen and that we may continue to see into 2026 is just the changing dynamics now that these pills are entering the equation and how insurance companies decide to cover them and go about this.
Thank you so much, Bloomberg's Madison Miller. She keeps an eye out on all of this and the intense race in the competition that is unfolding. Thank you very much. Our next guest is placing 2026 bets carefully across 4 key sectors: tech, discretionary, industrials, and financials. Joining us live is Nancy Tengler, CEO and CIO of Laffer Tengler Investments. I bug her a lot on the print side because she can talk individual stocks and everything and anything macro. So thank you so much for joining us, Nancy. We always love speaking with you. So we started the year expecting around a 12% S&P earnings growth, then estimates fell, and now we're right back to where we started. What do you think that signals to the broader market?
Isabel, thanks so much for having me and Happy New Year. Yes, I think what it's telling us is that earnings growth is robust and is likely to continue to be robust. We saw pretty strong guidance from managements in the last quarter. We saw, earnings beats that were in line with at about 2/3 of analysts' expectations. That's about normal. But what really struck me was the revenue beats. And that tells you as an investor that this isn't accounting getting us to earnings. This is revenue growth driving the future of the company. So I'm pretty optimistic if you add earnings growth to the benefits we should see in the first quarter from the One Big Beautiful Bill Act, unless we get another shutdown and tax refunds don't come to those who have earned them, which should be about an additional $150 billion in tax.
You like 6 core stocks for next year, including Tesla, and I know you're a big bull of that company, and CrowdStrike. What's the biggest risk to those high conviction names?
I think we might have lost Nancy's sound, but we will try and get that back for us and for you guys. And that Tesla call is pretty amazing because Tesla had dropped off quite significantly and now we're back almost at $500 again and price targets are increasing, Isabel.
I feel like with Tesla, you either have to be really fully convicted or you just don't like it because it's such a controversial stock. But then if you believe in it, there are a lot of cases to be made. I mean, Elon Musk is such a genius to the eyes of some. I mean, we talk about Tesla, there's SpaceX, which is soon to go public next year and what could be the biggest IPO. Bloomberg News reported that. And a lot of investors are really just excited about that. And they want to get a slice of SpaceX, but they just can't for now.
But it's fascinating because when the Trump administration pulled away from the idea of internal combustion engines going away and everybody buying electric vehicles, the stock did take a tumble. So it was being traded as a vehicle stock for at least a little part of the year. But generally, it doesn't get traded like a vehicle stock at all.
Yeah, that is a fair point. And then we know that in the middle of this year, I mean, Tesla, especially the vehicles, have been kind of controversial, especially when Elon Musk was very active with the government. I've seen with my own eyes stickers here in New York saying, I bought this before, Elon Musk was super active in the government. So that was really interesting.
And of course, the door handles. And I think we have Nancy Tengler back again. Nancy, would you drive in a Tesla knowing that you mightn't be able to get out if there was a crash and went on fire?
Well, that's a hard question, Vonnie. But yes, I've been in one. My son has one. I've driven it. They're amazing cars, and there will always be issues. My Ford F-150 gets a recall about once every 2 years. So I think what we know about Tesla, and I think I heard you all talking about this, is it's no longer an EV company alone. The EV is to Tesla what the iPhone is to Apple. It's a vehicle that gets you into the ecosystem. So we're really focused on robotics, obviously, FSD, and then the mega pack business, which is electric utility grade battery storage. So we like the company a lot. We don't like the valuation, but when you're in a transformational company, we saw this with Amazon decades ago, valuation matters less to investors than the vision.
Let's zoom out a little bit. You argue large caps can absorb tariffs through supply chain shifts. Is that an advantage that smaller companies simply don't have?
They've had a harder time for sure, Isabel, and I think that may or may not shift. We're waiting to hear what the Supreme Court has to say and how the administration will respond. But when you look at CEO confidence, what we're seeing is that tariffs had less of an impact on margins and less of an impact on the supply chain and how they're running their businesses than many of us on Wall Street expected. So now that they've been in place almost a year, I think we have something to measure against. And in that case, I think that becomes less of an issue than the geopolitical and economic environment. And I don't see a soft landing. I see no landing. And we've been in that position for quite some time.
Nancy, I was hoping to get your thoughts on ServiceNow because it was one of your stocks to buy for this year, and it's down 27%, but it's gone on a spree. But we're going to have to leave that for the next time we speak with you, which means you definitely have to come back in the new year. That is Nancy Tengler, CEO and CIO of Laffer Tengler Investments. And we just have 5 more trading minutes left in this very odd trading day. And the S&P 500 did actually, Isabel, go positive there for a second.
Yes, it did. And the session has been relatively uneventful, and investors really wondered whether stocks will be able to notch the Santa Claus rally. But it looks like we are getting there. So it's going to be a happy holidays for everyone.
Yeah, even if
stocks are green.
Yeah, even if we put in a negative day by a couple of points on the S&P, that doesn't mean that we have completely said RIP to the Santa Claus rally, because we have a few more days left for that. All right, coming up, we're going to break down all of today's action as markets inch closer to those closing bells. Not just stocks we're keeping an eye on, of course, but bonds as well, although there's very little movement there. There was good appetite for that auction on Wednesday, so it appears that all is well as we close out the year. Do stay with us. I'm Bonnie Quinn, along with Isabel Lee on Bloomberg Markets.
In case you missed it on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays. In case you missed it on Bloomberg Open Interest.
The kids, the millennials, they now all of a sudden have to pay back their student loans again.
Part of the millennial generation, when we also graduated, you were dealing with the aftermath of the financial crisis, and you also had this problem of finding jobs.
Weakness in the labor market is not just the young people, it's also my generation, the baby boomers. 67% of companies said, we're not thinking about hiring right now. That will change. This is a great time to be alive, I think.
Don't miss Open Interest, live weekdays.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
And welcome to Bloomberg Markets. I'm Bonnie Quinn.
And I'm Isabel Lee, and we're in the close.
We are in the close. You're hearing those closing bells on the floors of the NYSE and New York Stock Exchange. And we are down, but very, very fractionally, Isabel. Such a shame.
Yeah, we see the Dow Jones down by really just 4 basis points, S&P and NASDAQ. I know, it's red on the screen, Bonnie. We were really hoping for green.
I know. I think the market is teasing us because, honestly, there was a lot of green underneath the surface. So in terms of the S&P 500, we saw 267 names higher and just 231 lower. It's just that, you know, it was a huge mixture of things. So like Tesla, for example, was down 2.1%, but Broadcom was up 0.5%, Nvidia up 1%. A real mishmash of a day.
Real mismatch. And then across asset, we also saw subdued trading. I mean, it is December 26th, the day after Christmas, with just like who knows how many people on Wall Street. Most of my sources are off enjoying or skiing or in the beach.
Don't they know it's going to be snowing outside in New York? They can stay in New York.
Please, don't get me started.
The volume, of course, was basically, I mean, I wouldn't say a trickle, but it was pretty low. It was below 50% for the 30-day moving average, which is interesting because I wouldn't have thought that there would even be 50% in terms of trading, but I bet there was a lot of retail traders out there too.
Probably a lot of retail traders or people trying to window dress and, you know, fix their tax loss harvesting. I mean, it is a weird Christmas holiday because it's Thursday, you have fun, and then you come back on Friday to work, which is what we love to do.
Exactly, and hopefully not too many sore heads out there. But I'm looking at the VIX as well at 13.57 on this Friday. Don't forget, we do have a couple of more days before the end of even the year, so there's still time to do some window dressing. But let's now get to some other experts in the room. Joining us are Bloomberg's Alexandra Semenova and Natalia Konichevich. So Alex, take us through some of the day's biggest gainers.
Hey, Vani. So here's a stock that is not taking a break for the holidays. Of course, none other than NVIDIA, the world's largest publicly traded company. It closed the day up 1%. This is after the company agreed to a licensing deal with AI startup Grok. They paid for the right to use Grok's technology and will integrate its chip design into future products. Some of the logistics of this deal are quite interesting. Apparently, some of the executives are leaving to join NVIDIA to help with this effort, but at the same time, Grok will continue to operate as an independent company with a new CEO. Obviously, investors are liking this news. I also love reading the analyst reactions, and they're pretty positive. Bernstein says that the move appears strategic in nature as they leverage their increasingly powerful balance sheet, but it seems to be more of a grab for technology and human capital by NVIDIA rather than an outright purchase. And also, it's a little bit more palatable from an antitrust perspective. Then you also have Cantor Fitzgerald saying that this is both an offense and a defense for NVIDIA.
NVIDIA just really powered through the markets higher. And it's very interesting because a lot of folks have also been worried about the circular economy. I mean, investors, I feel, are getting jittery because they haven't been seeing the payout when it comes to all of this massive capital expenditure, right, Vonnie?
Yeah, exactly. I mean, it's really just been fascinating. And we just heard it earlier from Jay of Seaport Security saying they are going to put their foot down in the next quarter or two and want to see some of those results. So, Natalia, I believe you have some decliners for us?
Right. So let's start with Warner Brothers. So WBD is the ticker. The stock is down by almost 1.4%. It came after reports from the New York Post saying that Paramount Skydance could walk away from this 30 per share cash bid and instead litigate against the company's board for how it handled the process. So people inside Paramount Skydance are alleged that directors and management ignored their 6 all-cash offer for the company and favored Netflix's cash stock bid throughout the bidding process. But I believe for now we still have time, at least until late January, until investors make a decision. So, however, we may hear some more news even next week before the New Year's Eve.
What else are your gainers, Alex? So we'll ping pong gainers, losers, so it's not too pessimistic.
It's a good way to do it given kind of the mishmash of a day that we've had. Target is another company today that is rising, closing up 3.1%. This is after the Financial Times reported that an activist investor built up a stake in the big box retailer. Tom's Capital Investment Management made a significant investment in Target. I wish I could give you guys a number, but there are a few details disclosed at this time. The stock is up today, but it's down about 25% year to date, following a really difficult year in which the company lost market share and sales slumped. You guys had an analyst earlier on your show talk about how this higher-end consumer is leaving one of the more expensive retailers and going instead to the likes of Walmart.
Amazing. Yeah, I mean, some of these activists that get involved make a huge difference to the stock, and then some don't so much, Alex. I mean, is it the case that Tom's has a good record for activism, and might it really make a difference here with the board?
Yeah, it seems to be the case based on the positive reaction at this point. When you have, a double-digit decline for the year at a time when markets are up and some of its peers are up also in the retail segment, obviously investors are liking that it will get some help perhaps in decision making to improve the stock's performance.
Okay, and now, Natalia, you have one more loser.
Yes,
or decliner. Better foot.
Yes. Let's talk about the company we rarely talk actually during Bloomberg TV shows. It's called Brown-Forman. The ticker is BF/B. Okay, it's one of the biggest decliners today in the S&P 500. Shares are down by 2.7%. We don't have any specific news on the company, but there is a bigger trend. So this company manufactures all kind of alcoholic beverages, and there was an interesting research recently saying that Americans, believe it or not, are consuming less alcohol. So, for example, the latest data shows that 54% of Americans say that they drink alcohol versus 65% just in 2018. Wow. They don't have any specific reason, but some people suggest that people who are on GLP-1, they consume less alcohol, but also there is inflation. But as someone who has not been drinking alcohol for the past 3 years, I'm also kind of in that camp.
Yeah, it's really amazing. And I have heard that GLP-1s down your appetite for certain alcohols, but not for others as well. So it depends on if it's a clear liquid or not so clear of a liquid. Ladies, thank you so much. That's fascinating. We could go on all day because obviously behind each stock is an amazingly interesting story. But thank you to Alexandra Semenova and thank you to Natalia Kniatkevich. We're going to bring in now a third party. Joining us is Carol Schleif. She's Chief Market Strategist at BMO Private Wealth. So, Carol, we were just speaking with a Morgan Stanley Private Wealth person earlier on who said that really, it's the time of the year to calm your clients and keep them in the market, even if they've made huge gains for the most part, because, it's going to just get better from here. Would you agree?
Yeah, I definitely would. And I listened to that interview and agreed with much of it. It has been one of those years where the political headlines and the geopolitical headlines have folks really concerned. And so bringing their attention back to let's pull on the thread that has impact for the markets. And a lot of what's gone on this year has been very helpful, especially for stock markets. When you think through lessening regulation and trying to remove some of the roadblocks that have had companies stymied, if you will. Now, granted, that I understand the tariff and all of the hoo-ha on that early in the year, but still seeing through all of that and having the roadway clear. So keeping clients calm, reminding them that we're the only species that has a space between stimulus and response. So when we hear something concerning, we can stop and take a deep breath and reconsider where we're going.
You know, you don't just have to be an investor to need to be reminded of that. So I'm glad that you reminded us all of that today, Carol. Explain about tax loss harvesting and how much of it was done this year. Would it be more than usual, less than usual, about the same?
I think it was more than usual. Particularly, we were very active back in April when markets were coming down because we did not change our estimates, did not think we were headed into a recession when that we figured a lot of the news that was out there was early negotiating positions, and we kept clients really focused on the fundamentals, and the economic fundamentals continue to come through, particularly when you look at corporate earnings. And coming through, looking at the last quarter in particular, you had top line growth of over 8%, bottom line growth in aggregate of over 13%. And so when you look at where the indexes have come for the year, people are talking about the rich valuations, and they're full, but they're about where they were at the beginning of the year. And many tech stocks are cheaper than they were at the beginning of the year because earnings have been so strong. So keeping clients focused on that piece meant that we went in and were really active about doing some tax loss selling in the early part of the year, whether it's doubling up first and selling 31 days later or buying like securities. We were very active in that to try to book some of those losses to offset gains that we suspected would come later in the year.
So you're definitely calling for a strong year in 2026, and corporate earnings, to your point, is one of the biggest drivers of that optimism. Do you think the market is finally moving beyond the all AI mindset that we saw all year this year?
We certainly hope so. And, you know, notwithstanding the fact that we think overarchingly you'll end up in a reasonable place and the trajectory is there, it could be very bumpy getting there, especially because we really need to see this market broaden out sustainably. We've seen hints at it a couple times, and that handoff between the leadership of the Mag 7 and a broader leadership is important. One of the key themes that we'll be leaning into a lot in the new year is this Industrial Revolution 4.0, which means it's not just AI, but you've also got quantum, you've got robotics, you've got cloud, and a lot of things. People forget that the way these companies are spending on AI is because they're generating really big double-digit earnings growth from cloud and cybersecurity and lots of other businesses that they're in. And so getting people to focus on that broader story and understand that there's some sustainability there. It's what makes it very different than the late 90s period and why the fears of bubble are overblown.
Are there any downside catalysts that you're worried about next year, even though you're very optimistic that it will be a great year for 2026?
Yeah, I think watching the fixed income markets will be imperative. And it's also one of the other things that we want to watch is that a lot of the big spending that's gone on has come out of cash flow, but you're starting to see some things go on with creative debt financing. You're seeing some of the banks carve off some of their riskiest assets and put them in secure or in special vehicles or synthetic risk vehicles where they're transferring the risk off the balance sheet. And when Wall Street starts getting really creative in large amounts with what it's doing with that prior downturns have come, especially economic downturns, have had some sort of credit or leverage behind them. So it's one of the things we're watching. And who knows, there's always a fat tail risk that could come out of nowhere to throw things off.
That's for sure. Carol, I'm so curious. Clients that were bullish Bitcoin earlier in the year and that wanted to get in on it and were excited about all these new products that got, passed through the regulators and so on, have they cooled a little on Bitcoin now, or are they still as gung-ho?
I think clients, Bitcoin is still early in the process. People are trying to figure out what it is, what role it might play in a portfolio. Is it a store of value, which is questionable. In the beginning of the year, people were saying that it was like gold, where you were going to go if you were concerned about geopolitical risk, but then gold and cryptocurrencies diverged, if you will, later in the year. The Genius Act that was passed that basically put a framework for stablecoin. Stablecoins are a transaction. They're not necessarily a store of value per se. They're a transaction currency, depending on how they're deployed. So people are still trying to figure it out. And I think it's really important for us to remember, too, that younger generations are connecting with the markets through cryptocurrencies as their first entree. And
not just that, Carol, but younger generations have made a lot of money on Bitcoin if they were smart, and so they might be in need of services like yours. Our thanks to you and for everything this year as well. Carol Schleif, Chief Market Strategist at BMO Private Wealth, and Happy New Year to you. All right, let's take a look at tech in general now. Broad picture tech, what's coming up in 2026. We are going to speak to Dan Ives of Wedbush Securities. That's next. Stay with us. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities. It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at midnight Eastern Time, only on Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is Bloomberg Markets. I'm Vonnie Quinn alongside Isabel Lee today, and welcome. The markets have closed on this 26th of December, very fractionally lower for the S&P 500, just 2 little points. The Nasdaq 100 down 11 points, not even 0.1%.
We really did see the markets waver. It almost teased us because we saw it green, and then when the markets closed, it was red across the board. But still, hopefully we'll get the Tana rally.
That VIX at 1360, I don't know, man. 2025 marking a big year for M&A, though, that I do know, with deal values expected to hit $4.8 trillion, according to consulting firm Bain, and, of course, Deal go on the Bloomberg. That's up 36% from the year prior, with executives expecting the momentum to carry into the new year. Let's bring in someone who's been following it all, Bloomberg's Nina Trentman, who covers the weekly newsletter CFO Briefing and comes on with me once a month at 5 a.m. in the morning on Bloomberg Brief. So, Nina, thank you. Nina, why, with such momentum, should be expected to continue? Are the deals not all done at this point?
Yeah, I think that's a fair point. At least when we're hearing, when we're talking to CFOs, when we're talking to advisors, they're saying to us that actually what we've seen in recent weeks, so in the past 2-3 months, is something that should continue in the coming year, driven by, for example, companies' need for AI investments. So looking to add on this important technology to their businesses, as well as the softer regulatory stance here in the US with regards to deal making. We've seen less deals challenged by the FTC FTC and DOJ, plus also the prospect of lower financing costs. So there's I think a range of factors that could drive deal making. Of course, it's always tricky at the end of the year to be talking about next year, as we all know, and advisors also like to talk their book. But I feel as if talking to CFOs, that's certainly the sense that I'm getting. There's more to come for next year.
And geopolitics, which some expected would hinder deal making this year, didn't really do much to deter that. Why do you think that was the case?
We certainly had this expectation going into this year that because of tariffs, because of Trump, because of trade, that basically there wouldn't be much in terms of cross-border deal making. We didn't necessarily see that. We did actually see some deals come through specifically because of geopolitics. So, for example, in France, Thales, Airbus, and Leonardo, they decided to merge their satellite businesses specifically with a reference of saying, hey, we need to be a stronger player against U.S. competitors. So it, of course, remains to be seen as to what happens next year. Trade is a bit of a wild card, but it hasn't necessarily been the derailer of deals that we expected it would.
Yeah, and I got the function wrong earlier. I said deal go. It's actually IPO go. You can get all your deals off that as well. And if you look at North America, you know, we think of all the, I don't know, the AI deals and the partnerships and the licensing agreements and so on. But there were so many others. Like you say, there was the railroad deal, there was Foot Locker and Dick's Sporting Goods and so on. Is it valuation that decides it now? Is it companies that are getting into trouble maybe?
It's a mixture of things. Of course, valuations have come down from their highs that we saw in 21 and in 22. They're up from last year, so it's not as if they've fallen from there. But valuation, of course, is a consideration. Plus, also this question that as to whether companies feel as if they're well positioned with what they have in terms of their portfolio. And I think there still companies are looking at the current environment and saying some of them are saying it's actually time to do deals. And I think even if we were to go into a slower environment next year, like some have been talking about a potential recession, we don't necessarily know if that's going to come or not. But what I'm hearing very much is also that might not stop deal making, because of course, if you're facing a weaker economy, it might be that some of your competitors might not be doing well anymore, and it's a good opportunity to buy.
Yeah.
And thank you so much, Nina Trentman. She is the one who covers all things CFO for our team. And don't forget to sign up for Bloomberg CFO Briefing. That's her weekly newsletter for and about CFOs, featuring top executives at global companies and covering key trends in corporate finance. Thank you so much again for joining us in studio, Nina. Speaking of deal making, tech is on a spending spree this year, with firms like ServiceNow spending billions of dollars on acquisitions or strategic investments. NVIDIA just agreed to a licensing deal with AI startup Grok, for instance. That's the news we broke today. Joining us now to discuss is Dan Ives. He's Global Head of Technology Research at Wedbush Securities. Okay, Dan, thank you so much for joining us on this Friday. Let's start with CrowdStrike. It had a strong run. What keeps you confident that there's still upside from here?
Yeah, I mean, look, the AI revolution's just starting. I mean, we've talked about it. It's only third inning of this game playing out. And I think when you look at cybersecurity, that's going to be front and center in terms of this team, especially as the workloads, the use cases that are playing out in the enterprise. CrowdStrike, you look at Palo Alto, Zscaler, and I think you're going to have a lot of acquisitions, a lot of M&A in cybersecurity. This speaks of the second, third, fourth derivatives playing out. It's only 10:30 p.m. in this AI party. Goes at 4 a.m.
I was just going to say, what time does it end? 4 a.m.? You're a lightweight, Dan. Go on as well.
No, I'll be asleep by 4 a.m. So you called CrowdStrike a second derivative AI winner, but isn't that a risk if AI budgets tighten?
I mean, there's a better chance of me playing in the NFL this weekend than AI budgets tightening. I mean, look, demand and supply is 12-1. So I just think investors are underestimating the scale and scope of this fourth industrial revolution. Look, I'm not going to say we're going to have white knuckle moments, but it speaks to our view. I believe tech stocks will be up 25% in 2026. And I think anytime you have these sell-offs, it creates the opportunities to own the golden winners, the NVIDIAs, the Microsofts, the Googles, the Palantirs, and others, of course, CrowdStrike, as this plays out.
So, Dan, what happens to the neo clouds? Because they've been trading very volatilely, and they're essentially a commodities business, right? So, I mean, will they all get acquired? Will they all merge? Will they all just get used the way they're supposed to be? How does it all work with them?
Yeah, look, I mean, CoreWeave, Nebius, those are in our AI 30, you know, in the IBS AI 30. I think one of the top acquisition candidates is going to be Nebius. I mean, to me, that's one, when I look at where this is all heading down for the hyperscalers, some of the big strategic acquisitions, that's probably front and center. And I think it's, look, there's a lot of volatility, but I'm just not one that views this as sort of a negative sort of swoon that's happening on some of these names. They are going to be a big player in the trillions of dollars being spent. And I think they're also going to be M&A candidates as they play out.
So let me ask you the question the other way around then. Who might be the losers? We were speaking earlier with Jay Goldberg from Seaport, who was saying that NVIDIA, sure, it's still a winner, but it's trading, you know, too richly at the moment. I mean, are there some companies out there that you would sell because maybe they've just gotten ahead of their skis?
Look, and NVIDIA is a cheap stock, right? I mean, the bear is in hibernation mode, right? I mean, they can't see AI in the spreadsheets. And I think NVIDIA, I'd argue 250, 275 is where we ultimately see that playing out. I think when you look, who's the back against the wall? It's like an Adobe. I mean, Adobe is one where huge prove me moment for them. I think Salesforce as well, but I think Salesforce is going to navigate this positively in terms of Benioff, and you can see some deals on that side. But I think software, right? That's front and center in terms of right now back against the wall that you're seeing. Adobe, Workday, probably good examples.
So if macro conditions worsen down, which will hold up better? AI infrastructure, enterprise software, or cybersecurity?
I think infrastructure and hyperscalers, right? And I think cybersecurity is going to be a defensive and offensive play. But look, I mean, you're big tech. You're going to look at CapEx next year. Like we've said, I mean, it's going to be up 40, 50%. And I think then you start to think about sovereigns, rest of the world. Remember, I mean, today, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. And that's why you're going to continue to see global money going toward U.S. big tech in terms of where this is playing, in terms of this fourth industrial revolution.
Dan, always lovely to speak with you. I want a gumball from one of those machines the next time you come into studio, so thank you
I'll bring it in.
Green one, please. Dan Ives, Global Head of Technology Research at Wedbush Securities with us, and always entertaining, but making some great points there as well. Yeah. You know, security companies are only going to grow in significance as everybody adopts AI and needs the security, obviously.
And there's just really more bullishness from here. It depends on where you look, but the likes of Dan Ives is really just optimistic that AI will still power the markets next year.
Yeah, and it's getting worse. The weather in New York, Kathy Hochul, the governor, has declared an emergency now for counties affected by the storm. She posted that on X. All right, let's turn to sport. We're not going to be outside this weekend playing potentially, but we might be inside. It's not just table tennis capturing attention. Paddle picking up steam with triple-digit growth just in the last 3 years. Reserve Paddle founder and CEO Wayne Boych is going to discuss the rise of racket sports next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
In case you missed it on Balance of Power.
Let's play a game. Who's your favorite recording artist?
Kiss.
No, come on. Somebody from the past,
Why can't
present,
we go
or
with
future.
it? All right, Jimi Hendrix.
Jimi Hendrix has never in his entire career or now ever gotten paid a single penny when his music is played on AM and FM radio. The stunning fact is that the Russians and some other countries actually do pay performing artists on radio, and Americans do not. And this has got to change and should change. No matter who you hear on AM and FM radio, they're getting 0 pennies for the airplay. The new artists, every penny counts. And the fact that they can be played on radio and not even make 1 penny for their performance is criminal.
Don't miss Balance of Power live every weekday.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
You are looking at New York City out there. It looks pretty benign in terms of weather conditions right now, but Governor Kathy Hochul has just declared a state of emergency for counties affected by this weekend's winter storm. So do be careful out there. Once again, the Governor, Kathy Hochul, declaring a state of emergency for counties affected by this weekend's winter storm. And we know that more than 1,600 flights across the U.S. have been cancelled as of this afternoon, JetBlue having the most cancellations, striking at one of the busiest travel times of the year.
Stay safe out there. But turning back to markets, 1 year ago, Nike CEO Elliott Hill took the helm of the world's largest sportswear company with a one-time intern helping blunt a long-term sales slump. Earlier this year, Bloomberg TV's Romain Bostic sat down with the 3 key players in Hill's offensive strategy at the company's headquarters in Beaverton, Oregon. Take a listen.
In the heart of Western Oregon lies a 750,000 square foot plus complex. So secret, few are allowed past the lobby.
If you love sports and you love product, this is kind of Disneyland.
Hundreds of motion picture cameras surrounding an indoor soccer pitch, speed sensors encircling an Olympic racetrack, electronic pressure plates embedded in a basketball court, biometric hookups to assess a runner's gait and posture, a hermetically sealed room that mimics the brutal heat and humidity of a Tokyo summer. All told, more than 800 pieces of testing equipment under the roof of the LeBron James Innovation Center, home to the Nike Sport Research Lab. An evolution from the company's experimental kitchen counter roots and a nod to its future of putting the athlete first.
This is our Nike Sports Research Lab in our Innovation Center, and this is the home to dreamers, creators, makers, engineers, some incredible teammates of ours who are all dreaming about serving elite athlete problems.
Yeah, what Nike as a brand is founded on, really at the core of our history and heritage, is listening to the voice of the athlete, right? Sill's point, we're in this amazing building where we have dreamers building the future and work with not only elite athletes, but the everyday athlete to take those insights and understanding and build not only for the elite, what you've seen being here today, but then are able to translate those innovations through every price point.
Amy Montaigne is the new president of the Nike brand. Phil McCartney is the new chief innovation, design, and product officer, overseeing ideas across the company's 3 units, Nike, Jordan, and Converse. They are 2 of the key players in CEO Elliott Hill's full court press to reinvigorate growth following former CEO John Donahoe's reign. Under Donahoe, it was a tenure that saw annual sales begin to drop in 2024 as demand waned for the brand's lifestyle sneakers like the Nike Dunks, and as relationships with retail partners soured. Elliott Hill is now trying to plug the hole with a refocus on athletic performance.
We're going to obsess sports. I think that's been, since Elliott returned, that's been a key part of our charge as a leadership team. And we're already starting to see the fruits. You know, we spend a huge amount of time bringing athletes here. We text with Faith Kipyegon, Elliott Kipchoge, LeBron James. We bring them to our home and then we go to their homes. So the origination for ideas is always the athlete. That's at the core of everything we do. And then we start to think about how do we apply those insights broadly to the 8 billion people who we're trying to invite into sport every single day.
So when it does actually go to market, are you going to target it towards the athlete, or are you going to try to maybe just target it towards the casual wearer?
Everything that we do and the focus on performance is listening to the elite athlete and capturing that data and information to help lead this amazing innovation. So we will for sure be connecting this story exactly to our athletes, which or who helped give us those insights, who we tested with, and that will be how we determine how we tell that story going forward. So it's very much about the insights from the athletes, the data we captured, the innovation we're delivering, and helping communicate that to consumers all over the world.
The reason that we start with elite athletes is when we solve those discerning problems, those milliseconds, micro millimeters, we can create products that then translate down for athletes every day all over the world.
Speaking of the everyday athlete, I put on my running shoes and geared up for an afternoon under the microscope of some of Nike's best researchers for a head-to-toe consultation. I even got a glimpse into the retailer's future with Project Amplify, a footwear system with lightweight motors and rechargeable cuff batteries that aims to help you move faster with less effort. Nike's Chief Science Officer, Matt Nurse, providing some words of encouragement along the way.
So we have an expression, if you have a body, you're an athlete.
Yeah.
And a lot of what we learn from elite athletes does trickle down and help everybody, but a lot of what we learn from everyday athletes does trickle up. You know, there's plenty of opportunities where technology, we have to sort of burn the candle from both ends and figure out where the best opportunity is.
The ethos of the company, and particularly since Elliott has taken over, is put more a focus back on the athlete. I mean, what's the difference now between what you're doing in this building and say what Bowerman was doing, you know, decades ago and, you know, whatever shack he was working out of?
Honestly, today it's just a more modern, sophisticated incarnation of what Bill Bowerman was doing in his lab. You know, this notion of having an idea on how you might improve an athlete performance or protection, actually building it, you know, Bill Bowerman pouring into a waffle iron, modifying a shoe. That's what this building is designed to do, but allow more sports, more athletes, full speed, full motion, but we're solving the same problems, doing the same thing.
A little different this time around. Mounting pressure in the running space, under threat by competitors like On and Hoka.
Do you worry at all about some of the recent upstarts that have come into this space, particularly on the performance side, Hoka, On Running, Norda, etc.?
Well, we have 3 incredible brands here at the company. We have Converse, we have Jordan, and we have Nike. So I think a lot of the work that we're doing in this new multi-brand offense that we're in is making sure that we intentionally shape the 3 amazing brands that we have. That allows us to, at certain times, come together to go after an opportunity in the market, but also to be more specific about what each brand represents and the growth potential of each. I think when we think about that, I think it's true. It's fair to say that the distance between ourselves and our potential is a little bigger than the distance between ourselves and our competition.
And we look at innovation not just in product, like Phil's talked about, but how we tell our stories and how we deliver experiences in the marketplace for consumers. And when you think of some of maybe our latest, most innovative marketing concepts, I think back to the last Super Bowl, a male sport at a really important time around the world. And we told the story of So Win through our female athletes, right? We listened to their voice. We're deeply connected to where they were at that moment. And we're able to tell the story of the support of those athletes and what they are doing in the world of sport today. So I think that's one amazing example as we continue to innovate by listening to them where they are, where the world of sport is and sport culture, and then are able to deliver something like So Win.
Amy, I'll give you the last answer here, and this is really on what you want the Nike brand to be beyond what it already is today.
What I believe and want for the Nike brand is for us to always remember our roots and to honor our founder, to really come in every single day obsessed with serving the athlete, listening to their needs, not only meeting their expectations, but taking them somewhere new. And when we do that, there is all the opportunity in the world for our future.
Bloomberg TV's Romaine Bostick sitting down there with Nike's president and Nike Chief Innovation, Design and Product Officer. Well, racket sports in particular are back in the spotlight after Marty Supreme's splashy movie theatre debut. Pickleball and paddle, PADEL, are no strangers to celebrity enthusiasm, driving attention their way. Let's discuss the growth of the paddle market in particular now with Wayne Boich, founder and CEO of Reserve Paddle. So Wayne, I'm stunned. More than 25 million players worldwide now, and we were talking about courts in Miami, New York, Texas, California, but everywhere really. What are those statistics like now?
Well, it's been incredible. I think if you look at paddle as a whole, about 5 years ago, you had about 6,000 clubs, and now you have 24,000 clubs. You had 8-9 million players. Now it's up to 30 million players. You had a main tour that was generally focused with all their tournaments largely in Spain. Now, through Premier Paddle, which is the main tour in paddle, you have about 25 tournaments, and 80% of them are outside of Spain. When we opened up Reserve almost 3 years ago, there was probably 200 courts in the U.S. Now there's 750, 800 courts. And the U.S., and part of the reason I started up the company was because it really was largely a blank slate. And I thought to be able to help catapult a sport that I love so much and had really gotten into over the prior 10 years was just too big of an opportunity. I thought it could be too much fun to pass up. So we started Reserve, and then through Reserve, we created different verticals, including Reserve Cup, which is our pro level series, which is different from the tour, but very accretive to what's going on in paddle.
So this club platform Reserve sounds like so much fun. Give us some more details about how we could maybe get involved and what kind of money we're talking.
Well, so we opened our first club as Reserve in February 2023. So as I said, it's almost 3 years. And then we started to think about what verticals could be interesting and cool to, one, help bolster the value of Reserve, but also bring paddle to light in the U.S. In the right way. So we came up with Reserve Cup. We launched it in 24 with one tournament. It was in Miami. It's the best 16 players in the world. 3 days, so a more condensed event than the pro events. And it was really like a luxury event. You know, some people came because they love paddle. A lot of people came because they thought, hey, I just want to go to this event. It seems very cool. You know, there's a GA component. There's a, luxury box component. We service it with great food, with great acts, and the players, first and foremost, really enjoyed it. So this year we added a second event in Marbella, which was much bigger in scale in terms of seats. We had about 4,000 seats. It sold out every day. And this year we're going to do 2 or 3 events, in 26, we'll do 2 or 3 events, starting with Miami again, January 22nd through 24th. It'll be about 1,500 seats.
Yes.
And again, you get all walks of life coming. A lot of people come, for the kind of businessy component to it. With the people there, people kind of want to hang out with. And then a lot of people come just to watch great paddle in our community.
Are you going to keep it private, Wayne, or are you going to go public at some point?
That's a good question. It's a sport right now where there's a lot of capital chasing it. So, we get some interesting phone calls. And for me right now, it's, I'm enjoying building it, and we're having a good time with it. So right now we'll build out more clubs. We'll build out Reserve Cup. And with Reserve Cup, I'll tell you another point that's very important as it relates to paddle and what's going on. From 3 years ago when I started the business to today, the folks that are getting involved as partners in our tournaments, it's becoming very high level, and they're getting exposed to the sport. They're enjoying it. They want to get involved. At Reserve Cup, we have UBS, we have Hard Rock Bet, Aston Martin, Discovery Land Companies, Moncayo, Ocean Club in Puerto Rico, Playtomic, the largest software provider to the space. So things are moving very quickly. And as Reserve, we kind of want to stay focused, build out our clubs, build out our membership base. Our membership base is very core to us. And we think over time, between our clubs, our Reserve Cup events, our Pro-Am series that we're starting next year, because the folks that we have, they love to play, perhaps even more than they love to watch.
Yes.
And that's part of the reason I started the company. all ages, men and women.
And if you're in New York City, there's one on the Upper East Side at York Avenue. So we'll be looking forward to visiting that. Wayne, thank you so much and all the best with your future endeavors for paddle. It's the second year that we've spoken to you, so we're looking forward to getting more updates throughout 2026. That's Wayne Boych there of Reserve Paddle. Coming up, tariff pressure is not completely off the table for 26. We'll discuss how the industry is navigating the cross-currents with Donna Burston, the founder and CEO of Lafette Wine Company. This is Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burton in Florence, Italy, and this is Bloomberg.
You're watching Bloomberg Markets and listening to Bloomberg Markets on Bloomberg Radio and Television. I'm Vonnie Quinn alongside Isabel Lee. And if you were joining us, it means you made it to the Friday session. It was a quiet enough session. There was about 50% of the 30-day volume in terms of trading, but we only finished down very fractionally on the major averages. Now, let's speak with somebody about some of the geopolitical tensions out there and what's to come for 2026. Ukrainian President Volodymyr Zelensky, of course, expecting to meet with President Trump this Sunday, the latest effort to bring an end to Russia's 4-year invasion of that country. For more on all of this now, let's bring in Bloomberg Washington Deputy Bureau Chief Laura Davison. Laura, what can Zelensky tell President Trump in order to sway him in any way? Or is President Trump very firmly fixated on his 20-point plan?
So Trump wants to get a deal. He is less concerned about the specifics of what this deal entails here, though there is that 20-point plan that the U.S., Ukraine, and European allies have been working over the course of several weeks. Trump, in an interview both with the New York Post and Politico just earlier today, said he's hopeful that a deal will come through, but he also had some strong words for Zelensky, saying that no deal gets approved unless Trump personally signs off on it. So this, sets the stage for what could potentially be a little bit of a tense meeting going into Sunday. Of course, Zelensky wants to maintain as much of his territory as possible, whereas Trump is more concerned about, being able to herald a peace plan.
What about 2026? It will be the year the global economy really learns to live with American protectionism. Can you talk about how tariffs will just impact the overall market and how we will learn to grapple with that? President Trump lifted average tariffs to 14% from 2%, so that's a big leap. That's according to Bloomberg Intelligence.
Yeah, and the big thing that that everyone's watching is the Supreme Court decision that we expect will come at some point in the new year about those reciprocal tariffs. Those are those country-by-country tariffs that Trump put on April 2nd, rolled back, paused, and then has been, doling out throughout the course of the year. If those are ruled unconstitutional, that will really bring that average tariff rate down, though the White House has said that they're looking at other legal options to impose those tariffs. So we could yet again, for much of 2026, be in a lot of the limbo that we were in 2025 of, are these tariffs going to stay? Will they be repealed? Will they be on for the long haul? So that makes it very hard for companies to plan. The second thing, too, is it will be the midterms later in the year. And as affordability becomes the most singular political issue that voters are concerned about, it's possible that Trump looks at different sectors, companies, products to create carve-outs and exemptions for to keep prices down. So it's a really dynamic situation, and I can anticipate that we won't have a lot of certainty for months to come.
Thank you so much, Bloomberg Deputy Bureau Chief Laura Davidson, for that nice roundup on what's happening in D.C. And so we're sticking with tariffs. Pressures are not exactly off the table in 2026. And in many households, neither is wine, though we have seen global demand dip slightly into year-end. Joining us live to discuss the pressures and opportunities in the wine industry is Donnie Burston. He's the founder and CEO of Lafette Wine Company. Thank you so much for joining us, Donnie. This is probably a great topic to discuss on a Friday, especially with after Christmas on a December. My first question is, why are premium rosés over $20 growing while cheaper bottles are falling off? It doesn't sound really it sounds counterintuitive and isn't really what you would expect.
Well, what you're finding with brands like Lafette, those that have a real story, a real meaning, and a purpose, and that have great market penetration beyond just the shelf, are thriving. Consumers want brands with stories, and a lot of the rosé brands like ourselves, who are plus $20, we come with that. We're not just a white label. We're not just a brand that was created during the celebrity rush with rosé that's taken place over the last decade. So the authenticity is there. And what you also saw is with the tariffs and the rising grape prices is a shakeout of all of that fluff. So the ones that are standing now, like Lafette, are proven attractive brands for consumers in today's rosé world.
So which part of your business has been hit by tariff the most, and how are you absorbing that?
Yeah, it's definitely been the tariffs, the freight, the shipping costs when they arrive. What we've had to do is we've had to certainly reduce workforce. We just couldn't sustain. We tried over the years to maintain that. But what we've also done is decided to really focus on how we spend our dollars, which markets we're really focusing in on, and then going forward. So instead of going wide, we're going deeper in each market, and fewer events, but better events and better connections with consumers going forward.
Donnie, who is the typical rosé consumer right now, or is there a typical one?
I think in years past there were. I think a lot of brands ran after that sort of Real Housewives sort of scenario. But what we're seeing at Lafette is we're really opening up the umbrella and bringing everyone into the fold because of the way we go to market. Rosé should be fun. Wine should be fun. We remove all the stereotypes. What's in the bottle is table stakes. It's really about how you connect with the consumers. So we're meeting consumers where they are. That's everywhere from a pizza place to a $100 a plate dinner. We have to remove the formalities. We have to make wine fun again. And that's what we're doing here at Lafette.
And we keep hearing how younger people have dropped off the drinking bandwagon, if you like. Maybe they're doing something else for their pleasure. But I'm just curious, are you seeing that at Lafette?
I wouldn't say, yes, certainly you have a lot of young consumers who are not choosing to drink alcoholic beverages, but they're looking and they're consuming with intention. So if brands don't have a story, a lot of the large conglomerates will just create more and more line extensions with no purpose, no meaning. And young consumers want to know why. They want to know the how. They want to know the story. They want to know the person behind the brand. So for us, we're seeing a lot more traction with young consumers versus the industry overall.
With all the weight loss and sugar conscious people, that's why it's spread the rise of the likes of Novo Nordisk or Eli Lilly. Can low or no sugar wine really deliver on taste just yet?
So the good thing for us as being produced in France, and Aveline and some other brands have come out with their low sugar, low calorie. All of our wines are low calorie, low sugar. We've been doing this since day one because French law just doesn't allow for so many of the impurities that are put into the bottle in some of the other countries around the world. So we have been on that trend of healthy drinking, or better for you, as we like to say, since day one.
When you say better for you, what do they actually care most about? Is it quality, cost, sugar? I mean, maybe it's all of the above, but if you were to rank just one, what would it be?
It's all of the above. I think certainly the low to no sugar label counts. The calories in certain markets means more than others. But no one wants to drink fluff, right? So you have these non-alcoholic drinks that are pure sugar, and they're expensive. So they're the same price as alcoholic beverage with nothing to it. So if you're going to do it, you might as well get a little kick out of it at the same time.
How do you differentiate yourself, Donna? I mean, there are so many rosé companies out there and so many, red wine, white wine companies.
Yeah, it's really about the consumer, right? We're taking a very grassroots, ground level approach to connecting with our consumers. The days of spinning ads on Instagram and put a celebrity to get people to drink the wine is over. Also, the days of relying solely on ratings and what each som at any particular restaurant has to say are over. It's really about meeting the consumers where they are, showing them why you're different, telling our story, telling my story as a founder, and that's really been the thing that's really helped differentiate us. And more importantly, we're making wine fun. We don't care about things that a lot of other wine brands typically care about. Do you like it? If you like it, love it. You can drink it when, where, however you want. And that's really what has been our motto since day one, redefining who drinks wine, who drinks Lafette, when and where.
How and where are margins greatest? So if you sell, do you try to sell to restaurants? Do you try to sell to wholesalers, retailers? How does it work?
Well, in the United States, because of the three-tier system, our only customer really are the wholesalers. So whatever price we set with them, from there, it's really, out of our hands to what happens post the sale to the wholesaler. So our margin is really set when we sell to the wholesalers around the United States of America.
Where is your biggest market right now? And were you surprised by anything on where your product was a big hit?
Yeah, the United States is certainly our biggest market. We have some traction in countries like the UK and the Caribbean, but